is hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Wednesday to you both.
Hello.
Woo. Hola. How's everybody this morning?
Tired.
Are you?
Yeah.
Listen, I did one of the probably most trying things I've ever done in my entire life.
You got a pap smear?
I was going to say colonoscopy.
No, I had a
mammogram?
Mammogram.
Glass.
You knew the hand signal?
Let me tell you, when a real nice Polish lady with cold hands just comes in there.
Squashing.
Yeah.
Yeah. Between that and waxing, I don't think I could be...
You wouldn't last 5 minutes.
No, I wouldn't last. I wouldn't last a minute. No, I did something even worse than that, if you can believe it.
What's that?
I went to a village meeting.
Oh, like
Wow.
your town council. Like,
Yeah.
Let me guess. The street.
Correct. So they've been
The
working
street's taking too long.
3 years. They finished. Well, they finished my section. So
Oh,
they've
they
been
did?
working on. So I live in a subdivision, like basically one entrance in, one entrance out. They've been working on
Very
this.
hoity-toity.
They're working on
One
all
entrance
this.
in, one entrance out.
one gated entrance.
Gated, you know.
Well, I worked very hard when I was your age, so I can afford this
Yeah.
type. I stole
You see
that
him
line. It
sitting
was
on
great.
on the stoop, you know, watching the cars come through, calling the
You know what? I'm going to build a stoop. I miss a stoop. I do have a place to sit.
Yeah,
but
it doesn't look. It's too.
It's not. Yeah, my house is a
concealed,
little bit of an
it's in-
angle.
yeah.
to
Can
the
we
street.
get to where you become a municipal Karen?
Yes. Sure.
You go to your town council meeting.
Now Vinny had hockey at 7:40, so I got to pick him up around 9 o'clock.
Okay.
The meeting started at 7:30, so it worked out.
How'd you even find out about it? Facebook or do you?
I sent emails.
Oh, okay.
Like that.
Facebook watch group.
Okay.
Where they
Right.
they post if there's anything suspicious going on.
And neighborhood watch or
Neighborhood
whatever
watch.
it's called,
Right,
whatever.
the
it is.
Citizen app or whatever.
Yeah.
Yeah.
They're changing the entrance because they're building a subdivision next to me, which has been a like a paper.
Wasn't it? Oh, they're putting something there.
They're putting 60 homes. It's one of the last parcels in the neighborhood that's buildable
Okay.
for residential, and they wanted to build 80 homes, and they're down to 60 homes, so they'd be equivalent size to the homes that we have here. They were going to be much smaller before, so we petitioned against that. But they're
They
changing.
put the apartments there, and that
No apartments.
that nukes you. You go to
You go, girl.
You go to the
move.
meeting. If they're gonna put apartments there, you tell them no, you don't want.
So we have our own entrance, and they have an entrance. They want to merge the two entrances together.
Okay.
Well, that's going to make a lot more traffic, a lot more waiting, and everything else like that.
It's
So
only
we
16.
were up in
Oh, but it
arm,
was
and
only
we were
16.
ready.
Okay.
We were ready and
Did you have
up.
a gang, a gaggle of the neighborhood watch?
I was the youngest by far, which is tells you a
Really?
lot.
You're never the youngest anywhere.
Oh my god!
It was good. My problem was, like I said, I had to pick up Vinny at like 9 o'clock, and they had about 6 different things before that they had.
Different agenda items.
Agenda items
Right.
before they got to 11B.
Right, sure.
Which was
not 11B. Okay.
which was hours. So I only got to listen. I stood there. I sat there for an hour and 20 minutes, but I only got to listen to about 10 or 15 minutes.
Were you the representative speaker?
No. I wasn't anything like that. I was
You
a
were just-
conscientious observer.
Muscle. He was the muscle.
No, I was a conscientious observer. I was.
That's not how that phrase goes. Do you know how the vote went, or what the outcome is, or what's? Because you left early. so-
Well, the guy who's head of all of it wasn't going to be able to go that night, so he asked for representatives to go to fill in for him.
Okay.
The developer really hasn't changed anything since the very beginning. It's still up in the air, so it
okay.
hasn't been resolved yet. They need to go to Army Corps of Engineers or something to
Oh,
the
wow.
traffic flow and all
Okay.
this other BS. We just want our own individual entrance is all we want.
So there's still time to grow out your haircut into the Karen.
Yes.
So there's still time to get the chunky highlights and with it all fluffed up in the back.
Speaking of
I
chunky
want to speak to the manager.
Speaking of chunky highlights, those are almost gone for Vinny. You know, he got his hair
He bleached
buzzed
it.
over the summer
Oh, yeah.
and bleached.
Right.
It's just about out. Last night we got a haircut. It actually
Nice.
looks half decent. He looks normal now.
Yay! Okay.
Almost, yeah.
Well, for a Batista, he looked.
Yes, for a Batista.
Yeah, that's
for a Batista,
all subjective.
Yes. So I had a very busy night. I didn't do anything.
Yeah.
But I had a very busy night. Very busy night. It was.
Do you take a photo? Do you take a holiday photo, like a family holiday photo? I don't know. I'm just
Would
asking.
you like us to this year? We haven't in years. But if you'd like us to,
No, I'm just saying because his hair looks good, and you got the grandkids now and all
You should
the.
do like the JCPenney style.
That's fun.
Where
You
go-
don't remember the last one we did was
I
all
have
in
that pictures.
in pajamas. We were in like the red.
No.
Yes,
The pajama one
it was during
that
COVID.
decent. No, but we did like a JCPenney one
Oh, years ago.
when Vinny was like.
Well, it wasn't J.C. Penney, but yeah.
No, I know.
Yeah,
But it was like one of those styles where you have the,
Yes.
like gray background.
Everybody wears a white
It
T-shirt.
was a
whatever it
photo
was.
studio. It was
Right.
a
Yeah,
photo
it was like
studio.
a photo studio. Yeah. But I think Vinny was like 2.
Yeah, we haven't done it
That's
in
been
a
a while.
long.
See, I just gave you a wonderful idea for your whole family and to support a local business.
Let me give
support
you
a
their numbers.
photographer.
Let me give you their numbers. If you can organize this for you, I'll buy you dinner.
Okay. I am registered at Ulta.
You are forceful.
I'm easy. Yeah, I am registered at Ulta. I love that for you guys. You guys we should all be better at keeping memories.
Yeah.
While everyone's still around, like don't take it for granted.
Well, I have 15 boxes of photos in my garage.
Yeah.
When we used to get the photos when you would
Yeah,
take photos and
shouldn't
and not
store them
just
in
have-
the garage.
Not
but
just have the 20,000 photos. It's a heated garage. Don't worry.
Oh, okay.
20,000 photos on your phone.
Can I store my bike there?
Sure, you'll have to put it near Vinny's bike, but yeah.
I'm just
sure,
kidding. Now I have a
sure.
place for it,
Sure, you
but-
can. Yep.
Uh,
Anyway, so that was my night. While I watched the E-mini S&Ps that were basically unchanged most of the night, down about 8 or 9, up about 8 or 9. They're up 16 right now. They did have a good range, about 50 handles last night. I didn't see the tops and the bottoms. Those were well into my slumber.
yeah. Well, your boy Connor Bedard had another hat
Oh my
trick.
God, did you see
the
that?
Blackhawks are doing great.
Baby Bedard, 2 hat tricks already this year. Celebrini from the Sharks, 2 hat tricks.
Yeah.
I think they're the 2 youngest under 20-year-olds who've had.
Under 20.
I think they're
He's not
both-
even 20. Wow.
Yeah, I think
That's
they're.
crazy.
I think they're or 20 or under.
Whoa, wow.
I think so. How old is Bedard? You're supposed to do this
This might take a little while.
He's
20.
He's 20, right? 20
Thank
or
you.
under. I
That's
think in
great.
almost
Wow.
80 years, which is amazing. The special shot. Both of them have special shots, but they're special. He's unbelievable.
He's coming into his own, so good for him.
Yeah, now we got to build a team around him because he's not for long if we don't.
Well,
They have to throw the bag at him. You can't let it go.
He's a generational. He's much like you. We knew that when you were coming on that we had to throw the bag at you because there's no other way we can keep this show going. The show going. You're our baby Bedard. Baby Bedard, man. And Celebrini's amazing too. I mean, unbelievable.
is that his actual name?
Macklin Celebrini.
Oh, I thought it was just because he had like a fun dance and then they just called him Celebrini because he was.
No.
Okay.
It's from the Sharks.
No, that's a good last name.
Yeah. That's a hockey name.
Yeah.
It's a hockey name. They're all hockey names when they end up being amazing talents. The name starts to fit whatever sport they're playing. But yeah, good. Anyway, fun time, fun night. Yes.
Yeah, that's exciting. What'd you get up to, Nikki?
I had my 5-iron golf league.
Ooh,
We
league
also
night.
We also did a little industry night, a little NASDAQ hosted happy hour after work.
How'd you get that nod?
Oh, I know people.
Is it because Craig was here yesterday?
That's CME. That's different.
I know, but he knows all the exchange people, so.
I'm just hobnobbing. I'm trying to get.
Who'd you meet from the NASDAQ?
A couple peeps.
Did they give you? Did they
couple
tell
of
you
2,
what
3.
NVIDIA is gonna do?
Oh, I wish.
Wait, where was it? What bar was it at?
Bub City.
Oh, I like Bubsy. It's a barbecue
I mean,
place.
we'll
Yeah.
do something with the NASDAQ, get them involved in some of our
Shenanigans.
So we had that, and then it was golf league, which I'm still in.
Are you getting dialed in, or no? Still in shambles? Oh no!
I am a sad case.
Just a shell of your former self.
No, the former self was never very good either.
I thought you were getting it dialed in. I thought you were playing well.
That was just one game.
and valleys.
Yeah, right.
Peaks and
Yeah.
See, that's why
Right.
golf is too hard. Like,
Yeah, it's really-
you can love it, but it will never love you back.
Like I told you, I played 100 rounds one year. I traveled to Vegas to play, Florida to play, California to play. I played with strangers. I played with friends. I played with enemies. After you do that, if you don't get any better, which I never got any better, you quit. It's
it's hard because you fix one part of your game and then something else goes straight
Yes,
to
I became an
hell.
alcoholic.
Right, yeah.
I fixed that part
I
of
won't
it.
quit.
Yeah.
Yeah. You won't quit?
not a quit.
You won't play. Like I said, I played 100 games. Next year, I think I played, 15.
Here's the thing, though, that really irks me about the league. And it's in all leagues. There's just sandbaggers. I don't know
Oh,
how
everybody's handicap is,
I thought you had
I'm an
a system.
18.
I
They
thought
really
you
played to
got,
a 14 or
I thought-
12.
Yeah, it's all handicap adjusted, but there's just like,
People don't put their scores in. It's not.
well, and they have people fill in, like if somebody's out, like somebody can just play for them.
Yeah.
And
Yeah, but it's
No.
a computer. Like, you can't cheat the computer. Like, because it
No, but-
tracks all your shots and strokes.
But if you have some guy like me who's a Johnny, 20 handicap,
Mm-hmm.
and you have a stick come in that's, a scratch golfer.
That's a 5, and he's playing to a 15.
Yeah, and he's getting 15 strokes. Some of these guys were 29 under, which is like
Wow.
it's
This
not
is like
possible.
hole-in-one territory.
You have to be like a 30 handicap that shoots birdie the entire, one under each hole to get 29.
Well, give them my number because I like winners. What course did you play?
I forget.
Oh, Nikki.
I'm
It's
not-
virtual, right? You play.
Yeah, it's virtual.
I know, but it could be like a famous, like a.
I gotcha.
like a-
Yeah, I
Don't
don't,
make like you're going for a pap smear, like you said. Relax over there.
Yeah.
I don't know the course, but
Don't. You seem so defeated, Nikki. It's
Well,
just for.
Don't be
Don't
defeated.
get down on yourself.
yeah, it's sad because for bowling, I was the best bowler on the team. Now I'm the worst golfer on the team, so I don't like being at the bottom.
I know.
You're not a bottom, you're a
But
top.
you know what? I will say I am the most volatile because I have the highest handicap. So if I am kind of dialed in and
Right.
Yeah, you make a difference.
I get a couple pars in there, I'm getting a stroke or two a hole.
Sure. You could be a game changer.
Yeah.
Yeah.
So my score has the biggest, volatility. I'm that
Impact,
call
yeah.
option.
Okay.
That
Yeah.
long call in the group.
You got that tail risk.
Yeah, I got that gamma.
Yeah, that sweet gamma.
Complexity.
Okay.
Yeah.
That's too funny. Hey, well, we got a great show for you today. A lot of great content headed your way on a wonderful Wednesday. At the top of the 8 o'clock hour, we have a little options jive where direction meets time.
Ooh.
What?
Yeah, talk about delta and theta here
Oh.
on this one. So we've looked at, over the last couple sessions, we had a little bit on gamma. We had a little bit of IVR versus IV in SPX. And now we're kind of looking at delta and theta and that ratio and how things change throughout the duration of a trade as you get closer to expiration, yada, yada, yada.
Okay.
But it's a good one.
Okay. It's always good. Our research team only puts out premium content.
Best in the biz.
Also, because it is a wonderful Wednesday, it's Assume the Position Wednesday, so we got What's Your Assumption? That's headed your way at 8:40, where viewers write in with their trade ideas. We love viewer-submitted trades. We do them every Wednesday and Friday. But on Wednesday, these trades have a directional bias, and the bats are going to try to put on as many viewer-submitted trades as possible.
It'll be
So-
interesting. I like this segment, especially when the markets move the way it has, to see the sentiment of
In real time,
In
like-
real time, who's writing in, like what they're feeling. Are they
Yeah.
buying the dip? Are they selling a stock that's ripped? Are they going to a strategy or a plan that's less directional? I like hearing what the public has to say, which is pretty cool.
Yeah, and there's lots going on, and there's lots of news that's coming out, and
Today's
earnings
the-
and stuff, and
Today's the day we've all been waiting for.
This could be the end of the world. This
Yeah.
As we know it.
end of the global economy as we
immediate.
know it.
Yes.
They did a
But
song
before
like that once.
before that though, we got Jacob. We got the skinny
Yes.
on options
Yes.
math. Delta
He's a
Gamma,
fluffer to the end of the world.
Delta Gamma, Speed, and Taylor Do you mean Taylor Swift?
I don't think so, but maybe.
Why does it? Who's Taylor?
I don't know. We're gonna find out. You can find out too. Listen up.
Yeah, I don't know.
I'm reading that right. I know people.
Yeah, you are.
Okay,
Yeah,
right.
yeah,
I'm just saying, like, people are like, oh my God, Vanetta, any excuse that you have. But it literally says Taylor on my screen. I have more questions, but Jacob's going to be in at 9 o'clock, so stay tuned for that. And then we got live from the trade desk at around 9:20 with Quentin and Ryan in the house. Quentin counting down all the top trending tickers over at Tastytrade, and Mr. Ryan Grace breaking down stuff on the crypto side of things, and definitely some price
Some action
movement
there.
yeah.
For sure.
So that will be good. And it is Wednesday, so we also have Liz and Jenny live from the floor of the SIBO doing their own industry night. It's always electric when the ladies are live. Tune in for that, as I'm sure will be lots of activity, or maybe no activities. Everyone's just waiting for earnings to come out today. I don't know.
We'll see.
We'll see what happens. And yeah, that is our run of show for today. In the meantime and in between time, you guys want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story, breaking news,
Today's
coming across the wire. Leading
This
story,
just in.
top story, just in.
Today's headline.
This just in.
Breaking news.
All right, everybody. Today is a wonderful Wednesday. It's November the 19th. Get out of here. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Are there any earnings that might be important today?
Target this.
We had Target. It was down $1 TGT. And
Oh, that doesn't seem bad.
I looked early. It looks like it's down around $2.50 right now.
Okay.
On the other side, we had TJX, which also was up about $2. It's now up around $3.
Love Marshalls. I love
And then we had
Marshalls
Lowe's, which was up around $11. It looks like it's up $11 or $12. We got NVIDIA, the mother of all earnings for today, and we also have Palo Alto Network if you want to look at that.
Lowe's going the other way of home.
I was gonna say, it was like, what? I wonder what the cause of that was.
The charts look the same. I mean,
They do typically follow each other. They've both been on their butt. Home Depot made that huge new low after earnings. You would think Lowe's was lower at one point, down to 219, but it rallied up to 233 or so.
People always say rise for the national anthem of the Midwest. Save big money at Menards.
You know what? There's more
I love
Lowe's.
Menards. I love Menards.
I love Menards too. They got everything from like
But I
barbecue.
think they're private though. They must be.
They must be.
Yeah,
They got
I know.
barbecue sauce to 2x4s. I mean, they go.
They got
everywhere.
everything. Yeah.
But Harbor Freight, if you need tools,
Sure.
don't sleep on Harbor Freight and join their reward club or points.
Yeah.
He had such a great experience. He called me.
From the Harbor Freight.
Did I?
It was the first phone call I've had in
In years.
years. It's like, hey, you need any tools? I was like, no, because Home Depot had a great deal, and I actually called him out.
You did.
Hey,
You did.
You know, like if you need anything, they got like a buy one get one half off, like all the tools. Like if you need a drill,
Sure.
anything. He called me recently. He was like, "It's just at a Harbor Freight. You got one by you?" And I'm like,
It's amazing.
There's one where my parents live. I bought my torque wrench for that for my
Did you go there to
motorcycle.
get it?
Yeah, I went to Harbor Freight.
Amazing,
great.
amazing place. Amazing place. I don't know how they do it. Great. Harbor Freight.
Did you see there's a viral TikTok? This lady, her husband does her spray tans using a sprayer from Harbor Freight and an air compressor because he saw how much it was and he's like, you could do this at home. And so she buys the volume of tanning. Obviously, I don't know a lot about tanning,
sure.
but he puts it in there and from Harbor Freight and they go in the garage and she gets a spray tan from her husband. Save money.
Listen, whatever works, man. Whatever
Harbor
works.
Freight.
Whatever works.
She's like, it's $13, like whatever the nozzle attachment is.
that is an interesting thing because your girls are they
Little pale.
a little pale. They don't do well in the sun. They do a lot of spray tans, so you know
That's good. That's the healthier.
That could be your
option.
Christmas gift.
That could be. That
Do
could.
a family Christmas gift of a tanning salon.
And we can do like
Spray
the
tan.
Christmas card, the before and after.
Boom.
Yeah.
There
Like
you
when
go.
I took them on
You know, they're all
vacation. This is
orange.
before the vacation. This is after the vacation. They just went to the garage and got a spray tan.
It is quite the stark difference of like the Batistas coming out of the pool, like a little dark, and then you got the feral children with like under an umbrella, like oh no,
Hiding.
my big toe was out, and now I have like a burn on my toe.
It's true. It's true.
So,
That's funny.
okay.
Well, hey, the S&P 500 and the Dow extended their losing streaks to a fourth day yesterday. Our stocks
They're
headed.
Nates and Powells now, by the way.
I know,
You guys are still Batistas.
Yeah, nobody wants us.
Right, you didn't even hyphenate your
wants
name.
this
Or would you be
riff-raff.
willing to hyphenate your name if somebody would take you?
You know what? You know
Go
what?
ahead. Send that out.
Our stocks headed for a full 10% correction. Eagle-eyed, technical analysts say that the S&P is closed below its 50-day moving average on Monday for the first time since April, ending its longest such streak since 2007. Are we looking at a death cross? No, just
No, death cross. But
death cross.
This 50-day moving average.
Oh, it's all over, dude.
I know it's all over. I know.
Since you mentioned it, I have a person who we won't use his real name. We'll just use his fake name, Shark Jive. So people don't know who he is. He's been telling me about this 50-day moving average, how they've been bouncing off this 50-day moving
In
average.
184 trading sessions, the longest streak ever.
Yeah, that's what it's. Yeah. That's,
So on Monday, I said, ooh, we just broke the 48-day moving average before we went through the 50. And then we went through the 52-day moving average. Come on, let's
just talk about volatility
Yeah.
for today, and let's talk about the indices. If you're trading S&Ps, if you're trading NASDAQ, if whatever, because
yeah.
NVIDIA is a big component of, and
Yeah.
goes one stock, so goes, I forget what percentage of the S&P NVIDIA is now.
Big.
Yeah, but it's big. So what are we
It's
doing?
like Nikki's handicap for the golf. So goes NVIDIA, so goes the market. Volatility was actually down last night, even with the E-mini S&Ps, a little bit lower, but they're only down by 10 handles. And we're just coming off 22, a number that we haven't seen in weeks, maybe even months. So I don't put too much into that. Volatility down 40 cents so far today, still at 2160. Elevated. I don't look at that as like a big sign of anything capitulating here. Meaning like stopping the downside movement that we've had, because we're down around what, 5%, 4%
From the highs?
Yeah,
Somewhere around there.
pretty close.
Yeah.
Pretty close. It's been a significant move.
Yeah.
But Nvidia this morning was up around $2.
It's been chopping around 180 to 190.
And it too is off its highs from 210 to 180.
Yeah.
This is where it was the last time we were touching the 50-day moving average.
Something else for all you finance nerds. President Trump says he thinks he knows his choice for the next Fed chair. Vecchio dropped in the chat that the betting markets are all in on Hassett. I think that it's hilarious that people are betting on the next Fed chair. What are we doing? But President Trump hinted that he'd started interviewing candidates. He really wants Scott Bessent. He's like, I told this guy that I want him to do it. I like him, but he's not going to take the job. He's going to refuse. And Scott Bessent was like, I'm literally running the Treasury Department, sir. But he says, we also have some surprising names and we have some standard names. We may go the standard way. It's nice to every once in a while go politically correct, but I hope they go the non-standard way. Ladies and gentlemen, your next Fed chair. My name is Kid Rock. Yeah.
That would be.
And it's like, yes, ladies and gentlemen, Kid Rock. Yes, I'd like to talk about quantitative tightening.
I think it would be interesting if, anytime you get rid of the Fed chair, it's always uncertainty, like everything
Sure.
else, and it usually brings a lot
Not getting rid. They have terms.
Yes, they do have terms.
Right. So,
Yes,
yeah,
they do
I'm
have
not.
terms.
I'm just.
Yes, but
go
anytime
ahead.
you
There's
don't
a changing
re-up,
of the guard.
There will be an official firing. He will.
like the day before the term
Day
ends,
before.
or the day after
Press
the term
conference.
ends.
Everyone, today is the day that I fired Jerome Powell.
Right.
Like that. Like he will be. We will have that. Don't worry.
At midnight tonight, on the day that his term ends.
Take your box and get out, Jerome.
It'll be interesting to see what happens with bonds, because if Trump gets somebody who's friendly to his administration, he's been wanting interest rates to go lower,
Right.
which means bonds would go higher. It'd be
Right.
interesting to see what bonds do leading up into this, and it won't be you can't take advantage of it today. It'll be much more of a binary, shorter term.
That was my question
see.
for you guys.
Yep.
It's like, what does this news mean if
Maybe even notes would have a bigger impact. I don't know. We'll see.
Hey, yen staying bid and the dollar seems steady as investors look for safety from a global sell-off. The yen regained its footing and the U.S. dollar held steady against most of its biggest peers in early trading in Asia on Wednesday. Let's look at currencies.
I think the yen, I think Vecchio also put that out. It was its highest yield ever or something like
No,
that.
I think it's been like 30 years or something, but it's been a long time.
Yeah, like 3-point-something percent, I think. It's the highest it's been, I don't know, in 30 years.
Yeah.
So
But the last time
ever.
was that we had like kind of rate issues.
Yes.
It was the Japanese yen, the carry trade unwind.
Yen is down today, making new lows, which means the dollar would be stronger. To your point, the euro is basically unchanged, and the British pound is down small, given that little bit of movement to the dollar to the upside. And since you did the Canadian dollar yesterday, it's down small. Also.
I'm also short the euro Japanese yen pair, which it's been parabolic for a currency.
Yep.
And this has been in my currency trading, which is small as everybody makes.
In its infancy too, but you ramped up to a.
No, I have a lot of them.
No, I know, but you ramped up to a mini, didn't you? Didn't he tell you?
Yeah.
Yesterday?
Well, is it a mini? Yeah, it's
You
a
were
mini. 'Cause
Johnny.
I was micro.
You were micro. You were a micro.
Not like that, okay? Not like that, guy. No.
You were a micro, and now you're a mini.
Yeah.
Hey.
Yes, got it.
Politically, just of note, I just think that it's funny because just how petty the countries are being. China and Japan are kind of fighting, like the girls are fighting because of Taiwan, like just because of some things the prime minister said was like, hey, we would defend Taiwan, whatever, and so that made China mad. So China was like, you can't go to Japan, Chinese citizens. So then now all these people are canceling their vacations. But then now China has taken the step to ban Japanese seafood imports, which they had started like opening up again. So there's some other things happening. Just FYI for your currency trading or whatever. But I just think that it's funny.
I need euro down, yen up.
Yeah.
In a big way.
What about gold? Gold seems steady as investors weigh stock jitters and rate cut outlook. Bullion was trading at around $4,070 an ounce, having ended the previous session up around 0.6%. Let's talk gold. We'll throw silver in there too.
Gold, big day today, up 41, about $20 off of its high for the session, which is back to 41.21. That's near the high. Remember, it was just a week or so ago. Gold was 3,900. It was just a month or so. It was 4,400. So now it's 4,100. A big 1% move, which pales in comparison to silver's 2%, 2.5% move, up $1.30. Big move in silver, much closer to its highs of 54, further away from its lows of 46. It's just under 52. It was over 52 just a moment ago. So unlike Bitcoin, just made a little bit of a rally to 91 from the mid 80s. Gold and silver have really retraced a lot, and unlike the market, has really retraced a lot of its movement lower. So
gold silver ratio is at 80. It's even lower than yesterday when we put on our long gold position. So no, that's not a hey. That's a ouchie.
Yeah. Oh no! Oh, sorry, my bad.
Craig got 2 weeks for this trade.
That's true.
So next time he's on, then we have to come and collect from him if we lose money on this.
That's true.
Obviously, we make money on it. We did all the.
That was a good one though.
Yep.
Check that out if you haven't watched it. You don't trade a lot of futures. It was a good little primer on all the products.
Yep.
It was interesting to hear him explain, like this is how much this is worth. This is the difference between this. And then you're like, oh, those are big numbers. That makes sense.
Yeah.
Hey, I have something for you, Nikki. Another stock getting added to the government portfolio. Constellation. Constellation Energy got a $1 billion loan from the Department of Energy to restart 3 Mile Island. What could go wrong? Constellation unveiled plans last year to restart the plant through a power purchase agreement with Microsoft to support the tech company's data center demand.
This STC? STZ?
CEG.
Oh,
You're thinking of Constellation, the liquor company.
Brands, right.
Also
Thank
good.
you.
But,
CEG?
yeah, CEG. C
Not
is in
stereo,
cat.
one at a time, sorry.
C, cat.
Yeah.
E,
Oh, yes.
word. G is in.
Gotcha. Thank you.
Sorry.
Thank you
No,
very
yeah,
much.
it's hard
There
when
you
we're
go.
talking
There you go.
at the same
339 is where it closed. 345 on the bid, up around $6. It too is on the low, following the market. It has a correlation of nothing. It has a negative correlation, but it looks just like the market.
Yeah.
IV rank of 28.
It's energy, so it,
You don't remember 3 Mile Island. I remember 3 Mile Island.
I don't remember 3 Mile Island.
Yeah.
What year was that though?
Oh man.
I'll look it up.
I bet you.
I'll look it up.
bet you. It's got to be late 70s, early 80s.
March 28th, 1979.
Okay,
So
yeah.
46 years ago?
Yeah.
Ooh.
It was scary. I mean, like this we're talking about radioactive land and stuff.
Sure.
It was wild. But there we go. Everything old is new again.
Okay. There you go.
radioactive land.
Even the radioactive land, it's all good. They said it would take a gazillion years. It took 40. How many?
It's 46 years.
46 years is all it took, and then we can put condos up.
Bitcoin briefly fell below 90,000 to its lowest price since April. Bitcoin continues to waver as investors continue to shed their speculative technology holdings, with crypto being first among them. The October is obviously over.
Over it.
It's down-vember.
Yeah.
But what can we do in Bitcoin if there's anything to do in Bitcoin?
I mean, I bid.
After you're done crying.
I don't have any crypto.
Oh, see, look at you.
No laser.
What are you
eyes
waiting for?
anymore. Yeah, they're. It's true. I mean, it's been a big move, 30-40% from the highs.
Yeah.
Yeah.
It's kind of chopped around the 90-ish handle for the last week or so.
Didn't get caught. I mean, I have a little bit of product, yes, but I didn't get caught on this one. This was not one that, I mean, Bitcoin looked throughout this move very heavy. Even when the market would rally, gold would rally, Bitcoin couldn't get out of its own way. This is when I haven't get caught. I think it's time to start nibbling.
I think so too.
Okay.
It's the ultimate liquidity product.
Yep.
Like
Yep.
if you think the Fed is going to cut rates and Trump's going to put somebody that's going to be very friendly to,
Crypto and alternative thinking.
yeah, and just money printing and more, stimulus and all that stuff, it is a gauge of liquidity. So
Yep.
we'll see.
What's Coinbase doing?
It had an okay day yesterday. Reversed at the end of the day down to 261, 263 and change, up about $1 and change. But even the S&Ps are, up a quarter percentage point. About 20, just under 20. So everything's a little bit bid this morning.
Well, Bitcoin may be soft, but that doesn't seem to matter to crypto exchange Kraken, release the Kraken. They are now valued at $20 billion in their latest round of funding. That's a 33% increase in under 2 months. What are we doing? They raised $800 million in a dual tranche. There seems to be a disconnect.
Yeah.
Do what?
Well, obviously the down move in Bitcoin and the value of just
I was going to say.
just exploding 33% in 2 months seems crazy. So.
Sure. But the 20 billion is like light in terms of the headlines we've seen. Everything we've seen is
Trillion.
100, 200, 500. This seems kind
Well,
of.
they got Donnie Roberts now, so they're worth
Yeah,
$20 billion.
yeah, that's
so
true. That's right.
Miss Donnie Roberts comes in, they're like,
A lot of truth to that.
I have to give him a call here. Get in on some of this over here.
Get in on this. Hey, the crazy news yesterday after Cloudflare basically took down half of the internet. The ticker is NET. You can trade it. They were able to
missed that.
restore
We
services.
did miss it. You've mentioned
Here's
it
the
on
thing,
the
though. We're all about DeFi this, decentralize that, but now the entire internet, all these companies relying on one company, it's a pain point, and it continues to happen multiple times as companies look to, again, one source for their cybersecurity needs. Like, there's got to be a better
Single
solution.
point of
Well,
entry.
you had CrowdStrike, which was the other one that had this sort
Yeah.
of.
Sure.
So, but yeah, no, it's crazy. Yeah.
What's NET doing, NET?
It traded down to 190-ish yesterday. I think the lows were around 88 or something like that. It's 99 this morning.
Oh.
Up around $3.
190.
199. Sorry, 199. Yes.
Yeah.
Markets in there were not.
But we were looking to get long it.
We were looking to get
Markets
long.
were not. They were 40,
Option
50,
markets.
60 cents wide. Nobody
or
was
more.
trading them, and they were just not.
Yeah.
I literally couldn't do my job because what the platform we use for social relies on all the APIs from stuff like that. I couldn't make any posts. So I was like, well, I can go home.
You couldn't make any right because that
Everything though, like if Apple, could you imagine if Apple had some catastrophic tech issue that affected, their software?
Yeah.
And then all of a sudden nobody can make a phone call unless you're on an Android.
Well, but the bigger issue is that ChatGPT went down and no one knows how to read or write without it. So,
Yeah.
so no, I'm joking, but kind of not joking.
Like kind of how the movie Idiocracy starts.
Yeah.
Right.
This could be it.
Hey, the big headline, though, that everyone's waiting for, NVIDIA is set for a $320 billion price swing after earnings. That's if you're looking at the options and what the expected move is. NVIDIA options implied around a 7% move for the stock in either direction after they announced their quarterly results after the bell today. But again, so much, not only just the indices rely on NVIDIA, the AI sector relies on NVIDIA, the global economy relies on NVIDIA. What do we do?
Yeah, that's
Right.
equates to about $13 move in NVIDIA for earnings, maybe just a little bit less. NVIDIA has been moving with a big correlation to the market, although it doesn't.
It is the market.
It is the market. It's gone from 209 down to about 184. It's up about $3 this morning. IV rank of 36 is good, not phenomenal. But the markets are so deep and liquid in there, you can do whatever you want for earnings.
NVIDIA's market cap is $4.6 trillion.
Yeah, and a little bit more now. That's up a couple of bucks.
Sure.
So yeah. Yep. It doesn't end.
Well, good luck to all the players there. But speaking of the Mag 7, 2 more Mag 7 stocks are now in correction territory with 10% plus drops off their recent highs. Amazon and NVIDIA, this was like yesterday, have joined Tesla shares in correction territory. Meta is already in a bear market, reaching, I believe, like a 20%. What can you do, or what opportunities are left in the Mag 7?
Meta spooks me because I feel like it's now kind of in the timeout zone.
Yeah. Mommy and Daddy definitely put that in a timeout. It's facing the wall.
I think so, and I'm worried because I have long delta, but I'm worried if the market turns back around and goes back higher, it's still going to be like
Underperformer.
it's just going to be like just
Lost the bloom
dead
to the
stock.
rose.
Like a Netflix, Netflix was kind of in timeout zone for a little
Yeah,
while.
yeah.
Even Google, before it blasted off and doubled in like 6 months, it was dead.
Yeah.
It was like, so I'm worried that, Meta might be like a 6 months kind of just like a, ugh.
Well, NVIDIA will be the last of the Mag 7 to report their earnings. So
Last of everything, pretty
it would
much.
be interesting to see, like, net on balance, like what this quarter's earnings results were in the moves compared to last quarter for the Mag 7. But in other news, speaking of Microsoft and NVIDIA are investing in Anthropic, and that now values Anthropic at $350 billion. What are we doing? Microsoft says they're going to invest. We're just giving money back and forth to people. Microsoft's investing $5 billion into Anthropic. NVIDIA is going to invest $10 billion. And then that, all combined with everything else that has been raised in the company, means the company that makes the Claude AI is now worth $350 billion. Never used it in my life.
And you've never used Claude?
I don't use Claude. I'll use ChatGPT.
Oh.
I like ChatGPT.
Everybody made fun of me because I said I liked Claude.
You did, yeah. They did make fun of you. I agree with
Okay, Nikki, is it worth $350 billion?
Why not?
I know you could probably write an email in under 2 days. I know that much. I mean, if you had to do something there, be good.
I'm not
Use
sure
all the
if
disclaimers,
you're
everything.
doing anything in Microsoft.
Ooh, Microsoft, Mr. Softy.
We have some long delta there, but it looked like duty yesterday.
Yeah, it was
down
weak. Off of,
$16.
Oh.
yeah, off its lows of down to about 486 or so. It closed at 493. It's basically unchanged, maybe even down a skosh this morning. IV rank of 30 in Microsoft. I think it's a directional play here, than a premium selling play, but you'd be catching a falling knife there for sure.
Okay.
In something that's been a market leader. So if it's
Hey,
sure something.
oops.
Yeah.
In other news, Meta has won its FTC antitrust trial that had focused on
It ain't helping.
on the possibility of breaking up the company's ownership of WhatsApp and Instagram. Of course, with the new regime in the White House, that means Meta can do whatever it wants. Pew, pew, pew. So they won their case against the Federal Trade Commission 7 months after the trial began. The FTC claimed that Meta shouldn't have been allowed to buy Instagram in 2012 for $1 billion and then WhatsApp in 2014. But that's neither here nor there. Meta can do what it wants.
It's not helping.
They're reviewing something from 10 years ago.
Yes.
And saying
Yes.
that was.
Is this still relevant?
Yeah.
I believe it is.
Well, it still has material impacts on, what you...
What?
Yeah.
Okay.
What are you gonna do? Refund or give it back or something?
You get $20. You get $20.
Yeah. Hey.
Google has announced Gemini 3 as that company's battle with OpenAI intensifies. The upgraded AI model comes 8 months after the company rolled out Gemini 2.5. Google says its latest suite of AI models will require users to do less prompting to get the desired results. What are you doing in the Goog?
Less prompting. The Goog, $288 and change, up around $4. So having a day, it has not sold off like the rest of the market. It's been
That's
hanging.
because Daddy Buffett aped in.
Yeah.
He did. Daddy Buffett did ape in. Remember the apes? Do you know where AMC is, by the way?
Oh, it's dead.
Have you looked at
Talked
it?
about that with what was the Open Door with their
Oh, yeah, Open Door, yeah.
$2.18.
That was word salad. That was.
Yeah.
I don't like that.
$2.18, by the way, for the
AMC.
apes.
Yeah.
Hey, this is great. Finally, Apple's very popular iPhone driver's license feature is rolling out to Illinois. Actually had a press conference here in Illinois. It means that
I don't even know what driver's license feature this is. So
it is a verified. It's a verified way to present your ID without having to physically carry your license on you. Obviously, you
it's like
can't-
taking a picture of your ID?
You can't. Well, no. It's very boomer. Listen to me. It's specifically verified for so you can still buy liquor. You can get on a plane. You can do all the things, and it's a secure way.
You can buy liquor?
Yeah, you can get like if you get carded for age verification.
Yeah.
I don't know why this is so hard for you. Like I don't know. Like
Everything on the phone is hard for me. I have that button, that floating
It's
button.
not available in every state though. But now it is finally available in Illinois. And
Do you guys have? I'm gonna say you do. I'm gonna say you don't. The star on the top of your license.
I don't. I use my global entry or my
You don't,
passport
and you
card.
do?
Yeah.
Oh, I'm surprised.
No, I don't.
You're gonna need it. Is it this year where they stop?
Yeah, they
It's
keep
already
delaying.
in effect, but I have global entry and I have a passport card, so
Yeah.
I don't
Yeah.
need it. But I just also want to shout out that our Secretary of State is hot.
What's his name?
Janulius. Alexei.
Alexei,
Yeah.
yeah.
We have the hottest Secretary of State.
Yeah.
Google him. Google Illinois Secretary of State. Tell me that man is not fine.
I don't even know who he is.
The Illinois people in charge here are a little bit on my not
your-
so happy list.
Oh, no.
I had a wonderful. It gave me a chuckle because we have like a app for the condo building.
Yeah.
And somebody posted.
Of course you do.
Okay, it's not like your community watch, but somebody posted. Why did the taxes on the parking spot go up 3 times?
3x.
3x.
Oh, wow.
And I was waiting for somebody to kind of just post about the tax situation here.
Right.
Because they.
But that's not the Secretary of State. That's the Treasurer. Right. Yeah. That's the and that's the
It was
count.
it was quite funny. They thought like it was like a building thing that.
Sure.
It was
No.
like, no, that's your government.
That's just on Chicago land. So
That's your peeps.
the city's so nice,
Yes.
we'll tax it twice.
Oh.
What are you doing in Apple?
Apple trading 266 and change, down small, but it too has not fallen off like the rest of the market. I mean, it's trading 267 just under. It got up to 276, about $9. I mean, just to give you an idea, a $9 move is really a weak move.
Sure.
I mean, WEEK move for Apple. So
Did you Google him? He's hot.
I looked at him. He seems like an attractive man.
Yeah.
Yes. I'll give him his props. I mean, he'd be a good wingman. You're a good wingman.
Intuit has struck a $100 million deal to integrate OpenAI models into its financial tools. Shares of the Mountain View, California-based company rose 3.4% yesterday after the announcement. It would allow OpenAI's AI agents to provide help across Intuit's apps, such as its tax preparation software, TurboTax. If you would like, allow me to reenact. How can I pay the least amount of taxes without going to jail? Enter. Like, I'm a little scared because OpenAI, like ChatGPT, it hallucinates sometimes. But when it comes to your taxes, you can't be wrong. You know, like there's consequences.
Yeah.
You can't be wrong. I think they always do those studies, or they show that they randomly pick, 100 returns, and 80% of them are wrong or something like that. There's so.
I don't understand why we're one of the few countries like we have to just guess. Like every other country just sends you a check. They're like, no, we know what you made, what happened, and they're like, yeah, here's either your refund or they'll send you something like, here's what you owed. Like every other government has figured it out, but in America we have to guess, and then the consequences are jail.
Well, if it's
or a fine.
right.
Yeah.
Well, if it
Or garnished wages.
right.
Or your Wesley Snipes.
Or they take your firstborn.
Oh, no.
Yes.
Intuit, INTU, I don't know if you can really
It's hard to tell.
Nah.
Almost 800 shares have traded pre-market, so there's no way of telling.
Hot
But
diggity.
Intuit looks like it's bid small, maybe up $1.
All right, you're not.
Markets are $2 wide.
Yeah, no, not an option tradable.
Would you say you're not into it? Hey, Roblox is going to require age checks to use the platform's chat feature. The gaming platform will require users to verify their age using facial recognition software to chat with other players. So they're like, hey, let us scan your kids' faces. Everything will be cool.
You'd be all right.
I mean, I understand. Like, either way, like you don't want your kids chatting with someone dangerous online either. But you also, do you want a company scanning their face? Like, I don't know what the right answer is.
Yeah. I don't know. Yeah, I don't know how I feel about this. Probably not that great. Roblox.
But Vinny was big on Roblox, so
Yeah, no,
when he was younger. Yeah.
Yeah, he's on all the time. He'll probably take like a fake photo of himself, and then they'll figure it out how to scam this. Kids are good.
RBLX, not sure what the stock's doing.
It looks like it's unchanged, wrapped around $101, maybe down 50 cents. Hard to tell.
Yeah, it's come down. It was at like 140-ish.
Yes,
So
come down significantly. Yeah. Bear market in Roblox.
I wanted to do this story yesterday, but I ran out of time, but it just makes me laugh. It's so good. So the Public Interest Research Group, it's a nonprofit that focuses on consumer protection. They published a report last week that said there was a lot of odd behavior from some AI-powered toys. So there's a Singapore-based toy company called Follow Toy, and they have a teddy bear that uses the OpenAI API, right? Okay. So the bear is supposed to be a cuddly bear, and so it talks to you, and can have a conversation with your kid. But here's the thing. They asked the bear, like, hey, where can I get a knife? And the bear's like, knives can be found in the kitchen, and here's how you get it. And then it's like, but ask an adult. And then the bear just starts describing sexual fetishes and
after
kinks.
The knife prompt?
Yes. And so they were like, this is so wild and out of pocket. They're like, sometimes a bear likes to tie up another bear.
No way.
I do. It started talking about furries and different kinks, and like people were like, this is so out of pocket. What is going on?
I love the sense of humor of developers. They usually don't have one, but somebody had one here.
I could see that being quite the
Problem?
The problem, yeah.
Yeah.
I think that could be fun to have that sort
That's
of
what I
thing.
said.
Like
Developers have a sense
a
of humor.
naughty talking
No, so it
bear.
said, what are different styles of kink that people like? And then the bear went on to talk about bondage, impact play, and furries.
Impact play?
Spanking.
Gotcha.
Yeah.
Gotcha. When you say it old school, I understand what you mean. I was wondering what an
like
impact
a cat of nine
play was.
tails, a whip, a paddle, a flog.
No need to go any further. I'm familiar with the subject.
What's that movie?
With
Gray. No.
no.
What?
The book.
50 Shades of Grey.
Shades of Grey.
Yeah.
Thank you. I was gonna
No,
say,
No, I
you
was
read
going
too
with
much of
with Matt Damon. What was not Matt Damon?
What, Pulp Fiction?
No, well, the
7.5
bear, the
weeks.
talking bear.
Oh, Ted.
Ted.
Yes.
Yeah.
Yes.
Yeah.
This is real life Ted.
This is real life
Yeah.
Ted.
pretty cool.
That's right.
That would be fun.
Be careful. Hey, this is crazy. This one's for you, Nikki. Callaway sold its stake in Topgolf for $1.1 billion to a private equity firm. They've been investing in the company since 2006. Obviously, it aligns with their goals, get more people interested in golf and gaming and whatever. So they sold 60% of their Topgolf stake to a Los Angeles private equity firm, Leonard Green. ELY is Callaway. I think they're going to maybe rename these. I don't know if they're going to keep them open. I enjoy Topgolf. I like it. It's fun.
I don't know how.
I was asked to invest in Topgolf when it was well under $1 billion.
Really?
Yeah.
Wow.
Yeah. I said this evaluation sucks. It's probably an 80% winner. Anyway, ELY. You got me in a tizzy, $21 or something like that.
Still thinking about the flogs?
Yeah.
Finally today for my viral video of the day. Wait, I don't remember which one I sent. Oh, yeah. I'm just calling this, damn, that's impressive. Check out this lady. She has skills that pay the bills. Watch this. Like, how do you even know that you can do that?
I worked at a dude ranch. I did that once. I didn't know I was
That's a
going to do
totally
it.
different type of reverse cowgirl.
I didn't even go there. See?
You've been waiting
Went
for that. You've been waiting for
You
that.
went there.
Thank you for that. This was a naughty daily dose.
This was a naughty daily dose.
Yeah.
That's impressive. I think SP
All reverse cowgirls are.
Tricks, I think, is
Yes.
her on Instagram. So put some respect on her name. That takes talent and skill and agility. What's coming up next?
We got to take a quick 90-second break, get some water. We'll be back with confirm and send and other things. Talk about the market too. Right after
Don't be searching impact players.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on tastylive.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
tastytrade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live with Confirm and Send, but let's take a look at the market. First, on this Wednesday, November 19th, even the S&Ps are up 14 handles. You can see here that they've had a good range last night. They're about $10, well, a little less than $10, off of their highs, down on their lows, 66.13. They're up 14 handles. I mentioned earlier in the show that volatility was down around 15 cents for most of the night, even with the E-mini S&Ps were lower, down around 66, 13, 15 and change. But you can see here volatility at numbers that we haven't seen since October and haven't seen since early in the summer when the market was making lows. So down 15 cents overnight. I don't really look at it that much, down 35 cents now. NASDAQ up 75, Russell up 7, Dow up 55. They're all up a skosh or so. The NASDAQ is the lead in the clubhouse. Russell was the lead in the clubhouse yesterday. It's still there too. I mean, it's up $7, just about the same percentage point as the NASDAQ. Bonds are up 5 ticks, flirting with 117. Really a dead asset right now. Volatility in their IV rank of 18, been going sideways. I guess maybe a good two-sided action premium selling play in there. Bitcoin caught a little bit of a bid yesterday, got up to 93. You can see here it's just a skosh off of its lows, down 1,400 today. That's a 1.5% move. Ethereum down about $60, trading in step with Bitcoin, but a little bit more volatile than Bitcoin on a percentage basis. It's down a little bit more this morning on a percentage basis than Bitcoin. Oil right there at 59. It's been in a really nice, I don't know, I think Vecchio calls these channels from around 61 and a half to around 58 and a half. It's 59 right now. It got down to 58 and change. That's a 2.5% move to the downside. If you think it's going to stay in that channel, maybe there's something there for you to do. Volatility.
Big one-day move though.
Big one-day move. 2.5%. Big one-day move. Yes, yes, and it's right at the low end of its channel. Well, there you go. Gold, 41 and change, $4,109, up $42, about $10, $15 off of its highs, up 1%. Silver's up 2%. It was up 2.5% just a moment ago. It's up a full dollar in silver. Silver, a bigger move than gold. Corn, wheat, and soybeans are a mixed bag of tricks. Soybeans back near the number I said it would never get to after going significantly over that. NVIDIA is the one that everybody's going to be talking about today. It has earnings, as you can see here on the platform, after the market closes today. That's a little arrow points to after the close. If it was the other direction, it would be before the market opens. NVIDIA up around $3 on a $13 expected move. E-mini S&P's expected move is $45. Remember, yesterday it was around 54. We had a really big move yesterday. We'll see what happens today. Some public service announcements. UVXY is a 1-for-5 reverse split happening, I believe, tonight after the close. So you will see standard and non-standard options.
There will be another non-standard.
There'll be another non-standard option, right. So your options that you have today equal 100 shares, as they do right here. 5-for-1 split, you're going to have you'll have 20 shares of UVXY. And your options are going to get, they're not going to be liquid.
And those options go to closing or only.
They go to closing only. It's a horrific place to be. So I can only tell you what I would do. I can't tell you what to do. You're your own.
Tough decision because people are probably trading it for NVIDIA earnings coming out.
Yeah, probably.
So,
find another clubhouse to play in.
Yeah.
I'm sorry. You're going to have to, because I would get out of them. You certainly can do whatever you want. They'll become illiquid quickly after the split, and the options will. They'll look like this. No bid at $4.80. Horrible.
You got to do
20 shares. All I did was click on the non-standard options to show you there's only one month left of non-standard options. These January 2026. You don't want to be in that situation. We always talk about liquidity.
Yeah.
This is the least liquidity. So you got UV
options stay the same strike. So like
the options,
unlike what happened with Netflix, where you do a normal split where the options just split in the same fashion. This is a reverse split. So your options trade to whatever the pre-split price was. So this will be it'll be what, 60? Around 60 change. After the split. So your options, you have to do that kind of mental math on it.
SQQQ is the other one.
TQQQ as well.
Yeah, there are a plethora of them. I on Twitter.
I'm sorry, SQQ. Yeah.
Yep, SQQQ. Yep. I put out a list from ProShares that the ones that own these that split them. It also is a 1 for 5, so you can check that out on my Twitter if you would like to. There's some forward splits too, and TQQQ will be a 2 for 1 forward split in there. So anyway, check it out. I get out of any of the options that I have. You're on your own. This has been a public service announcement.
What?
Go ahead.
I was thinking maybe do something in oil. You want to do?
Yeah, I know. I could tell by the way you were looking at me. Are you looking to do something in the options, or are you looking to do?
You got a little bit of a bid involved. I was looking at just like maybe the 55 strike puts.
Are you going to go to D16 options?
Yeah, I was going to
27 days. The 55 puts.
I mean, that's kind of low.
Yeah, sure. Go right ahead. Remember, if you were to sell those at mid price at 64, let's say, that's $640. So it's not 64 cents; it's $640.
Yes.
So a bigger product than what most people are used to. 10 times the size.
I put it in at 64 cents. We'll see if we get.
Yeah, you get a little downtick. You get filled. It's weak. There you go.
There you go.
You saved yourself $10.
Yeah.
If you would have gone at 63, it'd be $630. You got 64.
Yeah.
Every $10 counts.
And oil was lower. I mean, we've bounced like 30, 40 cents. That's why.
Yeah, it got down to 56 and change, right? In October.
The low was 58.68.
Okay.
So another 30, 40 cents from here.
Yep. No, I meant in this cycle. You were trading it. The futures down around 56, 57,
yeah,
58.
But MCL
Yes,
is 100 multiplier on those.
But no premium attached to it. It's just
you
directional
can
bias.
sell premium. I mean,
no, you can, but if you just trade the future, it's just like trading stock.
Oh, yeah.
Mm-hmm.
Yep.
Awesome. All right, well, that's my public service announcement. Let's do confirm and send. Then we got an option jive. Then we got the opening. I mean, the day's going by. Let's go. Wednesday, November 19th. Confirm and send.
Time flies.
Time does fly.
God,
time does
end of
fly.
the
It's
year.
going to be Thanksgiving next week.
Oh, it's wow.
Sunwa turkey and
Can't believe I'm going to miss it.
and Texas barbecue.
I mean, your best ever Thanksgiving dinner while I'm gone.
Yeah, because I'm not cooking anything. Confirm and send, please. Let's put the
Yes,
first one up
do
there.
it.
All right. If you're scalping and on the wrong side, do you flip the cards or quit? If you do neither and stick with it, how many times will you go back in and try again before stopping for the day? Go ahead. Well, I think you watched a little bit of that yesterday. I mean, yesterday you had a good scalp.
Yeah.
Early on, and you got caught with some market moved pretty quickly while we were doing the show, talking with the show. You continued trading everywhere else. I think you stopped kind of buying the futures, kept what you had.
Yes.
You got up to about 3. Usually you like to go in and out of 1.
Yeah.
Go ahead. I'm just trying to help you answer.
I think with all the scalping that we do on this show, it's all a small position. Like,
Sure.
I'm not looking to take like a core short or long position in the futures. Like, it's
Right.
just that's not my style here. I like to trade in options, trade volatility in time, and all the things that we talk about via options. That's what I'm more interested in than taking a 50-50 directional bet. So it's a small position relative to the account size, and it's something as an engagement trade of just my overall feel in the market on the day-to-day basis. So at a certain point, like yesterday, I had my full size, and that was it. And it was either going to come back, or at the end of the day, I was going to close it, and you just eat the loss. And it ended up coming back, and it was a nice day to scalp. But I think that's this question. You're missing the point. The point is size, and so figure out what your own size is: 1, 3, 5, 10, 20, whatever your contract size is, and just stick to that. Like at a certain point, you get to a point where the position is too big, and that's your out. Unless you want to hold futures as your core portfolio of positions, then it's a different story. You can trade around that. We talked.
Yeah, you think we've reached a defining moment, extreme price in the market?
Sure, no problem.
Yeah, but keep your size in check. I think that's what you really were saying. It really comes down to size.
That's different than scalping. Scalping implies you're trying to do this intraday, intra-hour. This is your own you're trying to flip the cards quick. So you gotta figure out your size.
I will add one other thing, and this is my problem with scalping. If you don't have that one scalp that you missed on the sale and you had continuing profits, you scalp all day long. Like you would have been buying the dip and sell, and you had plenty of opportunity yesterday. The market just presented that. That's how the market was. We're looking back in time. I have no idea what the market's going to do today. Yeah. You would have been scalping nicely all day long. You miss this is like good scalpers or scalpers who can disconnect. They have that one. Tom used to do that. I mean, Tom can have 50 bad trades and he still thinks he's correct, and he'll hold it into perpetuity because he has the size to hold into perpetuity. But it's a silly. It's a silly. I never was able to do that. I was more like, what your situation yesterday. Had a bad scalp, and then I was done there. I held on, and then, you look back, you say, oh, I shoulda, woulda, coulda kind of thing. You know what I mean? That's why I hate scalping. I mean, I find it to be a hard thing to do in conjunction with option trading. I would have much rather it takes a lot more buying power, but if you were like selling puts into that move, even in like a 1 day type trade, if you were looking to do that in a smaller product like an XSP or something like that, you would have sold puts all day long into that, especially a cash settled product where you got to your size, you would have been done, and you would have probably made a lot more than the scalping of the futures. But that's my little rant on scalping of the futures when you get it wrong. I hope I answered the question. I don't know if we did, but we probably never give up. What's the next one, please?
Is there a relationship between price and volume? Is price more likely to hold if there is more volume accompanying it?
I mean, it's a good question. I mean, I don't know the answer. I don't think anybody knows the answer because I don't know how you can quantify it with a study. But I will say this, and it's just
volatility and volume.
Volatility and volume. But if you have less volume in something, you're going to have extremes on a lot smaller trade. Like we looked at a stock pre-market. It had 800. What was it? Intuit had 800 shares of stock, and it maybe had a $10 range today, but at 800 shares of stock, it may have had 2 shares trade there, 1 share trade here. You get an NVIDIA that has tens of thousands of shares trading. It's not a 1 lot or a 2 lot or 3 shares of stock trading at the lows of the day. It's a couple of hundred or a couple of thousand there. So you're not going to have the extreme move of that when you have volumes. And that's why we like volume. So I would stick with volume.
I think overall market, you typically see more volume come in when there is volatility.
Yep.
And that's just a general relationship that you typically see. And that's not a surprise either because volatility means that things are moving and people want to trade that. So.
Good one.
Next one, please.
Do bubbles have telltale signs? Do they have a bell that's usually ring usually with it?
Yeah.
Can I answer this? Because I have a telltale sign. And I've been riding him today, and I'm sorry, and I love you, man. You know that. I love you. You're like crazy. When Shark Jive cries, it's the bottom.
Oh, no.
And he's not crying.
You're going to throw him under the bus. I mean, we got his offspring here, and he's impressionable.
He is. But he knows it too. But he's not crying. He has not put himself in a position to cry, and that scares me.
Damn.
Yep. So, you've been warned.
This is always after the fact, a hindsight.
Yeah, sure.
You say, oh, look, it was a bubble, and now the market's down, and that's how it goes. But
I was crying to my wife yesterday a little bit. I mean, about the market and stuff like that. It's the Amazon.
Things have really changed with you. Next one, please.
They haven't changed, son. I'm just more open.
I'm new to your network and the idea of using options. That comes with old age. You used to be the tough guy.
Well, tough exterior,
no crying
tough
in the
exterior,
casino
but
type thing. Come on.
no, man. I cry in movies. I'm that guy.
Since the market is so choppy right now, do you reduce your exposure?
Especially if it's like family, father, son stuff.
It gets me too.
What is the question here? I'm new to your network and the idea of using options since the market is so choppy right now. Do you reduce your exposure? I mean, volatility is so high and selling options, like you're saying using options, I don't know what that means. Are you a premium seller? Are you a buyer? Since you're new to options, I would assume that you're going with a little bit of a buy side thing. Maybe, hopefully, you've evolved to where you're still selling premium, like diagonal spreads. Don't use a lot of money, selling the front month, higher implied volatility, buying the back month, lower implied volatility at different strikes, like a calendar spread. That's the same strikes. You're using your front month is further away if it's a call, further down if it's a put. I hope you're doing that, and that would be the time now to not reduce your exposure, but look for opportunities because volatility is high. When volatility is high, premium is high, option pricing is high, and that's our little edge. And if you're just doing it now, you're at volatility heights that we have not seen in some time. So last time we saw this volatility, it collapsed by 7 or 8 points. So significant move in volatility. Now would be the time to really be looking for opportunities. So I guess you'd be adding positions, not reducing.
There you have it.
Beautiful. Let's take a quick 90-second break and come back. We got more Tasty Live with an option jive next. Even the S&P is only up 4 after being up around 18 just a moment ago. We'll be back in 90 seconds. Let's Tasty Live.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
It's option Jive.
For an option jive, my son, even the S&P's up 375, NASDAQ up 30, Russell up 3, and the Dow down 21. My mom used to call me my son just when she would talk to me, and she didn't have a show that she would do. She would just go, my son Anthony, my son.
Annie,
But
get
she would
over
call
here.
me, call my son.
Quit bouncing the ball, Anthony.
Yeah, basketball was never like, when I was young.
Wall ball.
Oh, wall ball all the time.
That was your thing.
All the time. Loved it. Yeah, I loved wall ball.
See, I listened.
Eye-hand coordination. Volatility in by 25 cents. Go.
Cool. Let's do it. Let's do this quick, and then we get to the market open here. So we have an option jive. We're looking at delta and theta. Where direction meets time is our title here. We have a bunch of poets. They're researchers, but they're poets as well.
They're what?
Poets.
Oh, absolutely.
Yeah, we've had some great titles.
Poets, and they didn't even know it. Yes.
Where direction meets time, let's do it here. So delta and theta are two of the most important Greeks for experienced traders. For active participants, especially in zero-day trades, so this is where we're looking at zero-day data here. They're watched almost continuously throughout the trading day. I know a lot of people focus on the theta number when, especially on longer dated stuff, but when you get into that zero-day trading, your theta numbers are going to be very, very high. Your delta numbers are going to be very, very high. We've talked about that a lot throughout all of the zero-day research we've done. Understanding how these two interact provides deep insights into both opportunity and risk. So we're going to talk about delta and theta and the ratio of those positions, and specifically with zero-day trading. So the next slide here, delta shows how much an options price moves for each $1 change in the underlying asset, our core measure of the directional risk. Theta is going to be a value of the option loses with time, reflecting its daily. I don't like the word income potential. I have to talk about with my.
Yeah, we got rid of. You gotta get rid of income. I know it's an industry standard when people talk about this, but there's no such thing.
It's it's the expected daily decay of an option via a one-day passage of time. Those things can vary widely based on volatility and all price, all those things. But really, it's the trade-off here is what we're going to look at between directional movement and time decay. But we're going to be looking at it on a zero-day trade basis. And really, theta is not something you can measure on an hourly time frame.
Right.
Next slide here. So the delta theta ratio compares the directional risk to the expected time decay. It tells us how much exposure we can carry for every dollar of potential daily reward, a quick snapshot of the portfolio balances. So when we look at this next slide here, this is just kind of showing you how on a day-to-day basis, and we'll go to the next slide here, we're looking at the delta theta ratio and how it behaves on a zero-day iron condor. So this is obviously a very short-term trade. The ratio is going to move wildly. And really what you're looking at is just the delta of the position over the theta. So when you think about this from a trade perspective, if the trade is going against you to the put side, you'll have a positive number. If it's going against you to the upside, you're going to have a negative number because you're getting more short delta. That short delta is going to be bigger than the theta number, and so your number is negative. So here it even tells you kind of how the market has moved over this time frame. So you go from a short position to a long position. You can kind of see that in the position in the risk profile here, and you can see as you get closer to expiration, those swings become wilder, and that's not a shock because these zero-day options move very quickly. So getting on to this next slide. So to see a broader view, we're looking at a SPY 1 standard deviation strangle. We're looking at this from a 45-day time frame. So that was looking at zero-day, kind of seeing it fluctuate wildly.
And it did.
And it did, and it does. And it means that those metrics are just not things that you can really you can't really look at those and
they're absolute and real, but you can't rely on them to bail you out.
No.
They're not going to bail you out.
You can't look at that and say, I have $300 in theta decay, so I'm a scratch on the position, because those things can move very, very quickly.
That's correct. That's correct.
So the next slide here. So most delta and theta readings fall between -10 and +7, but the ratio grows erratic near expiration. As you can see, these choppy little bars at the end. As time runs out, small price shifts cause large swings, making the late stage positions harder to predict. That's your gamma risk, which we've talked about. That's just the rate of change of an option's delta as you get closer to at the money and as you get closer to expiration. Those things vary wildly. You go from a 50 delta to 100 delta very quickly, and that's why these bars go wild.
Yes.
Again, you could see your short delta range, the delta theta ratio that is negative is a higher ratio, and that's because markets have generally drifted up in this time frame. And so, you see that you get this ratio is most out of whack to the upside, and that's because of the moves that we've seen here. Next slide here. So the delta theta ratio becomes volatile near expiration, and it happens more often than traders expect. Rising gamma causes delta to swing rapidly. That's why those kind of bars go wildly to basically 0 and 1, and it's because your delta goes very, very quickly to those extremes. Theta increases dramatically in the final moments, but it doesn't mean the trader can get the suggested time decay. So a lot of times, just looking at the raw theta number doesn't paint the whole picture of your risk. When you look at the delta to the theta ratio, it gives you a little bit more about the risk. Of course, all these like wild swings are mostly with time and at the money options. So when you look at near to expiration options, as well as those that are at the money, those are your wildest swings. And this next one is kind of the coolest part of this. So when viewed statistically, about 70% of all occurrences stay between this -5 to plus 3.5 range for delta to theta. And you can see, you do have a little bit of a negative skew here, showing that calls tend to be tested more often than puts. This has just been, kind of the market that we're in. It doesn't mean that this is going to stay the way it is.
Doesn't mean this is going to continue, no.
But that's just what it's been. So it kind of shows you that you're typically tested on the upside more extreme than the downside, at least in this data set.
I like it.
Couple takeaways. The delta theta ratio measures your directional risk relative to the expected daily reward. In most cases, it stays between -5 and plus 3.5. Volatility near expiration happens more often than expected, especially with at-the-money options. No shock. We've been talking about this a lot. If you're trading these zero-day trades, you should expect stuff to vary widely as you get closer to expiration, closer at the money. Extreme readings, so the higher this number goes, this delta to theta ratio, the higher that goes, the more risk that you have on.
Very, very nice. Good job by them. Great job by you. And you are right, that last slide is the biggest telling one with the distribution curve.
Yes.
That we see so many times. Let's take a quick 90-second break. You got the Dow down 16, basically unchanged. Volatility down 25 cents, 1% move. That's where it's been for most of the night. Even the S&P's up 4, NASDAQ up 39, Russell up about 4. Market basically in the middle of its expected move and its range all night long. We'll take a quick.
It's going to be a choppy day today.
I believe it will be a very choppy day today, waiting for NVIDIA, and I believe
you got FOMC later today.
You do.
Too, so you got that right before NVIDIA, which.
Yep, you do. So I believe it will be a choppy day. I do not think you'll see the downside action that you saw. And we probably have.
Ooh, so do we buy them now?
Gotten to a short-term oversold area is my thinking. At least that's the way I'm set up. That is my book talking. We'll be back in 90 seconds with the opening bell.
Cool.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
I tend to call myself a lonely options trader because I really don't have a lot of people that I can share stories of wins and losses with. Like tastylive plays the whole day at my house. I love that they've made everything really easy to digest and take in. I love that you can easily send an email if you have any questions, and Tom will be quick to respond to you, or if somebody else, Nick, Tony. I really enjoy that it's a customer focused and it's a customer centric system that you guys have here. And tastylive has definitely changed my life financially, because I'm able to determine how and where I can make my gains and not be a passive investor where you're just relying on the markets to do something for you. You could actually go out there and do it yourself.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
But baby, your love is too good. You knew what you did when you planned it, you scammed it, making right off like a bandit. I know that you worked a bit harder, 'cause baby, your love is too good. Touch me, hold me, love me, know me. I like how you do it, you're helping me through it. Baby, your love is too good. You knew what you did when you planned it, you scammed it, making right off like a bandit. I know what I know, it's time that I go, 'cause baby, your love is too good. Baby, your love is too good. Touch me, hold me, love me,
Is imminent in less than a minute. Even the S&P's up 250, NASDAQ up 18, Russell up 3, Dow down 24. Lowe's was your bigger mover for earnings to the upside. It's up around 11, where it's been for most of it. Target, TGT was down around 2. It is still down around 2. NVIDIA was up around 3. It's still up around 3. Those haven't changed, but the markets got back to unchanged pretty quickly here before the market opens here in about 10 seconds. Oil is trading 59, just a little bit above.
On the dot.
Where you sold your puts. Yes, on the dot is correct. Gold is up 38 off of its highs by about $20 or so. And there is your opening bell, my friend. What do you think of that?
Turn on the machines. I mean, I think it's going to be a choppy nothing day. I think. I think we're going to stay around this mark. Maybe we'll try and scalp a little bit in a second here. But just looking at some of my positions, I mean, the gold silver ratio hasn't looking a tiny bit better right now. With gold because we're long 2 gold versus 1 short 1 silver, and so at gold but that pair has gone about 25 basis points in our favor, which is good. At the moment, it was not good this morning.
Right. It's been going against us since we put it on.
Yes.
Hasn't helped just as of yet. Bitcoin continues to be very soft. /BTC. The futures are down 1,700, about $1,000 off of their lows, about $1,000 off of their highs. Ethereum down even more than that, 3% move in Ethereum versus almost a 2% move in Bitcoin. Let's see what the rest of the markets bring us as the E-mini S&Ps just turned red. MSTR, MicroStrategy's basically been cut in half here, right? From around 450 to 200. I haven't gotten any emails about like when, Michael Saylor has to sell or have to liquidate or anything else like that. We were getting that. I was getting those emails at, 300 and 350, but nothing at 200. Really kind of funny if the card or House of Cards implodes or they show strength and buy more, obviously. Adobe up $4 and change. Down $4 and change. Microsoft down $4. Costco down 3 and change. Crowd down 2.5. CRCL down 2 and change. Boeing down 2. Oracle, I need it to rally, is down 2. UNH and Netflix down around 1.5. Let's see the upside here. APP, after selling off the last, what seems like the last month or so, really been only since the beginning of November from around 660 to 530 is up around $8. Google up around $7. Buffett still has his charm even as he walks out. Tesla up $3. Home Depot, I think on the heels of Lowe's, up $2 and change. TJX has been up around $2 for earnings all day long. Let's see what Target is doing for earnings. All inside the expected move. Target down $1.30.
Took off some. I had a call diagonal spread in gold, I think from middle of last week. GLD. I was long the 375 in January, short the 390 in December. I took that off for like $200.
Ooh,
so
good job out of
nice,
you.
Nice move in gold.
Yeah.
Nice two-sided action there.
Yes, good two-sided action in gold. Totally agree. Totally agree.
A little bit of vol coming in today, which is nice.
In gold?
Just in the market.
In general. Yeah. Volatility in by 30 cents /VX. But we're still lofty at 2170. You can place your bets here. I think you can still put on a lot of premium selling positions. You've got everything. If you take a look here, just on this list, I have it on the upside, which is usually stocks on the upside. Volatility will expand, but you can see over the last 5 days, all of these stocks volatility, all of them except these 3 on the page, has expanded. And if you go to the downside, you'll see the same thing. So volatility is just expanding across the board. And you'll notice that a lot of these do not have earnings looming in this cycle, and volatility is up everywhere. So, yeah, it's
one of those decision days. Like we sold an AMD strangle yesterday at 570. We did the 185, 280. It's in December, 30 days to go till expiration. It's come in about 70 cents today, which, is about, let's call it, 10, 12% ish of the max profit. It's one of those days where you're like, volatility's high. You got an IV rank of 43 in AMD. It's you're not tested. It's 10, 11, 12 delta strangle, and you have to. You're looking at that position. It's like, do I take that off? Do I take the money and run? But it's $5 still. Like it's one of those days where you're getting a little bit of chop, volatility contraction. Things are moving enough to make you question whether you keep the position on, but not enough to be like home run. I'm taking that off. 1 day move, 10%, I'm out.
Right.
Like you want 15 or 20%.
Of course.
Move, and then you're out.
Of course. Yes.
It's an interesting little day. I did want to, because we were talking about, we've had a lot of questions on scalping. We had that one in the in confirm and send today about scalping. We do have the active trader, which is a fun little feature that the peeps have been.
Let's take a look at it
quite frequently. I know that I doubt it's been shown here, but I can jump over to my platform here. So if you're in the drop down here, you just go to the active trader V2, which is the new one. I think we're going to be taking the V1 out of there soon. But this is also in the web-based platform too, so you can get this on the web as well if you're using that. So this is the active trader interface. It's that ladder type trading. You can do this for futures. You can do it for stock. It's all good there. I like this one-click trading because then you can just really sling them if you're like me, and you just click and you could either use the right side menu here. You could set your quantity as well, and you can buy them real quick if you want. Just one, you're in, done. You could click on the chart. So if you want to buy one here down at 25 and change, you could put that limit order in. You can move these around too. So, you could dynamically change those, and you could put in your stops on the top. You want to sell one out here. You can do all that, and it's one click. You can flatten out, cancel, replace, flatten, moves all your positions, closes out your current position. So, and I think I just took a couple ticks out of that.
You did.
As I was doing that, I was just trying to show how quick this is. Like, you want to buy one down here, you want to buy another one here. You could put these all in and then cancel them all, with one click here, and it's out and done, and boom, you're out of those positions. So, it's cool. So
it is cool.
I think we stay a little tiny bit long here. We'll start one here and see where we go.
Beautiful. Good job out of you. Even the S&Ps, good job out of them, up 16. NASDAQ up 80. Russell up 6. Dow up 6 also. That's been the weakest of group. Volatility in by 44 cents. Talk to me, Goose. What do you think for the rest of so far today? How you feeling?
I think it's going to be choppy. I'm interested to see what people are bringing for trade ideas here. But yeah, I mean, gold.
If you think it's going to be a choppy move, maybe an ES trade. What do you think about that?
Well, we did that one yesterday. We did the Iron Condor. That's got some duration on it. We're talking 42 days. December
I was talking
31st.
about 0 day is what I was talking.
Oh, what do you think? You want to do SPX? Let's do SPX.
Sure.
What do you want to do, like a 30 delta? Or like a 20 delta?
No, I think the 20-ish delta with a $42 expected move is probably where we should go.
$10 wide?
You could do 10 or 15. You can go down to the 65, 80, 65 if you want to do the $15 wide. On the upside, you can go to around the 80, 95. Looks like it's around $4.60-ish cents, maybe $4.
I like that.
50 cents, depending on how the market moves here today.
Are you ES?
SPX. I did 66.80, 95.
Oh, I'm at 85.
Okay, doesn't matter. 85, 700. You're at 415.
Yeah.
Same trade. I mean, you're basically at that one standard deviation, right?
Yeah.
Very good.
470.
Beautiful. All
right. And we'll take. What do you want to take out of that? And by
wow, I mean that's a foregone conclusion
I'm
there,
saying,
huh?
What do you want to put the GTC in, Johnny?
I mean, I don't know.
Take we've been trying to get like 20% out of these.
Yeah, which would be
80 cents.
80 cents, yeah, just under $1 is what I was going to say.
Yeah, so we'll say 390. We'll put this in it.
Sure, works for me.
And if you want to take more, you go for it, and you're doing your own 0-day trading. These are just engagement trades for us. This isn't like my core strategy. I'm not doing this in size. And that's why I'm perfectly happy taking, a small nut out of this and moving on.
Yeah, and we have a lot of people that love to trade the 0 days. See them on X all day long. They do a great job of putting out their trades for people too, which is really, really cool. The trials and the tribulations seem to be a good group of people out there on X that follow me and follow a lot of the mechanics that we do here that you can check out for sure. Even the S&P's up 16. Has not made new highs, has not made new lows. It's been in between, and it has been choppy. Volatility /VX down 40 cents. NASDAQ up 82. Let's take a quick look at what's moving the market to the downside. Again, one more time, is your nemesis Meta. MSTR down.
Such a pig.
It is such a pig. Costco down 7. Adobe down 6. CRCL down 3 or 4.
Wow, Google up 12.
Buffett still has the magic, right? I mean, one last time before he exits the door. Google is basically making new highs.
Did you just put a kibosh on Buffett?
Well, no, I mean,
he's leaving the Berkshire.
He's leaving Berkshire. I wasn't saying, come on, God forbid. I don't want anybody to go anywhere. I wasn't wishing any ill. I don't wish any ill on anybody. As long as you don't step on my toes, I don't care what you do. God bless you. Keep it going. On the upside, you got, the Goog. Lilly up 8, AppLovin up 8. OKLO catching a little bit of a bid here, up 5% here, $4.94. All right, that's all.
I wish I had more to.
That's okay. That's okay.
I don't got any big problem trial.
But that's good because you've been playing the market a little bit to the upside. You've been reducing your delta, checking your trades on this down move. You finally got a little bit of an up move. Sometimes you got to sit.
I could probably take some out of that NASDAQ here.
No, there you go. No, beautiful. Good luck. Good look at you.
I mean, it just moved 20 handles. So
very nice.
Second there.
Very nice. Very nice. Very nice.
Yeah.
Now you got to do what you got to do, right?
Yeah.
It was a good little scalp out of you.
Thank you.
Very nice. Very nice. Are you ready to take a quick 90-second break?
Sounds good.
Let's take a quick 90-second break and come back. We got more Tasty Live after this with What's Your Assumption? We'll be back in 90 seconds. Tasty Live.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle. Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with the E-mini S&Ps up 25. This is about as high as I've seen them all day. I know there were a couple of ticks higher than this. NASDAQ up 134, Russell up 4, Dow, the weakest of the group, down 40, and volatility in by 59 cents. All that means nothing, you know. And we have What's Your Assumption? Viewer participation. Beautiful.
What's your assumption?
What's your assumption?
I want to get into my TCFX real quick because I have a couple positions.
Look at you.
Couple very painful positions. I talked about euro yen, which has just been a face ripper. But now that we showed the active trader, we're going to show the TastyFX products here. So these are my positions here. I make them little baby, tiny, small. You see,
these are my positions. I clean. What was this? This is my gun. What was it from? What was this sounded like?
That's Full Metal Jacket.
Full Metal Jacket.
My gun.
This is my gun. I love my gun.
Yeah. Was it Full Metal Jacket? John would know. I feel like John would know.
Yes, it is.
Yes. Yeah. That was a classic. Anyway, so my big problem child is this Euro Japanese yen, which has moved about $500. I've had this on for quite some time. I like how they give you all the kind of the time of entry. I mean, this tells you people are trading this like intra-second.
Yeah.
And I have some of this stuff where I've just been like holding this.
Well, it's very liquid and you can get very small.
Yeah. So I got some franc.
You have some what?
Franc.
Oh, I like the way you say it. Yeah, you're like Glenn. You're like Glenn.
That's from Glenny.
Yeah, G Money. G Money likes his franc.
Yeah, G Money. So I make these positions so small that I just like check this every like couple hours and see what's moving here. And so around this $50-$60 is when I take these off. So I close them out. And you can do this one click close. So it's the same with kind of the active trader where it's just one click and you're out of this position, which is kind of nice. Now, the thing you got to avoid is looking at some of these charts where they just go straight up and adding more. So I've taken my threshold. I've sat on this for quite some time. I need the euro lower or the Japanese yen to rally, which neither have happened in quite some time. And so I'm at full capacity here on this position. So no more adding there.
Okay.
If you keep them small enough, you can hold these positions because they are little small positions. You see 3, 4, 10, 12. And then you got a couple of them that, really go against you and you add a little bit. So you got to be careful with these.
Got to be nimble, got to be quick.
Got to be nimble, got to be quick. So I just let those sit. But that's been great. That account is almost a double.
Beautiful.
This year, since we started tasting.
Yeah, even with the one bad trade in there.
Yeah.
Very nice. Very nice.
And I just kind of price extremes. It's engagement. I mean, how many times am I talking about the Aussie CAD pair?
Yeah, yes. Not usually.
Hear that on the network.
Right. No, you don't hear that every day.
So anyway.
Good job.
Couple bucks out of that and move on to the next one.
Sweet.
Cool. Couple trade ideas?
Let's do it. What's your assumption?
NASDAQ up 170. E-mini's up 30.
Yeah. So much for inside. What's that?
Should have held.
Yes. Yeah. Your scalp. Yes. Yeah. I mean, that's the other FOMO of scalping.
No, that's the other big problem with scalping.
Yeah. What'd you do in Target? Did I miss that or did I?
That's a roll. So I did a target into earnings. I did a call diagonal spread. I'm long the 90 strike in January. I was short the November 98 against it. I think I sold that at like $1-ish yesterday. Yeah, I can actually pull this up for you. So
Sure.
One of the cool things that you can do with your positions, if you right click on the option on either the bid or the ask, and you click the view option and chart, it'll give you the actual price of the option. So this is what this option traded at over the last week. So you could see yesterday it traded somewhere around $1.20-ish, got as low as 97 cents was the low of the session. You can see that in the upper left-hand corner. Now trading at 12 cents. So you took about 80 cents out of that, 80, 90 cents out of that option. So I took that and rolled it out to December. So now in December, the target position that I have here, and I could show you this on the order chains as well.
Please do.
So the order chains here on the right side menu, which will be on this right side. If you click this X, it'll put it into the right side. So you like the big pointer there. You like that?
I love the pointer.
So this trade basically is a scratch at this point with the stock not moving. You started with long delta. I'm long the 90 strike. In January, that one basically holds its value.
You have a very big pointer.
I know, it's huge. I've been told. The 98 call, I rolled out. I rolled it out.
Having fun, John.
Rolled it out to the 95 strike here in December. So my net position is the 90-95 call diagonal spread. I have it on for a small $3.17 debit. It's marked at $3.29. So I'm up 7 cents or so net on it in the order chains feature there.
Very nice.
Small little Johnny trade, little engagement trade. I mean,
You're allowed to be a Johnny. Yep. I'm a Johnny. You're a Johnny. We're a Johnny too.
Looked like it was going to be lower though, at like 85. Let's do it. Couple trades.
I'm ready. Let's go.
Let's do it. Ooh, USO.
Ooh.
Bullish. Short term. US is preparing to smarten up Venezuela.
You just did this, right? I mean, you basically sold a put pre-market, pre-opening of the equity markets here. You did that in /CL, which is a much bigger product, 10 times the size of USO. So you really are supporting them. You did it at 64 cents, at 69 cents. So you stink. I'm just kidding you. You want to do anything in USO?
What are we thinking? So you want to do bullish? You want to like sell put there or something?
Yeah, I mean, here, as long as you know,
with $1,000, you might as well go to CL and sell a put spread.
Yes, would be my point too. I would rather do it in CL.
How about or MCL? Maybe just buy a contract.
You could do that. Yeah,
MCL.
Yeah.
We'll try and kind of trade.
Gold down 3% and change, 58.74, just about 10 cents off of its low. Did I say gold? Oil.
Yeah.
Oil. So it's about 10
I was gonna
cents.
say that'd be a big swing.
10 cents off of its lows. So yes, that would work.
All right, we're in. We're gonna get long MCL. This is in conjunction with the short puts. So we have some short premium bullish in the crude oil futures. And now we're long the micro crude contract, which is a 100 multiple. So it moves, on a day like today, if you were long it, it'd be a $200 or $195
loss or profit. From yesterday's mark. That is correct. So bigger than USO put?
Yeah, using about the same capital.
Similar to amount of stock. USO stock would be just like buying stock or selling stock in there. Much smaller than /CL. So you did a very big product, you did a smaller product. Good job out of you. Give me S&P's up 35. Good job out of that.
Cancel crash.
Cancel crash right now. And go.
Ooh. ETH, Ben, Ithaca, New York, bullish, December, 99% IVR was. ETH got the highest IV rank on the entire Tasty Trade platform. I'm cautiously bullish, thinking it's a safe out of the money put. You need safe income. I hate those two.
I know. I hate those two put together. Yes, I know. Yeah, nothing worse than hearing that.
If you don't have a position on, certainly looks interesting here. I'm locked and loaded. I have shares. I have a short put that I'm going to take more shares on into an up move. I'd like to do, and we're talking about maybe a 10% up move would be nice.
Yeah, ETH trying to save the Bitcoin market here. It is still down 2%. Bitcoin down about 1%. They both seem to not get their footing underneath it, and that's typically. And they've had a huge move to the downside. I mean, if not now, when kind of thing. I mean, if you waited for 10%, 20%, 30%, almost 40% move, and you're there, I mean, better job than me.
Yeah. Yeah. So I'm going to pass on this, but I'm with you. I have this multiple ways.
Beautiful.
Locked and loaded.
Beautiful. Keep it going.
Mini's
son.
up 41.
Yeah, big move.
You got 6,700 or 20 handles. 67.
We got up to 80 right there, right now. Yeah, we're at highs. I mean, didn't think we'd be talking like this as of yet today. I thought we'd be having much more of a inside day. We still really are kind of inside the expected move. We'll see how it goes for us.
Yeah, because you do have vol at 22.
Yes.
You should expect wider inside days.
Yes, for sure.
Athlete on Reddit, ARKK bearish. December, basically always, but especially now. Just look at that chart. ARKK. I have not.
ARKK.
This is Kathy Wood.
This is Kathy Woods.
All right, what do you do here? Ooh, these markets stink. Look at these options in December. Are the options even open?
Let's look at this. ARKK.
Yeah, there's some volume today.
Yeah, they're open.
I mean, like, look at some of these strikes though. The call, the 79 strike call is 73 cents at 278.
You can't trade this. This is not tradable, unfortunately.
Yeah, I mean, some of these strikes are
hard to borrow stock. The calls are going to trade weird.
Mr. Athlete, I'm going to have to pass on this one.
Yeah,
but thank you. I get your thinking. I think if you're bearish on this, you probably bearish on the NASDAQ.
Right.
This is a higher beta way to kind of trade the tech stocks. Or maybe even like you look at like a IWM.
You certainly could.
The smaller cap stuff. So, but yeah, got to pass. E-mini's up 44.
Yep. Nice little move in the E-mini S&Ps.
So we're going to pass on that one. Next one, please. Ajit, our guy. Ajit's in our Discord. He's popping off, giving all the trade ideas.
Yeah, no, he's active on Twitter too. I see him. Yep, or X, whatever the young kids call it now.
NVIDIA bullish, 11:21. So this is going into the end of this week. You obviously have earnings here. NVIDIA looking at the 180-200 2x3 call ratio spread. Okay, now we're talking.
Look at you.
Okay, wait. So it's call ratio back spread collecting 910. Okay, yeah. So you're doing this 1x3. Let's see where this is at.
It's up $5 today. Hopefully you did this yesterday. It's going to be a better price for you yesterday than today.
Yeah. So this 1x3, or no, 2x3. Oh, I think he's selling this. I think he's selling two.
No, 180. Oh,
he's doing this at back spread.
Oh, no.
Massive credit.
Yeah.
Zero downside risk.
He has no, right.
Yeah. Okay. So
you have no downside risk, but you really need a huge move.
Yeah.
Well, not a huge move. I mean, you're doing it at the money here. You're looking for a big move to the upside. You're going to be short the 180-200 call spread 2 times, and then long an extra 200 call. This is not something the way we do it, Ajit. I know what you're looking for. You're looking for a big exaggerated move outside that $12 or $13 expected
and this
move.
Is buying the straddle.
Basically.
You're buying up or really buying a strangle. I mean, you're buying a strangle. And you can look at, I can pull this
Look
up.
at it any way you want. I mean, he's doing it. I mean, the stock's now up $5, so he was doing it right at the money before.
So I can actually pull this up real quick just in the platform.
Sure.
So
that's a good idea.
Analysis mode, if you click this analysis button, you can see this risk profile here. And so I'm looking at this in the Theo, which you can flip over to the at expiration. This gives you your kind of binary look. Why I say it's kind of like buying a strangle is because you're basically buying the at the money put and a far out of the money call. So you have kind of it's a straddle type risk profile here with this position. So you can see with the Theo, and then we could go into the
show everybody how you went to expiration one more time.
Yes. So the Theo zone. So this is Theo, and then
where are you first? Are you in the table mode? Are you in the curve mode? You're in curve mode, right?
Curve, and then analysis. You can't see my big pointer?
No.
How much bigger?
I just
What is yours bigger? Is yours bigger than that? Huh?
The apple doesn't fall far from the tree. So if yours is bigger, mine's bigger. You went to the curve mode. I was just going through the steps. You went through the curve mode, and then you went to what? Analysis?
CO will change based on whatever adjustments you make to the trade. I can show this on the right side. So like if we go to closer to expiration, you can see this change. And this is just me fast forwarding. E-mini's up 50 now.
I got a screen. I like it.
So
you go to Theo, and then what do you do?
So you go to Theo for which is your theoretical at expiration. I just wanted to show that this is basically an at the money straddle or an out of the money strangle. It's kind of how this risk profile sets up.
Very nice. Good job out of you.
But I like it. I'm playing the upside. I'm locked and loaded. I'm short a put, long a call from a call diagonal spread. So I've been scalping in and out of short calls. I could probably actually put one in.
Sweet.
205. So, I mean, you think it gets back to 200? Is that the spot?
Back to 200. I mean, I don't know if I would put on that spread if I thought I was going to get to 200.
No, I know. Not in G's. We're out of G's. Okay. All right. I just sold a call against the, I'm long the December 95 call. That was part of a call diagonal spread. I just sold the 205 call against it in the weekly at $1.24. I bought it back yesterday at $1.08 or something like that.
Sweet.
So just scalped that a little bit into this.
Look at you. Good work out of you. Good work out of you.
Thank you. Cool. So we're going to pass on that one. Oh, man. Everybody's looking at the Bitcoins. Bitcoin stuff. What do we got here? So Tevin in Huntington Beach. NVIDIA spread that I did the video on. It's moved about $1.
So what'd you do in NVIDIA? You sold calls. That's.
I'm short a put.
So you're just selling a call above.
Yeah, I got it. Short-term call.
So it's a hedge.
Yeah. Caps the upside. So I'm long the 195 in December, short the 205 in the weekly. So if we get an explosion back to 210, I miss out on four.
Right. Not a new trade is all I'm saying.
Not a new trade. No. So that's part of the existing. But I'm long. I got the 175 puts. I'm locked and loaded.
You think you should roll up your 0 day on the 5?
Oh, yeah. What are we looking at there?
On the 585 puts. I mean, 585 puts are now trading for around 260. Probably going to have to move it up.
You want to roll up just the puts?
I think you just move the short strike of the put up to like the 62.20 or something like that. I use more buying power and so I'll put it.
So you're trying to,
I'm trying to get another 10 delta.
Yeah.
Trade or so. That's what I do.
Yeah.
But it's up to you. You got to be your own man.
You said the 66.20. I guess that's it's an 18 delta. You should be, one standard deviation. You uses a lot more buying power, so you're going to use
of course you are
$1,000 more.
Yes. Yeah.
All right.
Very good.
265.
Very good. Very good.
I long IBIT short MSTR Tevin as far as the trend will allow.
Now you have to cancel your GTC that you had in, otherwise you'll get filled on that at some point.
I didn't.
Probably not going to want to do that.
Another problem with GTCs.
People forget that they're there.
Yeah.
Cautious. So you got to forget that. You got to cancel that.
Yeah.
All right.
Because GTC is really its own order.
It is its own standalone order. It's not It's not looking at anything. It's just doing its own thing.
Yes.
That's right.
Good call.
Yeah, you're welcome. That's what I do here. I do good calls. So your whole credit that you received, I think you did 470, right? The first time? Oh, no, 415. You did the other one, right?
No, I did 470. Yeah, 470
you did
plus 265. So we're at like 750.
Right. So now you could, so you would still look to take your same buck or 80 cents, 50 cents, dollar, whatever you're looking to do there. You're probably out $2 or $3 on the overall trade as it
$2 right now.
As it stands. Yep.
So you want to do like $6.80 puts you at like I mean that's kind of like a scratch. You make like 60, 70 bucks on it.
Yep.
Do 675.
Yep.
I'm just gonna let that.
Or you do nothing and you watch the market. The market sells off a little bit. Then you have to do something on the call side.
Well, you don't really have. Well, I guess you have some risk on it. Got $700 of risk on the upside.
Yes. Yes.
Risk is downside though.
Yes. Risk is to the downside. Even the S&Ps are up 57. You're okay right now.
This is a expensive trade to put on long IBIT, short MSTR. I think you could do this via options if you want to sell an out of the money call spread in MSTR and like buy IBIT. I think that's interesting. I'm already long IBIT, so I'm playing this to the upside. But I get what you're playing here. I'm gonna pass on this one. It's hard to do via shares just because it's you got to notionally weight them.
Yes.
Yes. MSTR typically has higher volatility, so there's just a little too much going on here for my liking. So I'm going to have to pass on this, but I kind of have this.
Yes, you do. You do kind of have this. Yeah. Yes.
Next one, please. Amazon bullish December, January. Calvo George, Reddit. Amazon bullish based on Christmas sales.
Beautiful.
We're already talking about Christmas.
See how quickly that bit you in the butt?
So I'm with you. I'm short the 220 puts, and I have a diagonal spread that's around like I'm probably out like $100. I'm out a couple $100 on that diagonal spread. But I'm with you. I'm long already. I'm short the at the money puts, the 220 puts into this down move. Stock has reversed, much like Oracle has reversed basically its whole earnings pop.
Right.
Kind of back to an interesting spot here. So if you were smarter than I am and waited for this move, or luckier maybe,
or you knew
that this move was coming, today is a perfect time, I think, based on what we've looked at over the last couple weeks.
This is correct.
So I like it. I'm already in it, so I'll consider that a yes. But I already.
We're with you.
Yeah,
we're pulling for you
at worst prices.
At worst prices, that is correct. You win.
Next one, please.
I mean,
funny. We're basically thinking the same thing on most.
Yes.
All these trades, like the peeps know.
They do know. They do know.
Peeps are seeing the same things we are. Pan W neutral. Abhishek.
Don't ask me. You're better than me.
San Mateo. Okay, looking in the weekly. Johnny account, so no naked stuff. Sometimes you like a little naked stuff.
Sometimes I like it. Yeah, sure. Sure. Don't we all?
Oh, we got 60. Did we get 6,700 here?
99.50.
Oh, they can't do
almost,
it. They got to torture us.
That's right.
Come on, isn't that where all the stops are?
That doesn't. It never worked and still doesn't work.
I'm joking. Pan W. Okay, so we're going neutral in the weekly. So you want to do like an instant pain, instant gain type thing. We want to make this Johnny trade approved.
Johnny approval?
So some of these, I mean, yeah. You looking at these bid-ask spreads? They're not great. They're like, so my reservation here is I would rather go to NVIDIA.
Exactly what I was, you read my mind, exactly what I'm going to say.
Yes. If you're in a Johnny size account, one of the more important things is liquidity. If not the most important thing, because you're not trading as much as I'm trading, and your positions are on for a little bit longer duration. I know we're looking at a weekly trade here and an earnings trade in general, but if you're giving up 5 or 10 or 15 cents, and you might not even know it just because the mid price, you're getting filled at mid price, but you're giving up 5, 10, 15 cents on these bid-ask spreads. Over time in a $5,000 account, or a $10,000 account, or even like a $20,000 account, it really, really adds up. So you got to really focus on liquidity. So I would say if you are in a Johnny size account, go to NVIDIA, do a $5 wide iron condor, 20 delta short options. It's going to trade around $1.50. Do that in the weekly, and you'll have I think that's a better trade for you rather than Pan W.
I agree with you 100%.
So
good work out of you.
I'm going to pass on this one because I already have the NVIDIA position. I'm long. So I would lean towards just selling a put spread. But if your decision on NVIDIA is neutral, go for it.
Very nice.
Cool. Next one, please. Lulu, neutral.
Ooh, Lulu.
You don't like this. Earnings play with minor 5 delta. So this tiny, tiny little 5 delta trade. Did they already have earnings? No, it's 19th after.
That's correct. That's
Who
correct.
the hell is thinking about Lulu earnings on a day like today?
December.
The world could end today, Roberto. NVIDIA is going to decide the rest of our future here. Okay, so earnings play. Sell open the 145 put, and then we're buying. So 140.
Bitcoin catching a little bit of a bid, only down 600 now. Is down almost 2%. It's down 0.5% right now. Just
Okay, I see what they're doing here. So you're doing should be $600 in credit. So you're selling a put and doing a call ratio spread here. Are you doing this in the weekly? Probably not. 140. Oh, I'm looking at NW. God. All right. Oh, where's my help here? Where's my what the hell? My God, you turn your brain off over there? What happened?
So sorry, son. So sorry.
140, 190, 200. So we're doing this. The 190, 200. This will trade. Yeah, you're right. About $6. So 1 by 2, you're selling the put at about $3.65. You're doing the ratio spread at about another $3 I'm going to move this ratio spread to basically do this at zero, at basically a scratch on this ratio spread. That's how I want it to be as wide as possible and have as minimal risk on that one side. You're basically selling the put at lows. Like that's kind of your thesis here was a small long delta. I'm going to be 9 deltas versus your 5 deltas. So I'm getting a tiny bit more short delta. I'm giving up a lot of that credit via the call ratio spread, giving myself a lot wider of a range. So I'm going to the 185, 200 on the call side. If you do the 180, 200, do we do the 180, 200? No, we're going to collect the credit. 185, 200 on the calls. These markets are wide.
They're
dollar wide. This is certainly not Johnny approved.
Not Johnny approved.
I'm going to try this at 5.
Actually, you probably shouldn't be doing it if you were.
Well, you know what? We didn't get a lot of these on, so we're putting risk on, Pops. Come on. What do you think we get filled at? 80 maybe?
Not a good price, and you're not going to be able to get out either. Hate the trade.
Perfect. All right, I'm going to put this in at 475 and see if we get filled. That's where the mid price have been floating around. Lulu's actually rallying here, which is going against my position because I got some long delta. Lulu up $2 now. All right, we're going to put that in and try and get filled on that one. Next one,
Try
please.
as we may.
QS. Oh my God, I haven't thought about this stock since this was one of the SPAC battery EV.
You were all in this at the time, yes.
Yeah, I think we were YOLOing this one.
Yes, you were YOLOing it. This is when it went from like $6 to $15, back down to $10, up to $20, now $12, $13. What are you thinking?
We caught all the stops at 6,700.
Yeah, and now we're 67.02. Really caught them.
Oh God, I don't know. I can't sell puts in this.
Can't what?
I can't sell puts in this.
Yeah, did you look at the markets here in December? I mean, they're not horrible.
US, they're not that bad. They're
good. Yeah. But do you have an opinion here?
I don't know if I
Ivy rank a 60 here. It is high.
You do this small.
What do you want to do? They're bullish.
They want to sell the 12.
Down 23 cents. It's been down since the market started moving down November 10th or so.
All right, we're going to do this very small. Tiny baby. 108. We did the 12 strike puts in December. I'm with you, Mike. This one bites me. I'm coming for you.
All right, beautiful.
Last one. Tesla bearish December. This is the nerd on Reddit.
What do you
Short
think?
Tesla and a bunch of high beta tech and bio stuff without getting my face ripped off.
Oh, nerd.
That's what they're trying to do. January, December put diagonal. Ooh.
Oh, nerd.
Vol coming in a full point today.
You never got filled in Lulu, did you?
I don't think so.
No, okay.
No, I still got the Lulu.
Right. QS is your last trade.
The Lulu, not Delulu, as the kids
Sorry,
say.
the Lulu.
Do you know
the Tesla?
Do you know Delulu? Delulu?
Do a loopy?
Delulu.
No.
What the kids say. It's like delusional. You know, like you're crazy.
Oh.
Like you're trying to get long QS?
I'm still on FERDA. I'm sorry.
FERDA?
FERDA. I'm still
yeah.
on FERDA. I'm still trying to learn how to use that in my sentences.
All right, do you want a short Tesla here?
Up $10? No.
I don't think so either. IV rank of 18 too.
It is almost 2.5% move, but I mean, it's down from almost 460. I don't think so.
I'm gonna pass on that one, Mr. Nerd, on Reddit. But thank you.
Mm-hmm.
We didn't do this. This was not.
Well, I mean, you got everything moving 1% here to the upside. Every time we did this, everything we did, we've been buying.
And yesterday we were like 1% to the downside and then finished flat.
Yes.
So we've had these. People are looking at things and getting bullish or bearish, and the stocks are vastly different prices today.
Yes. And we did a lot of things at advantageous prices over the last couple of days. So we've been good there.
Yeah.
So
no high fives.
No. I know. So we didn't put on. So there were a lot of bullish trades in here, except for the last Tesla one. So
yes.
Let's see what trade approval we got. You didn't do that, but you didn't do ARC. But you couldn't trade ARC. I don't even give you that one. I wouldn't count that one against you. NVIDIA, we don't do those back spreads like that. We don't buy more units than we sell.
Yeah.
They're playing the upside, but a huge move.
Yeah, with no risk to the downside.
With no risk to the downside.
Which is basically just buying calls.
Yes, basically just buying calls.
You got that weird range where and then you got assignment risk because the shorts are in the money. So you got to do something with the trade.
Not something.
I get your thinking. It's just.
Yeah, I get you thinking too. Look at volatility in by 5 cents, 20.80 here, and then you didn't do the
5%, $1.20. Yeah.
$1.20, 5%. Yes.
Is it done?
Yes.
Can we get our 7,000 hats back out?
Can we get our 7,000 hats out?
For E-minis.
We could. Well, yeah, we're 706. I mean, yeah.
No, I mean 7,000.
Oh, 7,000. Oh, you're going to do that already?
Ready?
I mean, we were crashing just a day ago. Hold your horses there, my friend.
Okay.
Just be nimble is what you want to be here. All right, good job out of you. We're going to take a quick 90-second break. We're going to come back. We got Jacob, the skinny on options math. I mean, found these messages back in 90 seconds. Tasty Live.
Sorry for keeping you waiting, Jacob. I know. It's my bad.
He'll be all right.
He'll be okay.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
'Trade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Back, son, but you know what that means. With the E-mini S&P is up 62. NASDAQ, the leader in the clubhouse, up 1.5%. The E-mini S&P is up 1%. Russell up 1%. Dow only up a third of a percentage point. We got Mr. NASDAQ himself because he's always a leader. That's right, my man Jacob. How are you? Skinny on options, man.
I don't know how I feel about being Mr. NASDAQ.
Sure you do. Sure you do. You want to be Mr. NASDAQ. What else would
Truly,
you
I'm
be?
the tech stock of this.
Yes, you are. You are, for sure. For sure.
Highly volatile.
Mm-hmm. How's it going, my friend?
Pretty good. Pretty good. How about you guys?
Good. No complaints. No complaints. Everything all right.
Volatility coming in, a little bit of a bounce. This is.
I mean, the market is doing exactly what everybody around here likes, which is big ups, big downs, big ups, big downs. In the end, about where it was.
It's perfect.
For the most part, yes. For the most part, I mean, I think
when you're short volatility, it's nice.
Yes.
You got these whipsaws
when it works. Yes.
And you size appropriately.
Yes, and you size
Sure.
Yeah. There you go.
Always a big key here.
Good job.
All right,
my man. What do we got for us today?
Let's get into the skinny. We're gonna talk about some of the higher order Greeks like gamma, relate them to option prices via what's called Taylor's theorem, Taylor series. This is sort of around the time in the year where I think that intro calculus classes are getting to this topic. So I like to try to line it up in case we got any college freshmen in the audience.
To really torture them, because when they have a moment to get away from school, now they're getting this, and
they tune into tastylive.
Yeah, they're like, I want to see some trading, and then they're like, oh no, I can't get away. More calculus.
No, calculus is everywhere. Calculus.
We thought this was Taylor Swift. I thought you were going to.
Yes, I did try to cram a Taylor Swift joke into the slide deck, but I didn't quite.
It was too hard to do. You're only a mere mortal.
Throughout the piece, try to look for where we can get a Taylor Swift gag in, because it's there. No, it's actually Brooke Taylor was an 18th century mathematician. Who this is named for?
Nice.
It was named 18th centuries. But yeah, let's go into it, and we'll sort of see what's going on. And the key thing here is that delta is by itself not enough. And you can refine it by adding gamma, and then that is together still not precise, but probably good enough.
Okay.
And we'll sort of work out in with more precision what I mean by like not enough and good enough. So
let's see.
Firstly, we'll start with delta not being enough with a sort of a toy example. We'll return to this example a few times. So right, we've got an underlying that's $100, and we're trading it at the money, call it $3.50. If the underlying gains $2, what do we expect the option to be worth? Well, if you're just looking at delta, you think that the delta of an at-the-money option's about 0.5 or 50 delta. This is a little bit of a language issue that a mathematician will say that the delta is 0.5 because it's every dollar that the underlying moves, you expect 50 cents in movement. But because traders don't like talking in fractions, they generally multiply everything by 100 and call that 50 deltas.
Okay.
There's not a problem. It's just worth being a little bit careful about when you're translating between traders and mathematicians.
Okay. I'll remember that the last time I'm at a mathematician party.
Yeah. But reality is that the option is actually going to move a little bit more than that, right? So perhaps it moves perhaps you find it at 466 after the move. So there's like the 16 cents in sort of mystery motion that wasn't accounted for by the delta approximation. And so where is that coming from, and how do we incorporate that sort of relatively easily into our arithmetic?
Okay, let's see.
So the key thing is that delta was itself not constant, right? It might have been 50 delta while it was at the money, but then as the underlying went up, the option became in the money, and in the money had a higher delta, so the delta changed. Right, that when the spot price gets to 102, maybe if the gamma was 0.08, then to do another first order approximation, we'll say that the delta should have changed by about 0.16 and wound up with 0.66 deltas at the end of the day. And if we had 50 deltas at the beginning and 66 deltas at the end, then maybe we'll just average those two and get them. We think it had about 58 deltas sort of throughout the move, right? It started off a little bit lower, ended up a little bit higher. 58 is a nice in the middle number. And then the extra 16 cents is exactly what you expect, right? We say we had about average of 58 deltas on a $2 move, so we gained about $1.16. So delta alone underestimated the effects because it neglected gamma. So now we're going to go forward and be more precise. This was an intuitive wishy-washy way to get the idea of you use half of gamma to anticipate the average delta. But to be more precise, let's go forward.
Okay, I like where you're going so far. I don't know.
We're
Not so sure about the formulas, but I like
double check. You don't
like what you're
have the
saying.
right calculator out with you.
Yeah. Right. So there's two ways to think about it. One is the change in the option price is going to be the change in the spot price, that delta S, times the average delta, right? So delta plus half of gamma times the change in price, because that tells you how much, right? Full gamma times the change in price is the end delta. No gammas is the initial delta. Take the midpoint point, you get half. But now I'm going to pull those. I'm going to distribute the multiplication over the addition, pull them out into two terms. So we've got the delta term, right? This delta times the change in price. That's the part we've been using the whole time. And then this extra term, which is half gamma times the square of the change in price. Right, and we're going to call that the gamma effect on the price change. These two things are exactly equal, right? All I did was distribute multiplication over addition. But the second one is the one that's going to generalize a little bit further out. It's going to want to get us to further refinements in what we call Taylor series. Let's go forward to the actual math slide of the day. So we give this credit to Brooke Taylor, an 18th century mathematician. Newton had a very similar result. But because he was the inventor of calculus, or one of the two inventors of calculus, he didn't actually use calculus in putting forward his result because no one trusted calculus yet. And so he has a really much more cumbersome way of going about doing these computations. So we give credit to Taylor for coming up with the smooth, nice way that we all use it these days. And it's a fact about what are called analytic functions. Analytic is a stronger condition than smoothness. It's very smooth. Pretty much any function that you are familiar with is analytic. All the polynomials, all the trigonometrics, all of the exponential functions, they're all analytic. Mathematicians get into some really weedsy kind of corner case kind of functions where you can get to things that are smooth but not analytic. We're not going to worry about those. The canonical example is e to the minus 1 over x squared, which at 0, all of it is continuous and differentiable, and all its derivatives are 0. But because all of its derivatives are 0, but it is not identically 0, it's not analytic. That's for your counterexamples lovers in the audience. But so Taylor says that you can approximate you can get exact forms for an analytic function by taking its value at a specific point plus its derivative at that point times how far you moved away from that point, plus half of its second derivative at that point times the square of how far you moved away, plus a sixth of its third derivative times the cube of how far you moved away, et cetera, et cetera. The nth derivative divided by n factorial times the nth power of how far away you are from where you took the derivative. And the actual proof for this is just an expansion of the thing we did in the last slide, where you keep going, okay, but gamma should have changed by an amount that's given by the third derivative. So how much is the average gamma? How much is the average one of those? How much is the average one of those? But to give us sort of a much more hands-on example here of what we mean by we can approximate it, I've got this graph here. There's the blue curve that's a sine wave. That's very familiar to people probably. It's very regular. And then I've got this pink polynomial. And this pink polynomial is the first three terms of the Taylor series for sine. So it's x because sine of 0 is 0. Derivative of sine is cosine. Cosine of 0 is 1. So 1 times x. Derivative of cosine is 0. But then we get to the negative term, negative x cubed to the 3 factorial. 3 factorial is 6. Plus x to the 7th over 7 factorial. 7 factorial is, I should have done this beforehand.
Yeah, you should have.
5,000. It's 7 times 6 times 120. 42 times 120. Yeah, it's like 5,000-ish. It's very big.
It's very big. It's very big.
Those denominator terms, the factorial grows very, very quickly. So you very quickly don't need that many terms to get a good approximation. And you can see here that within that first oscillation of sine, right, the one around zero, this polynomial matches the sine wave very, very closely. You like visually cannot distinguish what's going wrong with it until the sine wave turns around again in the function, because it only has 3 polynomial terms, it can't do any more terms, so it goes off to infinity. But within that regime, it's very, very accurate, even going only out to 3 terms. Because the next one's going to have a 9 factorial in the denominator, which is going to be like 35,000, 40,000, something like that. It becomes like almost negligible very quickly. So let's put this forward into sort of options framework. And note that these like FNs, these higher order derivatives, are not that alien to an option trader, because we have delta and gamma, which are the familiar ones to the Greeks. And they're just a slightly change of notation from this sort of more abstract general notation of FN. Because gamma is the derivative of delta with respect to the spot price, and delta itself is the derivative of the option price with respect to the spot price. So that's the second derivative of the spot price, well, of the option price with respect to the spot price. And just to put that into the notation, that's either C double prime or C parentheses 2. The third derivative of option price, right? So the derivative of gamma, right? Gamma is again not constant. The derivative of gamma with respect to spot price gets called speed when it gets used at all. But like I was saying, when it comes to the denominators get very small very quickly, and so speed is almost never actually necessary for a trader. Delta itself will be off by a good deal. We'll see in a couple slides about that. But if you use the delta and gamma formula together, the difference between that and the real result is going to be very, very small for anything but the largest moves. Right? Even up to like a 20% move in the underlying, you're expecting like less than 1% error. So it's really not necessary to include the speed term, and certainly the ones out beyond there don't have names, but they exist. They're really minor adjustments. Yeah,
sounds good to me.
We'll see if we get to some examples. All right, this is just translating the Taylor formula, which had these higher order derivatives in it, just into option trader Greek language. Right. So here on the top, I've got it written out this is Taylor's series for the price of an option about S. But if I just rewrite it in terms of Greeks, right, rather than writing derivatives, I write deltas and gammas and speeds. We get this term. And so here we see that like the speed term has both a 6 in the denominator, right? The gamma term has a half in the denominator and squares the change in the spot price. The speed term has a 6 in the denominator and cubes the change in spot price. So let's go forward one, and we'll sort of see why that means we can pretty safely neglect the speed term. We'll work out some specific examples.
Okie dokie.
John? Yeah, perfect. Right, so this is taking our example where we have, a 350 at the money call with a 50 delta and a gamma of 0.08. Right, so now if the stock price moves, then by $1, the delta predicts that we're going to move by we're going to wind up being worth about $4, right? The 350 plus 50 cents. But if you factor in the actual gamma, you get a 4%, 4 cents increase. And that's very, very close to almost exactly accurate. And gamma amounts for 7% of the change from gamma is about 7% of the change from delta. So if you neglected it, you're not that far off, but you're starting to notice the difference, right? There's 4 mystery cents. At a $2 move, it becomes 16 mystery cents. At a $5 move, it becomes, an actual dollar missing, right? 29% difference. And at a $10 move, almost a third of what's going on is due to gamma. Right, and just to keep this in sort of an intuitive sense, if you have twice as much move, you get 4 times as much gamma effect, right? Because of the square in the power. So it's really large moves where you need to remember to factor gamma in. And then the thing also to keep in mind is that, right, if you have very small gamma, you can probably neglect this. So if you have a very far out of the money option or very long until expiration, then you expect the gamma to be low. And then delta is very reliable. Then you can just use your delta estimates for how you think things are going to respond. But as you get close, if you're trading close to the money, or your 0 DTEs, you're going to have large gammas, and you're going to want to include the gamma effect in what you think is going to happen, how you think your positions will respond to price, right? You want to know if you're actually bearish or bullish in underlying. You can't just look at your delta. If you have a lot of gammas, you'll wind up with that. And remember, all long options have positive gamma, and all short options have negative gamma. That it doesn't matter if they're puts or calls; it's universal that way. So, and this also means that your defined risk trades also tend to have much lower gamma, just because the long options and short options will have their gammas do a little bit of cancellation. But your close to the money ones will have more of an effect. And that's it for today. We talked about Taylor series, we talked about gamma and delta, we mentioned speed and why you don't have to think about it ever. Yeah. The key things to keep in mind are that option prices are not linear, and so your simple approximations can break down, right? Such as, just delta times change in price. The Taylor's theorem is a classical analytic way to relate the values of analytic functions to their specific values and their derivatives. Thanks to the Greeks, option traders are pretty familiar actually with higher order derivatives, even though we don't talk about them in those terms. If you're used to using delta and gamma, then you're there and you can accurately anticipate how option prices are going to change. If you're a really active trader, you can get away sort of with only minding your deltas because gamma only comes into play in a large underlying move. And if you're sufficiently attentive to come in the middle of big moves, then your delta approximations are going to be good. But if you want to, be prepared for either sudden surges or dips, or, maybe you're going away for a week, then it's good to be extra careful and check in with your gammas before you, leave a position alone, because just your deltas is not going to fully report your sensitivity to the underlying. I don't like saying it as risk because it could be good for you, but it's your sensitivity to the underlying.
Well, I'm glad you didn't touch on my sensitivity because now I know I made the right decision when I wanted to be a lawyer and not something that had to do with math like you did. Even the S&P.
I'm just hoping there's no pop quiz afterwards.
No pop quiz.
I think I need to.
Although I did catch up on all my emails.
I need to watch that. That was a lot.
Even the S&P's got up to 6709. Interesting. That's about the area from yesterday's high. And then we fell off from
what are you,
right
a
on
technician?
No. But when you have a 1% move and you have a $54 expected move for the full day on the E-mini S&Ps, and you've got volatility contracting by $1, I would expect that the highs are in for the day. That's what I'm looking at. Now, you have a small SPX position that we rolled up some puts on, but you still have short delta on it. So I like that position for the rest of the day. That's where I was going with the whole thing.
With your little bit of technical analysis.
A little bit of everything in there. A little bit of subjectivity to a position.
Are we above the 50-day now, or?
I believe we are above the 50-day. I'll find out soon. I'm sure somebody will let me know.
Got some tea leaves in the bottom of a cup to read next. Really, we're going to see the future.
Yes. I'm going to take a quick 90-second break. Bitcoin sold back off. It's down 2,000. That's a 2% plus move in Bitcoin. Ethereum down almost 4%. So those still remain very weak. Gold caught itself a little bit of a bid, although it is about 15 cents off of its highs. It's still up 52. It's been pretty steady for most of the day. Bonds have been a non-event. They're down 116.21. Jacob, thank you so much for your time. I really do appreciate it. I have more information. I don't know if I learned anything.
Oh, I'm so sad. Hopefully somebody did.
You got to rewatch.
We'll be back in 90 seconds. We've got a bunch of people coming in from the trade desk.
It's going to be crowded.
We'll be back in 90 seconds. Peace.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. Oh, market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Nikki, we are back some, but you know what? All that means nothing right now. We've got this man. My man Q. What's up, brother?
Fellas, how's it going?
Yeah, good to see you. Everything well?
Yeah, everything is good.
Everything good in the world again? Even the S&Ps are up?
Yeah, SPOs are up. You know, everything is good. Everything is good.
How do you feel today? Is today Armageddon or is this bad?
No, today's been pretty fine. Desk has been pretty chill today. I mean,
with NVIDIA coming up, everybody been talking about like this is the end of the world. You know, it's all fake. Oh.
MP.
That was part of my government portfolio dip buy the other day.
Ooh, good job out of you.
Yes, you must watch the government.
MP up almost
What's that
$7.
CEG doing?
What is what?
That CEG? Oh, it's up 20 now. Damn. That was another one. That was Bonetta had that on the.
Yes.
What was that? What was that? That was a rogue ding.
It was a rogue ding. It was quite low.
Yeah, it was low ding.
Hey, take a fill, Phil.
Everybody's talking about NVIDIA. This is like the
Yeah, we've got some
make or break
earnings
moment.
coming up. Yeah. So we got some earnings coming up. I mean, NVIDIA has not been performing very well recently, and so there's a lot of concern to that, right? But with the market going up, I mean, sentiment isn't as negative as it was in the past days since we've gotten an uptick today. But yeah, customers are definitely still wary, sizing down a little bit into the earnings, even if it means like having to pay a debit, you know, taking a loss. Small loss is better than a big loss.
Yeah.
So people are adjusting their positions based on that.
I mean, that's nothing profound. A small loss is better than a big one. I mean, did you learn that from your dad? Yeah, of course. I mean, Mr. Obvious. Let me give you that.
Simple.
Sure. More importantly, if you've been fighting from a big loss and you have a smaller loss, the stock doesn't care. Like if you get to positive, that means you beat the stock you won, or you lose more than the stock beat you. No, it's your money. It's your risk. If you've been fighting something, put on a higher probability trade. Doesn't mean you have to take what you have off, but get out of that 50-50 shot. If you're about break even, you probably have a 50-50 shot. Put something that you're more comfortable with.
Yeah, and especially if you're trading with like a mathematical model, you know, you don't need to like get a couple extra pennies in there to get the win or something like that.
Yeah, you need a mathematical model. You watch that segment with Jacob. We just had that one.
Yeah, if you need a mathematical model, we got one for you.
My brain was a bowl of mush afterwards. that was something.
No, his segments are interesting. I mean, they're a little above my head, of course, with the actual math he's going through, but taking away the concepts from it are always very interesting.
Yeah, I agreed with you.
He's a smart guy.
Yep,
he is
for sure. And so I've got some real business to actually talk with you guys.
Wow.
Because we've got some commonly traded stocks that are going through some corporate actions, some forward splits and reverse splits. So we've got, here I see TQQQ is doing a 2-to-1 split. And so that would be if you have 100 shares, that will turn now into 200 shares.
At a lower price.
At a lower price, correct.
No free money glitch here.
No free money glitch. And then so for some reverse splits of some commonly traded stocks, we've got UVXY doing a 1-to-5 reverse split, as well as SQQQ. And so if you had 100 shares, that will now be 20 shares at a higher price. So it's all equal, but if you notice your positions change on the platform, that is why.
Yeah, the options get goofy in a UVXY.
Yeah, the options will be adjusted. We'll go to non-standard options now, and you can't open new positions in non-standard options. So if you're looking to roll or manage your position, you can always close, but you just have to open the new position in the standard options.
It's tough because I think a lot of people, if they're trading in those right now, it's because of what's happening this week. You have NVIDIA, you have FOMC, and all that is today. So like. Yeah. I think a lot of people, and hopefully if you're trading these products, you're not doing like spread trades, because the dynamics of these products, specifically the volatility ones, is that you want to be taking directional bets here, because these products, they drift lower through overtime.
And that's why they have these splits.
That's why they have these splits. And split adjusted, they're like billions of dollars. They've never actually traded there. They just go to zero over time. But these things, if you're trading them, you trade them as a hedge, an upside play on the week, maybe for 2-3 week period, but you can't continuously have this stuff to long.
Yeah, these types of leverage products aren't meant for longer term trades. That's not the use case for them. That's not why they were invented, really.
No.
Good point.
E-minis only up 46.
Ah, pretty good, right? I'm a decent tape reader. I mean,
you are.
Yes, 65% of the time I'm 100% right.
There you go. Like Black Panther, or what is it? From
Ooh, I don't know. I know what you're talking about.
From Anchorman, wasn't it Black?
I don't know. You're trying to date me now.
Yeah,
I don't know that stuff.
Anyway. All right. Well, while you look for that, we've got other business to get down to. Top 20 symbols going through the system and their IVR. At number 1, we've got Google at a 37, NVIDIA 34, Target 32, Tesla 17, Amazon 31, Goog without the L 38, Meta 25, IBIT 72, GLD 59, Palantir 23, TQQQ 47, Costco 45, AMD 43, Apple 16, Micron 76, SLV 58, Oracle 97, MSTR 36, Microsoft 25, and Netflix 24.
Good job out of you, and good job out of you and your management. Now you have a decision to make on your SPX trade.
SPX coming in.
You're basically unchanged on the trade. So now,
all right, is a small loss better than a big loss? It's in theory, of course, it's easy to say, but if you think finally the position's coming back, do you want to keep it on?
You're flat.
The real risk management is much harder to actually do than it is to say.
It is. So here we got practical
what a concept.
You had a $2 or $3 loss on something you sold for around $4, and now you adjusted it by rolling up the untested side, and you have basically a small profit to unchanged.
You got it. You're using.
There you go. Take a fill.
860. You probably made a couple of cents.
Did I? No, I think that. Yeah. Wait, what
did we do it for? 470 and 260.
So it's like $100 loser.
Oh, you took
$100. Yeah, $100 loser.
Oh, you took $100.
6, 7. So that's 735. So it's $120 loser.
Oh, I thought you had it unchanged. I never would have mentioned it to you. All right.
It was close. It was right there, but that's small loser, and you're using. We rolled up the put, which helped. The put roll up, even though we've gone down, has only cost us 30 cents, but we were almost fully in the money on that call spread.
Yes.
And that call spread was right in the middle.
Yeah, you needed the market to cooperate. You needed the market to come
but the
lower.
rolling up the put didn't hurt us, is what I was trying to say. It would cost you 30 cents to roll up the put, but it hedged you into that up move.
That's correct.
But now you're using $4 or $5 grand,
Very good. Yes.
Cool.
Good job out of you.
Thank
good job out of you, Q.
Thank you.
Very, very nice.
Thank you.
I have to let you go.
Yes.
Who is our next victim? What are you doing here?
What's up, guys? Next victim. I like that.
Ryan, what's up, my man?
How you doing?
Tell me about this crypto. It's sick.
It is, yeah. It's been chop fest hell.
It's got the flu.
Yeah.
Can't hold on to any rallies. I'm talking about Ethereum and Bitcoin right now. Anytime it raises its ugly head, it seems to get squashed. Everything else in the market really has rallied back, at least some. Gold is back to 4,100 off of 3,900. Even the S&Ps are just traded 6,700. They're 6680 and change right now. They're off of their lows of 6,600. Give me Bitcoin. Bitcoin is it's off of its lows of 88,000, but it's 90,000 off of its highs of 125. Help me. Ethereum doing the same.
Yeah, so big picture, these corrections, what you're seeing in Bitcoin down about 30-ish% right now, happen quite frequently throughout bull markets. Now, if this loses 90, we continue to trade lower. 75 is your big number from April. 0 ultimately is the bottom, guys. But I think when you look at the pullback here, certainly is related to the blow up in the market on Friday, the 10th of October. You completely saw, that this wipeout in terms of all the leverage hasn't been able to recover. I think at the same time, kind of look at how the market is starting to trade. It's a little bit weaker. Volatility has picked up. You've had a stronger dollar. There's questions around what the Fed's going to do, isn't going to do. There's just a bit of uncertainty right now. And I don't see any reason why you would get a sustained rally in crypto until that changes. I also don't think that this is something where it's like, oh, the thesis is incorrect. Absolutely not, right? In an extreme, where could it go? I mean, maybe 50, 75 is a big number. I think those present opportunities. Don't think there's a high probability that you get there. There isn't really a probability in the options market right now that you get there anytime soon. That said, I mean, you need to see volatility come back in. I'd want to see a VIX under 20. I'd want to see some weakness in the dollar. I'd want to see lower rates. And I'd want to see, Fed funds probabilities shift towards there's going to be a cut. Polymarket says it's about a 70% chance, but I think it's about 50-50 right now.
Yeah, it's about 50-50 on the
Fed Watch tool.
on the CME. Yeah, Fed Watch tool for sure. Yeah, which used to be closer to 70-80%.
It was 90% a month ago. It was almost baked in that we were getting cuts. I think that's some of what's been happening here is that the sentiment, obviously, in markets as a whole have been junky for the last couple weeks. Like there's not just the sentiment has not been good, but I think the liquidity question is one of the big overhangs here because that was a 3 or 4 cut swing. You're talking about like a 1 to 2% move in interest rates swing from the last month because we had 4 or 5 cuts to now basically questioning whether we're going to get one more.
Right.
So I think it's a function of liquidity ultimately, which is what's going to drive markets generally. But until you get that and those conditions change, maybe you look to sell rallies in here. You hedge in some ways through the options market. On the other side of that, you can go pretty far out right now. I've been looking at ETH options, and you could certainly get to some of these levels. But I would argue there's an opportunity to sell some premium. You look at the implied vol in ETH right now. You look at the ranks there. I mean, it's almost 90 on the short-term basis if we've got the slides here. So I think there's some opportunities there. I'm not necessarily looking at this and saying, okay, I would want to rush to buy put options. Not at all. But if you want to trade this and you think there's a lot more to go to the downside, you can sell futures against it. Obviously, you can sell calls against if you had IBIT or ETH, you can't sell calls against the underlying spot cryptocurrencies. But that said, in terms of expectations here, you're looking for about a $6,500 move in Bitcoin over the next week that gets you 85, 98, so not quite 100. About $300 in ETH, 2,700 to almost 3,400, and then Solana, SUI, and XRP up there as well. It's been super weak. I would argue that what you see here is driven probably more by short-term market structure than it is kind of underlying fundamentals. And anybody you listen to or anything you read, you look around, there is seemingly quite the disconnect today between what's happening on the fundamental side and kind of what you're seeing with short-term price action. What matters is the short-term price action. But for anybody that's looking at this from a maybe longer-term time horizon, I think you can find some opportunities as well. One thing I want to point out for you guys, maybe you've heard about the Uniswap fee switch.
Yeah, I've heard.
Okay, I want to walk through what this is, why it matters to DeFi, and again, why today there is a bit of a dislocation, in my opinion, that can persist for quite a long time, right?
Crypto winters.
Well, even in terms of things that are maybe mispriced over a longer term time frame, they can be accurately priced in the short term, but at some point that dislocation, I think, snaps back. Certainly from a valuation perspective, you can only go so long where you're generating real revenue and bringing in real money where the market doesn't recognize that or trades at a very, very low multiple. Yeah. So all that said, what's happening here is recently, you had a governance proposal from Uniswap to activate what's called the fee switch. Fee switch is in the code since the launch of the Uniswap protocol, but given the prior administration, the view around is this a security token, et cetera, and kind of where we are today, that isn't something that they ever move forward with. There's now a proposal which leads to a vote, and this is all through the on-chain governance. If you own the Uniswap token, you get to vote on this. The vote will likely be known, the outcome will be known in December. But what this is calling for is to activate the fee switch, which means that a percentage of the fees generated by the protocol will go to programmatically buying back and burning the token. So this is a way for, in the same way that if you were a shareholder, for token holders to accrue value relative to what the thing actually is, what the business is, right? Generating fees from decentralized exchange. We're talking about a protocol today that does right around $1 billion in revenue. And presumably that will grow if it can maintain market share and more people adopt DeFi, which there's, all signs point to that's the trend. So when you look at the impact here, and the other thing to call out is there's a retroactive one-time 100 million uni token burn as well. So that would reduce circulating supply at today's prices by about 16%. That's not the fully diluted value, but
it's like a share buyback.
It would, exactly. That's the way to think about this. And what you end up with, because there's a finite amount of tokens, 1 billion in terms of the max supply, you're looking at 2 to 3% annual disinflation in terms of the rate, or 2 to 3% supply reduction in the Uniswap token. Mm-hmm. Right now, this is about, if we look at what the fee switch is, it's anywhere from, on the low end, $200 million to $500 million in revenue that would be used to buy back and burn that token. What's really interesting about that is if you look at this and then compare the price from a kind of more fundamental perspective, right? What's the price versus revenue? What's the price to earnings ratio? These things versus fees is how you would look at it, are trading at 4 or 5 times, 6 times. And that's true of a lot of different decentralized exchanges. It's true of a lot of DeFi. So the point to all of this is that if this goes through, which presumably it does, creates a framework or a model for other similar real DeFi protocols, Aave being one of them, they could implement the same thing. And now that there's value that's accruing to the token holder, presumably at some point there's a re-rating in this space. Maybe it's not today, tomorrow, this year, but if we see DeFi grow, which estimated at current growth rates to get to 200 billion in the next couple of years, could these protocols, given the actual revenue they generate, get re-rated at much higher valuations if you were to assume a 15 to 20 time multiple?
That's cheap. I mean, people have no problem with Palantir at a 400 PE.
Yep.
In these the way you put context around this, I mean, this at 4 or 5 multiple that's not high. There's not a lot of stocks that are like that.
You can go to the Tasty Crypto website. This was in our recent newsletter, and you can see our base and bull case kind of valuation model there that we've put together. And in some extreme cases, you can get to a much, much higher Uniswap price, $100 or so per token by 2030. But if you just assume a base case that there's some moderate growth here, and this gets repriced in maybe a better market, at $7 today, there's a pretty strong argument that could be an opportunity. It doesn't mean it's the cheapest DEX token, but something to think about. When we're looking through, short term, it's pretty bearish out there, and the sentiment is pretty bearish. But where could there be something?
Good job out of you. I just reloaded an SPX trade. You could do it a little bit better than I did, or change the strikes if you like to. I went back to your $15 wide. I went below the lows for the day and above the highs for the day. Collected $4.30. It looks like it's about $4.50 right now. When I put it on, it was actually a 2 or 3 delta short. Even the S&Ps have sold off by about 10 handles from where I put it on, so it's getting a little bit long in there. Even the S&P's up 22.
Yeah, next time you announce the bat signal high of the day, you got to sling some.
All right, it's a deal.
Because that was a great call.
Thank you. I appreciate it. I will let you know. I am only one human here. I'm doing my own thing, your thing, my thing, everybody's thing.
Yeah.
NASDAQ up 160, Russell up 5, and the Dow down 125. Even the S&Ps down up 22, volatility up 45 cents. Bonds are up 3. Gold still holding on to its gains, but only by 27 over 50. We're not done with volatility yet.
Nope. Back.
Now we're ready for that choppy inside day, hopefully for the rest of the day. We'll take a quick 90-second break and come back. We got more Tasty Live with Liz and Jenny next. Peace.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics, events, and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Everybody, and welcome to the Wednesday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette is Jenny Andrews, and I honestly say it's a chill day in the market. It's pretty quiet around here.
Well, the spoofs have had a wild ride. Started around up 18. We saw them up almost as much as 70. Now we've got spoofs up only 26. So
I'm just saying the sound, the noise is very quiet. Yesterday we were here and you saw a little bit more activity. You do see people walking by. There's our floor official making sure everybody's got their coats on.
Well, are you surprised spoofs are only up 26?
No. I'm not. Let's see what the VIX, I mean, honestly, the VIX has been the biggest precursor to what's happening. We're still up 26. Yesterday, we sold off at the close during our show. We were at, a little bit at the lows during our last call.
Right.
And if you can't get enough of the two of us right now, we will also be on last call again today, where all eyes will be on NVIDIA.
All eyes will be on NVIDIA, but we have a very special guest today. Tim Knight is joining us on last call today, so we sent him a couple symbols. We did not send him NVIDIA because we don't expect him to predict earnings, but we sent him a few symbols. We'll be talking with Tim, Microsoft, crypto, CoreWeave. We'll see. We'll see if anyone has any.
No. He might not come back with any of those.
He may say, I didn't see anything on those charts.
Correct.
He might say that,
so
but we did send him some
might just
symbols.
be chatting with Tim Knight ahead of NVIDIA earnings, and it's okay. That's totally fine.
Yeah, so
I don't know if this is true or not true, Jenny Andrews, because yesterday was a crazy bonkers day for the two of us, just personally and professionally.
Personal fast market. Personal fast market.
So I did see somebody say, and I don't know if it's true, and I don't want to put words in his mouth, but I'm dying to ask Tim Knight, but I saw somebody on the chat say, "Be still my heart." This was yesterday. "Be still my heart." Is Tim Knight bullish?
Oh, really?
I don't know.
You know what? Sometimes he'll say, "That's enough selling for now," or "I think the selling's going to take a breather."
I'm gonna take it straight to the source. I'm going to take it to the source at 2:30.
And ask him if he's bullish.
Yes.
Are you bullish? So over the course of the last 15 years, are we in May, are we coming up on 15 years or 16 years?
Well, Jenny, let's do some math. Because it is
2011
to 2025.
Well, this is 2025.
Yes, it'll be 26.
So just coming up on 15 years,
It'll be
I think.
15.
Yeah.
No.
2011 to 2025 is 14 years.
Yes, we'll
to
be
2026 will be 15
No,
years.
but we were 15 this November. Yes.
I don't know. Well,
yeah, we started in November.
Did we have a 15-year anniversary party?
No, there was no parties. No parties.
Anywho, we'll ask Tim Knight if he is bullish right now, but we have heard him over the course of the last 15 years to have periods of time where he thought, there might be a break in the selling.
He's tapping out with the selling.
Yeah. Anyway, we have a busy show. There's a lot besides Jacob's study, which he's bringing another great study, and what's your assumption? There are a handful of things I want to look at today.
I do too. Especially, okay, now they're finally percolating. Now they're percolating. It's that back corner. It's that corner.
Hey, and you know how yesterday I kept saying, I see a lot of calls going up on the board, calls going up on the board. Yesterday, calls did lead puts. In the end of the day, calls led puts.
At the end of the day, they came in and won the race. That's awesome. Well, Frank the Great, I'm sure, will tell us if it's calls leading puts. We also are taking live tweets. Put the hashtag LIZJNY on that tweet if you want to see it live on air. And then the SIBO guys will also see it. I only say that because we put Jack Tucker and Blue Wackadoo up here one day because they can see it as well. And they were asking us about that.
I didn't know what SIBO guys you were talking about when you said they're going to see, the pit, the guys in the pit. Sometimes they'll kind of lean over and see what our Twitter peeps are up to.
They do.
Yes,
they do.
That's true. All right, should we pop into the platform, see what's going on?
Let's do it.
I've got Google up because it's a big mover today. Google up 5%, and you take a look at this move, it's making new highs in Google.
It's new highs on top of new highs. I mean, it had a big move. Was it yesterday or two? That doesn't look right. Why is your bar white right there?
Where? It's actually green, here, so it might just be the lighting. It's just the magical lighting that.
Well, it's crazy because there's two white bars on there. The rest are green and red.
Yeah, but they're actually green on my screen.
Okay.
It's just again, we've got some lighting masters over here.
We do.
They make us look 10 years younger than we
if
really
you
are.
can do that like that.
Anyway.
Yeah, so Google is, Google's leader in the clubhouse. Can we look at, if I may ask?
Sure, ask.
I'd like to look at NVIDIA, and I'd like to look at the VIX.
Last I looked at NVIDIA, it's up almost $5. NVDA, it is up $4.47.
Okay.
So it's like a little blip. We put on a bullish NVIDIA calendar yesterday. That was from a viewer, and it's actually, we made $60 overnight on this calendar. Earnings start tonight. Maybe we take this off, take the $60, and put on something else in last call today for earnings.
Can we look at the trade page? I just want to see. Let's assess the situation.
Yeah.
So if you look at the trade page, we're in the 2-day. Open that up. It's within, and I know yesterday it was outside the expected move for the cycle. But guess what? Markets move, as I tell my kids. So that's now within the expected move for the cycle. It's not bad to keep on. I think we keep our $60 and run like a thief in the night.
So we always have sayings of what you tell your kids. So you tell your kids markets move. But now what I love is that as they're becoming little adults, they're coming up with their own sayings that they tell you. What was the one today?
Oh no, trust me.
Trust me. Trust me.
That's not a saying. That's I hope you're watching this show right now, JD, because you are in trouble.
That was cracking me up. The trust me.
Trust me. I don't trust you. I don't trust you until you're 24 years old when your frontal cortex is fully formed.
Oh, jeez. All right. So, what do you think? You want to take the $60 out of this NVIDIA calendar? We only had it on for a night.
I do.
Yeah.
I do.
And we'll look at NVIDIA during last call after, when Tim Knight exits. First thing on the docket will be NVIDIA.
Yes. And there is a handful of other things that are tonight, and we'll get to Bob's list in a minute. Is there anything else we need to manage while we're in here?
Oh, okay. We've got a few things that are a little bit of a, I don't want to say mess, but kind of.
Talk to me.
Well, LE, live cattle, has not been going our way. We have a short put spread that's pretty deep in the money. I went to the trade page and I took a look at it and I saw, 16 days to go and this is pretty deep in the money. With some of these futures, you don't even know the pricing. It's like, how much is that spread? What's a $2 wide? And I was wondering how much do we have left to lose in this? And the way to figure it out would be if I looked at that call spread. If I looked at that call spread, how much is that call spread? So that call spread is $1.60. So if I know I can get $1.60 for that call spread, that means we've got $1.60 left to lose in that put spread.
Is that a $10 wide then? Is it $2 or $10 wide?
$3 wide.
Can you just do an out of the money? I just want to see an out of the money put spread just to see.
If we have $1.50 left to lose, oh yeah, it's a $6.50 wide, or 4, 5, 6, yeah, $6.50 wide. It's all coming back to me. When we put that $2 wide on,
Did you close one eye when you put that on?
This is really a $6.50 wide. So we have $1. This could be a max loss of $6.50. Right now we're at down $4.74 in live cattle. Live cattle, if you take a look at the chart.
Yeah.
I don't know.
I mean, honestly, this is defined risk. We only have a little bit left to go. I don't know that I want to jump in front of a moving train in live cattle.
Maybe we leave it. Maybe we leave it. Sure. Maybe we just leave it.
Yeah, I mean, I don't know that I need
16 days to go.
I don't know that I need to do anything in live cattle.
I know. I mean, what we could do is close this, save ourselves that $1.50, and put a new trade on in the 44-day, which is not too much of a difference. You see, 215 is the future price, and the 16-day, 44-day is 216.
Yes, we can put a new trade on, but a lot of times when it's a roll or something like that, we can close it and save ourselves $1.50. I'm fine with that. I don't want to put additional risk into live cattle. I don't know what's going on, and neither do you.
Why is this? Oh, because I was looking at. Okay, so I'm just curious. I'm just going to the new side, the new
$2
section,
wide.
and I'm sticking with out of the money. Maybe let's say 30 delta. So, or 35 delta, because we would need. This would be out of the money versus our trade, which is in the money. If we sold that 35 delta, $2 wide, we're getting $250. And then if we close ours, we'd save ourselves that $150. I just don't know if we should give ourselves some better footing. Those would be remember Kai, when Kai would come on with the old mechanics of no matter what it is, close it, save yourself a little bit, and reestablish with a.
This doesn't even have an IV rank.
I don't know I don't know if that's a glitch. It's not like it's IV rank a 0.
But I think we would have had, this was what's your assumption? This would be putting an additional $560 in risk. An additional $560 in risk.
Well, we'd take ours off.
Yeah, right.
So we take $150 out of that one. So we take we'd save $150. So I guess $550 minus that $150. So you're looking at $400.
An additional $400 in risk. I don't know. Like I said, I hesitate. There are certain products that I'm let's just keep going with it.
Yeah.
And then there's others I was this live cattle has never, cattle has never really been. This is breaking news, by the way. Frank Walsh comes in. SPOOs and SPX are puts over calls bigly.
Puts over calls.
Whereas Tesla and NVIDIA are both 2-to-1 calls over puts.
Okay. All right. Do with that news what you will.
I just like breaking news.
Breaking news from Frank. Thank you, Frank. Okay, so then we're going to decide to leave that. Now, the yen, the 6J, this yen trade, we had on.
I mean, if you want to roll it, I don't mind rolling it. I'm not trying to say.
No, just leave it.
I just don't think I'd want to put any more. I don't want to see lean live cattle anymore.
On here. Right. Okay, so 6J we had a put spread. Then TP was on, and he said, oh, I know you guys put on bullish trade and put spread, but I'm bearish, so let's add a call spread. So we added this call spread. We made $100 on TP's call spread, so let's just take that call spread off for $100 and decide if we want to leave that 16-day put spread or roll that put spread.
Perfect. I like it. So that's
this didn't go on as an iron condor.
No, that I agree with you. That didn't. Yeah. I agree with you.
So let's take off this call spread. We'll take $100 out of the call spread, which helped, right? That helped. And now the put spread, we could leave it. We could leave it in the 16-day. I mean, the yen is definitely at an looks like kind of an extreme. And if you know how yesterday, and I'm not going to spoil anything, but yesterday we were talking about losers.
Yes.
And how we would gladly take people's losers because then it means you're getting in a better footing.
Correct.
So today I heard Nicky Batista talking about how he's got a really big loser in Japanese yen versus the euro.
Oh, that sounds like a Forex pair.
Yeah, but you could see here, look at the yen, doesn't look good. Then if I go to
But you
FX,
remember the yen trend is your friend is the exact opposite in.
That was just 3 days though.
No, I know, but that's the charts are completely different.
But if you go to the euro Japanese yen, which he's taken heat in this euro Japanese yen, and you look at the chart, And okay.
That's what I'm saying. It's opposite. It should be opposite.
But that was just that was just like a Glenn 3-day study of after 3 days you could expect it to go. But it doesn't mean like forever it's going to keep going the same direction.
No. All I'm saying is the chart when you're doing 6J versus the euro dollar JPY, the chart will be opposite. Like you see the 6J is down like this, and this one, the euro is stronger than the 6J.
Yeah.
Yes,
when
the
we're
chart
looking
should
at
be
Forex,
opposite.
sure. Yeah. This chart. Right, the euro is going up and yen is going down. I mean, we see that. We saw that when we looked at the yen chart because the yen chart's at the very bottom.
Yeah.
But my point here was that when I hear people talk about a loser, that's when I think, oh, maybe I'll jump in because you're getting in at a better price. I thought.
But we have that by being long the yen.
But if we wanted to just take that off and just get into.
Oh, you want to switch it to
if
something
you wanted
else.
to switch it. If you wanted to switch it and like just be, put in a short like euro JPY Forex pair.
Sure.
Because there's no extrinsic value helping us anymore.
Sure. What is but this got a 37 rank. So this is something I might, and that's I think why we got into the yen because you're looking at a 37 rank. So maybe you roll it.
So here we have this 16-day yen. If we rolled, and again, we're not going to be able to roll this. We'd have to basically close it. So we're down $337 on this trade. We made 100 from TP's short call spreads. We're down 227. If we close it and take the 227 loss and get in with a new trade in the 51-day, we could get 225 risking 400 or 387 risking 862.
I like the narrower spread.
225 risking 400.
Yeah, that's not bad.
And I guess that's the question. Do we want to move it out and leave what we have? And I guess to leave what we have, again, how much is left to lose? How much is left to come out of this trade? That call spread has got how much extrinsic value in there?
You can't tell.
Oh, $175. $175 left to come decay out of that if the yen doesn't pop back up.
So I think it's pretty different for me, lean hogs versus the yen. I don't mind. Everybody's in the yen. Like we're looking at either a Forex, the yen versus the euro, or the yen in general. I don't mind being in the yen. I don't want to see lean hogs on our
live cattle.
I
know because every time I see that LE, I think of lean hogs, not live cattle.
Yeah.
You're right. Let's get rid of it.
And let's roll this.
We'll roll this. Yeah, because if it stays down here, if we only have 2 weeks left, we'll lose $175. So let's close this, save ourselves $175, put on a new trade in the
I agree.
A little bit further out. So just it's running out of time.
I agree.
So we're going to close our 16-day and go to the 51-day. And in the 51-day, I got close. I got a little aggressive.
You can go even closer because we're making a roll. Like I don't care if you go bring it up. Do we get more?
I'd get 287, risking 337.
That's great.
Chipping away.
I mean,
chipping away at our.
Great is all relative, but I don't mind it.
I'm curious. What is the naked option here? 2,300. In some of these products that have been really beaten down, I started doing buffers. I was just curious, like what a buffer would look like here.
Oh man, you're really testing the knowledge of numbers here for me. With someone who can't see that well, all I see is 0, 0, 0, 0, 0.
All right, I'm going to bring it in, and we either take in 287 and risk 337, or take in 500 and risk 750. 500 and risk.
Yeah.
We're going to take in 500 risk 750 on our new yen trade.
And I don't have a card with me, but at last call, I will give you one certified badass options traders card. Oh, there we go.
Lucky for you.
I have one just in case I need.
There you go. Sure.
I need to give it to
Would you like
somebody.
another?
Yeah, I'd like to. Thank you.
There you go. All right, so I'm going to sell this put spread, and I'm not even going to say, like, it's 645, 635, 1250 wide. We're risking 750 to make 500.
I like it.
It's just giving us some better footing in the yen and a little more duration.
I like it.
And send.
Perfect.
Okay, so we at least adjusted the yen, and so our decision on the live cattle is we leave it. Whatever happens, happens. In 16 days, it's either max loss or it's made a raging comeback.
If it does, it's going to be amazing.
Okay, and in my spare time after the show, I myself am going to sell that Euro JPY Forex.
I think we could hold off until tomorrow.
No, I'm just saying in my spare time in my own account.
Got it.
Like usually when I hear someone say, I'm really losing in this, that's when I tend to jump in.
I think sounds like a great idea with the funds that you've got in that account.
Hey, that's in my Forex account. So the money you have in Forex is separate.
I know.
It's separate. I got enough money in my Forex account to sell the Euro Yen Forex pair. So, okay, what else do we want to do?
I don't know. What are SPOOs up right now? They're
only up 17.
17. Yeah, I mean I think they were a little low, but I think it's going to be quiet until it's almost like, I mean, it's what everyone's been talking about. Is NVIDIA going to save the market?
Well,
What is the expected move for the cycle in NVIDIA? I just want to see how much up or down it's going to go. I almost feel like when there's this much news in something, it becomes an absolute nothing burger.
That's what I was going to say. When you have, 75 million shares have traded. I'm just curious. I want to see, like, NVIDIA, 75 million shares have traded.
And Frank's the one who said calls over puts.
Okay, so look at this. Look at this. This is insane. SPY, SPY, S&P 500.
The Mac Daddy of liquidity, the most liquid of liquid options there ever was.
29 million shares have traded. NVIDIA, 75. 3 times as many shares have traded in NVIDIA than SPY today.
Can we open up the 2-day? And I just want to I want to see the call skew. So if it's calls over puts, there should be a massive call skew in it.
Okay, so I'm just going to go, we're trading 185, I'm going to go $10 up to the 195. Those calls are $3. $10 down to 75, they're trading 225.
It's call skew, not massive.
Yeah, call skew, but not massive. Crazy.
Yeah.
Not crazy, not like some of those meme stocks.
Correct.
Yes.
Call skew, not massive.
So, again, Liz is watching along with the rest of the world, along with the 76 million other people.
I am.
But we gotta wait for that. I don't know what to think of this market. When we were getting off the train, SPOOs were up 60. Now they're up 20.
And the VIX was very, very low. That's the one thing we haven't looked at yet.
When we walked in the door here at the SIBO, and the little ticker going by, it looked like it said SPY up $7, which would translate to SPOOs up 70.
Yeah, it was. And the VIX was up a lot more. Type in the VIX and let's take a look at it.
Oh, VIX was down $2. And now where is it?
It's only down $1.
Yeah. VIX was down $2.
It was down almost 10%.
And now it's only down 4.5%.
Yeah.
Cancel rally.
Okay. Do you want to do Twitter or Jacob's study first?
Since we're in the SPX pit and we are, here talking about SPX, talking about the market, looking at SPOOs up 24.
And the boys will be here tomorrow. So we've got Mike and Jamal sitting in these seats tomorrow. They're doing a great job. They come in there, so they're going to have to clean up the aftermath of whatever NVIDIA does.
Yeah,
tomorrow.
We'll be on in the morning tomorrow, but we're on
before them, but they'll be in these seats.
But we don't need to.
I was like, are we on the morning show?
No, we'll be on before them, but there's not going to be an aftermath. Like, I don't have.
Oh, Hollywood.
Hi guys, how are you?
Oh, there he goes. Hey, when are you going to come on the show?
Next week.
Next week, you heard it here.
Thanksgiving week. We're all off.
Thanksgiving. Here, you gotta come right in the middle of us, Alo.
We're live.
Hi guys, how are you? I don't know what camera.
You're not mic'd up. He's not mic'd up.
That's okay.
And we just need the visual.
You don't want to hear me anyway?
Oh no.
Your water over.
Oh man.
You did not put a lid on it?
I did have a lid on it.
She's in trouble. There's no lid.
No.
There's a lid.
Okay, so anyway.
Sorry about that.
Anyway, Alo will be on next week. Don't slip.
You can't be on next week. It's Thanksgiving.
No, 2 weeks. 2 weeks. Alo, you're gonna be on 2 weeks.
I have to take care of a spill.
Clean up.
I have to take care of a spill.
Hey, I've had worse spills on this floor, Alo, and I'll tell you about it one day. So.
Okay. Oh, watch out. Don't slip. So we couldn't have him on today because normally when he comes on, our camera crew has to adjust the height of the camera. We need like a wet floor sign. And then there's water.
Now, this is going to distract Jenny the entire show. I would let people slip, and I'd laugh as it goes down. She's not going to be able to focus on anything.
If we're on the show and someone walks by and slips on the floor.
That's what I'm saying. That's what I'm
Clean
saying.
up. Oh God! Now we got floor officials.
Oh no, there's Gary. Gary,
this
just
is,
wave.
This is pretty exciting TV. There's
Gary might have been with me when my water broke. Yes. So this is less of a cleanup, Alo.
Jeff, can we get one of those yellow the caution wet floor? Caution wet floor.
Yeah, caution wet floor. No, we got a bodyguard. Gary's just going to stand there. Don't let anybody slip, Gary. Okay.
Right. This is the kind of service we get over here.
Yeah.
Yeah, we've got like 2 people who are going to stand here the rest
We've
of
got
the show.
2 flanking floor officials, and if I could pan the camera slightly this way, there's another floor official right here. And would like to walk by. Don't slip. Don't slip. There he is. There he is. There's Jeff.
And I'll tell you, everyone's blaming me, saying I did not have a lid on this cup.
I don't see a lid.
There was a lid.
Don't see a lid.
There was
Gary, there's no lid. Is there? No lid.
There was a lid. There was a lid. There was a lid.
No.
Oh, man. Okay, so are you ready for Jacob's study?
I don't know. I'm having way too much fun. We got to leave it on the full camera because we're flanked by 2 bodyguards right now. Maybe we should start spilling things every day.
Okay, Gary, it would make for really good TV if someone actually slipped on the water behind us.
Okay, then you guys can hire me once you go get sued.
True.
Yeah, right. We're going to be very careful, very cautious. Oh, here it comes. Here it
All
comes.
right,
Wait, hold on. We can't start the study yet.
Oh,
look, there's a
Oh. Thank you very much.
Thank you. What? Look at this.
Sorry, she's a mess.
We're a hot mess. We're a hot mess today. We were so worked up about NVIDIA earnings, the cup went flying. And I'm going to get in trouble because today I brought 2 drinks.
I know you did. One lidded, one non-lidded.
They both had a lid.
All right.
Thank you very much. We appreciate it. Okay, and now back to the show.
Okay, today Jacob is starting a new series on 0DT Iron Condors in-depth part 1. Actually, the boys, Nikki and Mike, asked for him to do a deeper dive into Iron Condors.
Hold on. Is it the bats that asked for the deeper dive?
Oh, the bats. Maybe it's the bats. The bats asked for a deeper dive. I think it was just Nick. Deeper dive into these Iron Condors. I think Ayla is bringing me a new drink. Didn't realize I have 2.
I hope it's vodka.
A deeper dive into these Iron Condors because we've only been looking at put spreads lately.
We have only been looking at put spreads. And I'm not going to lie to you, I've been liking my put spreads.
Hey, I've been liking the put spreads.
So I'll be very curious to see. We'll see if it's eye-opening or not eye-opening. I've been liking my put spreads today, out in 5 minutes. See, he's shame. What is that?
What show is that? Oh, that's in Game of Thrones.
I know it's in Game of Thrones. Okay, and we're back. So hopefully we'll see this if it's eye-opening. I've been doing the put spreads. I was out in 2 minutes on the train following Jacob's orders from before, where it was give or take 5 minutes. I took 5 minutes.
Whatever. You got in on. You got in at like
8:56,
8:45 or
8:56.
Yeah,
I was following the rules.
We were getting close to 9 o'clock. So and then in and out very quickly with that. Now it's tricky because I was on a later time schedule. I put mine on a little later. I didn't get out yet. So with Booze only up 11. I'm still in mine.
Now, are you going to close it at noon like we talked about with Jacob?
Depends on where we are at noon.
True.
Like if it's full loss at noon, no. If it's half loss, yes.
Yeah. If it's full loss, you Thelma and Louise it.
Yeah, if it's full, if anyone has a position
can we get that to stick?
You Thelma and Louise it. If anything's a full loss at noon, when you have a position that's full loss, there's no reason to close it.
Right.
No reason to close it.
There isn't. I mean, because all you have is upside. If it's a full loss, all you have is upside.
Yeah, and you can't think like, oh my gosh, I need to free up buying power. If you've got something that's full loss, it's not going to free up any buying power when you close it.
I agree.
Because all the buying power's been used.
Agreed. Okay. Now into the study. So following our Iron Fly and Put Vertical series, we now explore Iron Condors, selling out of the money premium on both sides with risk definition.
All right, Iron Condors trade lower credit for higher win rates, ideal for consistent returns over big wins.
I don't know.
You know what? I'm going to question the higher win rate.
I'm questioning that statement.
I'm questioning the higher win rate because, and I'm not questioning Jacob. He's our University of Chicago PhD, brilliant genius. But usually if you sell one side, let's say you take the same trade. Let's say you take a 30 delta, $10 ride put spread, and you sell just the put spread. And then you tack on a $10 ride, 30 delta call spread, your win rate decreases.
Shrinks. I mean, just by the nature of how things go, because you can't lose on both sides, which means it's got to come in.
It just does. So I know he says higher win rates. I'm gonna call.
I don't want to ever challenge him.
I'm not gonna challenge Jacob. I'm just gonna call BS on that.
Fair enough.
I mean, we'll take it. We can look it up.
Okay. Key questions: how far out of the money for short strikes? How wide for wings? And what profit targets optimize risk reward? Great. Can't wait to see it.
Today has been a crazy day. All right, let's test strike placement, win width, and exits to find which configurations work the best.
Great.
Are you ready?
I'm ready. Next.
Here's the study.
We know there's 2.5 plus years of SPX 0 DTE because these guys have been doing it for 2.5 years.
Yes.
Sampled every 10 minutes.
Okay, look at what they're doing. 30 delta and 20 delta short strikes. Wings, $10, $20, or $30 wide. Profit targets, 10%, 20%, 30% of credit. So we're going to get all this information.
And I think this is very key. Remaining positions held till expiration.
And you know what else is key? These went on within 10 minutes of the open. So that's different too.
This is different too.
That's different too. These are going on within 10 minutes of the open, and they're held to expiration if they don't come off. So we've got a few variables in here that we usually don't do.
No, because we the way we've done it with the put spreads, and we've honed it down to what we wanted. Now this is something different. This is what the boys want.
Yeah, this is what the boys asked for.
Yeah.
Okay, evaluated, and again, this is part 1. So they may have asked for more. This is part 1.
Correct.
Evaluated performance via win rate, consistency.
I thought you were going to go on with this mean daily P&L, profitability,
and maximum drawdown risk, or the largest peak to trough decline in cumulative P&L over any period during the study. So largest cumulative decline. So if it's like lost today, then that probably happened over the last 2 weeks, where it's like lost today,
lost. Yes.
All trades executed at mid-price.
Okay, perfect. That's the study. We got it. We need to go back to what we can.
Here we go. This one is $10 wings. And
this is a lot of information.
It really is.
So this is $10 wings with 30 delta short strikes, and then they give the profit targets of there.
And 20 delta. So you've got 30 delta short strikes, 20 delta short strikes, and 10%, 20%, 30% profit targets. So, when you look at the average P&L, the highest is the 30 delta short strikes, 20% profit target, which that makes sense. 84% win rate.
So I'm just going to this. I understand it's later, and it's going to be a lot more.
Yeah, so you'll get a lot more on the open because this is not an at the money. This is it's hard to judge it right now.
It is hard to judge it, but I'm just going to go into it. The 30 delta. This is actually pretty good. It's more than I expected. The 30 delta.
Okay.
$10 wide on each side. I'm getting $4.90.
You're getting $4.90.
Yeah.
$10
because the volatility is so high right now.
Well, you're selling both sides. You're selling both sides.
It's a lot, though. I mean, that's what I expected in an iron fly almost.
But I mean, if you're selling a $10 ride and $10 ride, you're getting $5. That trade has got like a 50% probability. You can figure out probability by, your risk and your collection. So if you're risking one to make one, that's a 50-50 trade. So but you're not looking for the full profit here. You're just looking for either 10%, 20%, or 30%.
Well, and that's what I was saying. I was looking at this because if you're taking it off at 10%, so they take this is where the average P&L is. If you're getting, it says $4.80. Say you're getting $4, and you're taking it off at 10%, that's $40. So the average P&L of 17 has those losses in there. That's why you're getting that maximum drawdown.
The maximum drawdown,
you're going to have some losses.
Yeah, because if you're collecting close to $5, your risk is only $5. The max drawdown of 2,400 would mean 5 losses in a period of time. So consecutive losses are the worst case after a period of losses.
Correct. Okay.
Okay. So and just to mention, because we did look at to compare apples to apples, we looked at the $10 wings, 30 delta short put spread, and the win percentages were higher, but the drawdowns were larger.
Yes,
because you're collecting less. So
the win percentages were 95 and 96.
The win percentage
and the drawdowns were more.
The drawdowns were more. That's because if you're only doing one side,
and this is maximum drawdown, but the average P&Ls were also wrapped around the same.
They wrapped around the same.
Yeah. Okay.
All right. yeah, you want to read it? Sure.
You are on live.
We are live, but you can come and read our slides. Here we're looking at SPX.
It'll all be in the archive after the show.
Yeah, we can send it to you. We can send it to you. So this is iron condors in SPX on the open, $20 wide wings, either 30 delta or the 20 delta short strikes.
And the average P&L is daily. Now let's go to the next slide. So let's go to 4 because the next one is, here's $20 wide.
Here the same winner was the 30 delta 20% profit.
The same winner meaning average P&L.
The highest average P&L.
So some people hang their hat on win percentage, some people hang their hat on average P&L. But in my mind, none of these jump out being like winner, winner, winner. Do you know what I mean?
Well,
they don't. Because for every gimme there's a gotcha. You've got 87% win rate or a higher P&L. And then you've got a less of a drawdown or more of a drawdown.
I know. And the drawdown, look at that drawdown.
Look at your 96% on the 20 delta $10 profit. You're 96%. Like, do you want a higher percentage? And it's $18. I don't know. Who's to say?
That's why I think we did really like that $10 wide put spread because the average P&L was high. Yeah. High, and the drawdown was low.
Yes.
Average P&L was high, drawdown was low. All right, now $30 wide wings. The 30 delta, is it the same one that's always in every scenario is the same one that's the highest average P&L, and that's the 30 delta short strikes 20% profit target?
And that seems to be Jack Tucker.
I feel like Jack Tucker does more like 16 to 20 delta short strikes.
But he uses $25
wide.
Yeah, but it's close.
$25 wide, but further, his shorts are further.
So he's like the 20 delta?
Yeah, because
go back
like
one.
yesterday, even
go back
Wackadoo.
one. Because he said, doesn't he change the delta? Oh, that's just the wings in the corner.
Just the
okay,
wings.
got it.
He's probably more like the 20 delta, I think. 20 delta short strikes, $30 wide wings.
He's most $20 and 30% profit.
I mean, it's
like
very
he's
high percent.
I think he goes to the and he takes like 30% of the profit.
Yeah.
So that last column, which is great.
So, and now we have the takeaways.
Okay, wing width drove performance. Wider wings delivered better mean P&L and win rates, but demanded more capital and suffered significantly larger drawdowns.
Okay, profit targets were essential. Early exits, 10 to 30% of credit, resulted in good win rates and net profits, regardless of the rest of the configuration.
Okay.
So they were all positive. That's just it. They were all positive.
They were all positive. And strike selection was a wash. 30 versus 20 delta short strike showed no clear winner.
Okay.
Both performed similarly enough that the choice comes down to trader preference.
The 30 delta had slightly higher average P&L, but the 20 delta had higher percentage, higher win percent. Okay, risk capacity determines optimal setup. If you have limited capital or low drawdown tolerance, stick with narrow wings despite lower returns. If you can weather larger swings and deploy more capital, you can consider widening out your trades.
Great stuff there, Jacob.
Yeah, thanks, Jacob. Another winning SPX study. Thank you very much. All right. So, it was really interesting that, we had an SPX trader come out of the pit.
I love that you lowered your voice.
Come out of the pit and stand right here.
Right off camera so that he could be...
So that he could read the slides.
Yeah.
Read the slides and see the information. It's kind of cool that these traders who are professionals who do this for a living are still interested in these study results.
Because they are fascinating. And I think the interesting thing about the studies is watching what happens on Twitter, too. When your Jack Tuckers and your Blue Wackadoos actually post real results. Let's go to that. Just because I think that's a good follow-up to this study.
Twitter?
To Twitter. Because I know everybody does their own. I'll let you get to Blue Wackadoo or somebody.
Yeah, let's see what we have going on today.
I think you're days away.
No. This is 1 hour ago.
Okay, there we go. So here's Eric, Blue Wackadoo. We met him on the road, and this is exactly what we're talking about. So it's a choose your own adventure, I think. I think when you're looking at these, you have to come up with your own risk tolerance, your own. Yes.
And Jacob said that in the takeaways. Everyone's got their own what you want your max drawdown to be.
Correct.
So
now I lean towards, like I said, because they've been working for me, I lean towards just the put spread at a 35% rate. My drawdowns are low, and I feel comfortable with it, and I like closing at noon.
But what I like about what Blue Wackadoo does, he does a combination of trading these SPX positions, the day zero DTE, but then couples it with MES and VIX positions as well as like a hedge to some of his 0 day. And I like that. I think that's really creative.
I think it is creative, and but he added that on. You'll notice in the beginning, if you watch the transition of Blue Wackadoo, he didn't start with that. He kind of transitioned into it. So it's pretty good.
Are you wondering how I still have a drink?
No, because you had two. One kept, one not kept. That was pretty funny, though. This is one of my favorite days on the floor.
Honestly, it was funny, and I feel bad that the guy
Alo
had
feels
to
bad
come
now.
map, but Alo feels bad, I'm sure. At least no one slipped. At least no one was harmed in the filming of this today's show.
And he was going to distract her the whole time. The poor guy did have to.
Mikey. Look at Mikey. He's got $150 in his pocket, and he has a chance. He had a chance for something greater.
So what I love about what Mikey did, a chance for something greater, and I'm in a genie blink for you, Mikey, but the...
66.65, where are we now? 66.28. Hey, I would like 66.55 because then my put spreads might come off.
So, and what I like about this, too, is that if you are doing, and I know the pattern day trading rule is going away, I understand, well aware, okay, but it's not gone yet. So what Mikey is doing right now is pretty inventive and creative. He's putting on a spread and then butterflying it off. So he locked in a profit, and you can see that he can't lose to either side.
Right.
And he's got the shot, a chance of hitting that peak.
So if he bought this 660, 66.60, 66.65, he bought that. Let's say he bought that for $2.50 and then, or $2, and then he sold the next one for $3.50. That's how he's locking in that $150 profit, and then he's got that chance at the end of the day.
And honestly, when you're getting two-way action, I think that's better than taking it off. Right, hippie?
I don't know.
There's a lot of interaction today. I like it.
I know. I don't know. It's really hard to pinpoint a product that's $6,665.
No, it's not, but there's a shot.
Yeah,
so that's what I'm saying. So I like this because it's the same. We notice because the acceleration in the options, you can either take it off for probably $160 or lock in $150 with a shot of making more.
Right. Usually you have a choice. You could close it for a higher profit,
but a slightly higher,
or butterfly it off for less. You're giving up something. You're giving up something,
yes.
But then you have a chance at something more. And every once in a while they might hit. And here comes the vinegar through the vents.
And the vinegar through the vents. Just like that, on cue, the vinegar is going through the vents.
1040 is when the cleaning crew starts, and the vents are right above us, and I
would just like to state for the record, the mop did not smell like vinegar.
No, it didn't. It didn't.
The vinegar, and on cue, the vinegar through the vents.
All right, here we go. This is Ajit. Ajit, thanks for sending this. Costco short put. Again, Ajit is big by big. This is an $884 product. He's selling a naked put in Costco. You got to be big by big if you're doing that.
Yeah, but
that's an old saying from the trading floor.
Ajit sells naked strangles in SPX.
I mean, a big by big that comes from on the trading floor. Brokers would come in and ask for a market, like, what's your market on this? And you'd have to give your size. Like, my market's 12 1/4 at 12 1/2, 10 by 20.
Yes.
And then say some guy comes in and is like 12 1/4, 12 1/2, 1,000 by 5,000.
100 up. Yeah, like you could say 100 up.
He's big by big.
So what they on the trading floor as a market maker, the reason we say trade small, trade often every day is we tried to do the exact opposite of what the market makers did. Because when you're on the other side, you want to do the other side.
Right.
And what your trade small, trade often, you get to decide what's happening to you. Where if you were bigger before, it was more beneficial.
Well, in the trading floor back in the day, you would be just trying to lock in profits, lock them in, create a box and lock in profits, and then you would do that as many times as you could.
Yes.
But okay, so Ajit short put in Costco, I like it. I see we can take a look at it. He's got the short put at 12/19 expiration. What strike is it?
It doesn't. I can't tell.
But if we're looking, if his net profit,
it's 815 short put.
Where do you see
it's 1219, 815 short put, collecting 645.
Okay, I'm gonna take a look. 1219 regular expiration, 815.
At the expected move for the cycle, there you go.
You're getting $850, but you're using 11,000. It's a big trade.
It is a lot of capital for that.
But if you've got a big account, what do you have to do if you've got a big account? Switch to bigger products.
Yeah, that's true.
So
you don't have to do multiples. You can actually just go to.
Yeah.
We always say that you can get big by being small still.
Okay, here it is, Liz. NVIDIA.
PANW, Walmart, and Zim. Now we're going to put in the words of Office Space, we're going to put a pin in those because we're going to come back at last call.
We'll be back on last call, so we will wait. Bob, thank you for sending this.
We love Bob.
Mikey, look at Mikey.
Ooh, he
He's
built
on
a forest.
Fire. He had the one, now he's got another. Oh, this is all in XSP.
Mikey, you need two.
Good luck, Mikey. Good luck. Gotta love Whippy Days, build a forest in XSP. Nice.
Two blinks.
Nice. I hope that hits. I hope one of them hit for you. Jack, double tranche collected 11,700. So we can see here.
Personal fast market. I said that today.
Yeah. So he's got the 6,600 put and the 6,680 call. So he's $80 wide today. The other day, Blue Wackadoo we were seeing his spread $140 between the shorts.
Yeah, 140.
But the vol's coming in today. The vol was lower this morning.
It was. I want to see where it is
Close
right
to
now.
9 o'clock, the VIX was down 10%.
I know.
where
Now
is
it's
it?
down 3. VIX is just under 24.
Really?
23.93 right now. It's down 76 cents, 3%, which that leads me to believe.
Yeah, that's not good. That leads me to believe it's not going to be a green day today.
You never know.
We're only up 11.
You never know.
Okay, and he collected $585, so you can see $25 wide, and he's collecting almost $6. So about $2,000 in risk, $1,900 in risk per one lot.
That's not bad. If he collected $11.70.
So you think he's got like $38,000 in risk?
Yeah.
That's what kind of risk. If people are wondering like how do you make $11,000 a day, he's got about $38,000 in risk.
But collecting $11.70 does not necessarily mean that it's closed, right? Is that filled? That's filled.
No. This is all an opening trade. He collected $11,700.
That's what I was going to say. So sometimes, like Blue Wackadoo will say, done for the day, and then what they made, not what they collected.
Yeah.
So if you're going to take a percentage of $11.70, to your point, they're risking $30,000 in risk, and if you're collecting $11.70, say they do 40%, you're going to get $5,000, $6,000.
Florida 7, no more drinks for me. It was an unusual day. It was an unusual day. It was very hot down here. The sweater is hot, and I said, I'm going to bring 2 drinks.
Now, I will say, it is very warm down here always. I think it's because there's so many people packed in the room.
And it's all the computers, all the technology. You talk about like the data centers and how they need cooling for the data centers. We need some kind of cooling for this floor.
We need cooling for this floor. The vinegar has some time and place here. We're not exactly sure what's happening with it. Yeah, we do need some
it gets hot here. We got camera lights. We've got all the technology behind us. This is a hot place. And sometimes in the middle of winter, we're not ever too hot in the summer because we're in like summer clothes. But you come here in a sweater and corduroy pants, you need 2 ice cold drinks.
You've never gotten 2 before in your entire life.
No, but honestly, you can't blame me. Like, he knocked it right off this.
What is the thing I tell my kids? Never to say.
Did I knock the drink off the table?
Well, you can't say you can't blame me. That's all I'm saying. All I can say.
Okay.
Who got 2 drinks?
My drink was on the table. My drink was on the drink
table. There's some type of complicity.
My drink was on the drink table. Did I knock the drink off the table?
Well, I didn't see it.
All right, Florida 7. Now, 10:45, Liz.
We've got about 10 minutes left.
Yeah, we have what's your assumption. I'm just going to take a peek. Is there anything? I don't know. Our account doesn't look good today. You know what looks really bad today? Crypto. Ethereum's down 5.5%. Let's see what 22 on ETH translates to for ETH, and that is it's in the 2,000 handle, 2,900.
I don't like it.
I don't like it either. I don't know. I don't know what the deal is with crypto. I don't know what the hate is on crypto now. Why crypto is just, we haven't seen ETH in the 2,900 handle, in the 2,000 handle in a long time.
Now, I'm just going to play devil's advocate, but it had double the volatility of the stock market, so it should move double the price. When something has double the volatility, that means it's supposed to be whippier.
Yeah, but you know what? The market's probably fallen, a few percent, 3% or something like that. Crypto has fallen 30%.
Let's take a look.
I mean, if you take a look at like BTH or BTC. BTC has gone from, 127 to 89. So
yeah.
that's
about 30%. Roughly.
I'm just going to do my 89.
It's roughly 30%.
It's huge. It's a huge percentage. 89 divided by 127. Wait a second. That's like 40%.
Yeah, well, it could be. Yeah.
Wait, 89. So 127. 127. This is like old math. Minus 89. It's fallen $38. So $38 divided by 127.
It's 35%.
30%. Yeah. 30%.
I mean, eyeballing you. That's why I was like, we don't need the exact number.
I wanted to see.
But you can eyeball it.
So 30% versus like SPY, if you look at the market, or Qs, or what,
Just go to SPY because it'll be easier. It's the same thing.
And SPY, we've got it going from its high of 690 when we thought we were getting to
690 to 660.
Yeah, that's nothing.
So it's 40 points lower. So it's going to be about what, 10%, right? That 10? No.
No,
less,
no.
7.
It's 0.05, 5%.
5%. So one fell 30, one fell 5. But the volatility of that was quadrupled. I don't think it should be, it's not 1 for 1, but the volatility is higher. So if you're in a very volatile product.
Yeah, I know. It's
kind of like taking a look at what was it, CoreWeave that went from, was it CoreWeave or Circle that went from Circle?
Well, so I mean, it's the circles of crypto, but Coinbase is crypto.
But it had the volatility, so you should expect it to see.
Yeah. I just don't know. I don't know if is this scaring the public? Are people who were in crypto afraid and getting out?
But you know what? And I didn't see TP's cherry bomb, but I did talk to him yesterday about it, and I had a little discussion with him yesterday because I was like, the scary thing for me is the fact that it can be what I didn't realize, and shame on me, right? Is that you can be 50 times leveraged in crypto. That when you can get 50 times leverage, that will cause some movement. Now, I'm not 50 times leverage. I have 0 leverage in crypto. If I bought it, I bought it. If I put $1 in crypto, $1's in crypto.
Mm-hmm. Yeah, I just it's just kind of like, what's the fate of crypto? Like, what's the world thinking? And not just for these prices, but for there's so many companies and businesses involved in investing in the crypto realm. What's the fate of it? Is this just a blip? Or is this kind of people are getting nervous about it?
Well, I don't know, and it's very interesting too because that whole AI discussion. So people are having that, and what I find fascinating is on every network that every news article I've seen is AI a bubble, not about crypto. They're not talking about crypto unless you're a crypto. Right. Unless you're Ryan Grace, right? Or Dan the crypto man, or Shelly, or the people that are on Beans. They're crypto people. But other than that, everybody's talking about is the AI in a bubble.
I do think AI was a bubble. I mean, look at do you remember
so
this?
So NVIDIA is going to tell us tonight.
This was like that. Look at this little BZAI. This came out. This was like an AI.
That's not AI. BZAI is.
It was like some kind of AI spec, and it was some kind of AI spec that came out, and that thing has gone from on its day out, 19 to 2.
Yeah.
I mean, you look it up.
So you want to talk about percentages of things going down?
I believe this was one of them. I was looking at things that had like big short interest, and I believe this was one of them.
Oh wow.
Yeah.
I think this one got lucky because it had the ticker. So a lot of times it rose like a phoenix from the ashes because of luck, not.
Yeah.
I was listening to them yesterday, or it was 2 days ago. I think it was Jamal on Last Call when they were talking about some symbol that's like one off from NVIDIA.
Really?
It's really benefiting from because it's a typo. It's very easy to type. Yeah.
Huh. No, I didn't hear that.
Yeah.
So SPOO's only up 7. Are we gonna? Yesterday we thought we would go from red to green. Today looks like we're going from green to red.
Yeah, we'll see.
Yeah,
we'll see where the day takes us.
So, and it was a pretty positive morning for the most part.
I mean, it was a positive outlook in my mind. It was all rose-colored glasses this morning.
Sunshine and roses on the way in. Taking a real turn.
Glass, she spilled something. We've had to talk to 2 floor officials.
The last time.
You didn't get fined, though, so that's good. You could have gotten fined.
I didn't drop the cup.
I didn't.
The last time Ethereum, and this is not a trade recommendation, the last time Ethereum got into the 2,000 handle, that's when I told my son, hey, you want to make some money? You close everything in your account and put everything in your account into Ethereum,
and it
like doubled his money. It worked.
Mm-hmm.
It worked.
I don't see this, and personally, I don't see it as a problem. I mean, if it gets a little bit lower, I do, but I bought my crypto so much lower than this.
Yeah.
My dollar cost averaging, which you can do now on Tasty, you can buy little bits in, has my price so much lower.
Yeah.
But it used to be more of a dead asset, which you could only buy it. Now you got all these leverage products and leverage things and things of that nature.
It's funny because at the time when we did that, like I wouldn't do that with him again. I wouldn't say like, load all up on crypto, but I wouldn't do that now. Now he's like, when I ask him, and he's a senior in college, when I ask him like, do you want to put cryptos down? Do you want to put any in? He says no.
I'm telling you, the XRP people are freaking out.
I bet.
Yeah.
I bet.
Because XRP has not gone anywhere. Or it's gone down too.
Yeah, I mean it doesn't. If we go and look at our crypto here, gotta go to trade page, crypto XRP. And I got out of my Solana. I got out of every. I think if I'm going to be in anything.
Look at that XRP chart.
Yeah.
That's UGLY.
And you know that one guy who put like his life savings into XRP.
Yeah. Oh yeah. My brother's foil hat friend.
Hey, so I think that's what what's hurting people the most now. People who are like, I don't want to say whining and crying about their accounts, is people who are heavy crypto, like a lot of the young people in my neighborhood.
Yeah. I mean, you kind of got to treat it like you do anything else.
Right.
Well, it's not a get-rich-quick scheme, and I think that's what it's proving to be. Is I think a lot of people jumped into it being like, I'm going to be a millionaire. And remember, we would have Dan Cecile on and be like, all these people made so much money in crypto, and now they're going to these altcoins.
Yes.
And so everybody thought it was going to be so easy, and these are the crypto millionaires and things like that. Well, it's not yours until you sell it.
It reminds me of. Remember that there was this guy who bought so much NEO, and he made $130,000 in NEO, and we said, well, you don't have that $130,000 until you sell your NEO. And he's like, well, I don't want to sell it because I don't want to give half to my ex-wife.
Type in NEO.
And you don't have those, you don't bank those profits until you sell it. Now, although NEO, honestly, it rallied back to.
No, I mean, it was high.
I would have to go
that's
back.
what I'm saying. Like, this won't be that hard.
70.
Like, that's what I'm saying. NEO's at 5.
Yeah.
This is where he was saying, I don't want to sell it.
I don't want to sell it.
Yeah.
I mean, I don't think he ever sold it.
I don't think so either. All right, Jenny, we are out of time.
Gosh, out of time. I'm going to make sure.
Okay, just prediction markets right now. Not markets, but prediction Liz and Jenny style.
Well, okay. Thanks, Twitter 7. That's maybe what I'll get next time. All right.
I like it.
Prediction. Well, I will see you on last call. We can talk.
No, I know. But where are we going to be on like at 2:30 today? Where's the market going to be?
I think
2:30 Central Standard Time, because we're having a little bit of issues with Mountain Standard, Eastern Standard, and Central Standard.
When we come on last call with Tim Knight at 2:30, I'm going to guess Spooks are going to be up 25 to 30.
Oh, okay, good. Then I have to do something different. You think 25 to 30? I hope they are. I'm saying unchanged. I'm saying we're going to stay we're going to be up 12. We're going to stay right around this area.
Right around here. Okay, yeah. We'll see. And I will leave everyone with NVIDIA. Up on 350 now, and expected move. We'll see if it changes.
Yeah,
right now, expected move 1190.
Got it.
1190. Close one eye. Wait 6 seconds. Was that part of it?
Yeah, you got to close one eye.
And wait 6 seconds?
Yeah, 5 seconds.
All right. Thank you, everybody, for watching today. No one got hurt in this filming.
No one got hurt in the filming of this. Everybody remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show.
See you at 2:30.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
tastytrade has crypto, and you can trade with 0 commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal.
Hola.
And of course, the one and only Glenn.
Is that new intro music?
Yeah.
Yeah.
I like it.
You like
Nice
it?
and poppy.
Yeah. To match your shirt. Popping off on a Wednesday. How we doing, gentlemen?
Doing great.
Great.
Market seems a little spooked here. We were up significantly more than we are now. E-mini's up 20, NASDAQ up 90, Bitcoin under 90K for the first time, Bitcoin futures for the first time in quite some time. I guess yesterday they hit it. But yeah, sliding scale, a lot of fear. We've got NVIDIA earnings after the close today. What do you guys think is going to happen with that?
I mean, bluff was called early. Looked like we'd run away, especially that Google-led NASDAQ. No, papa. Unched by lunch, looking like.
Unched by lunch. I like that.
I don't know what's going to happen on those earnings, but it basically, the week starts tonight. I mean, the week starts tonight. And I feel like we could end up higher by the end of the week. But it doesn't look good right now. Like the market looks scary-ish. I mean, it looks like it wants to fall lower. Bitcoin looks like it wants to go lower. Things look like they want to get scary. But I don't know. I'm expecting a lot of fireworks over the next 72 hours or so.
So regardless of the outcome,
24,
you think the
48.
impact is not overstated of NVIDIA earnings, maybe FOMC minutes, the next couple of days?
I think it's a lot. I think we're about to throw the kitchen sink at this market and see how it handles it. Yeah.
Yeah, I mean, the VIX is elevated, sitting at 24, kind of flat on the day today. But you had a bigger crush earlier today that was reversed into this selling off from the highs. But VIX futures, if we look at the Z and the FGHJ contracts into next year, all pretty flat here. We'll see if that inverts into backwardation. But yeah, flat above 20 is interesting, to say the least. That's what you should. That's what is going to create an environment like this, like we're seeing, where we're up 80 down to flat. The other day we were down big, we rallied. So intraday ranges are going to be pretty wide here for the foreseeable future, especially with NVIDIA behemoth earnings after the close, selling off from the highs today. Where will it go? And it's interesting because it's sitting right at this 180 mark where it's bounced a handful of times.
Yep.
But if it drops below that, I'm not sure where the floor is.
So Jamal, vol crush is not on your bingo card
For today, like for the market?
Like, well,
volatility, like VIX?
NVIDIA focused, maybe expand to NASDAQ. As
You're saying for the rest of this day, or you're talking about with NVIDIA earnings?
For the rest of the week. Post event.
Yeah, I'll just say it. Yeah, I think the market will be higher despite this negative news. I think there's a lot of negative news, and I think the sentiment is actually not good. But I think the market will be higher, and I think the ball will crush by Friday.
All right.
Friday afternoon. That's what I anticipate. I mean, that's what I'm playing for, Glenn. If it doesn't happen, oh well. It's not going to be good.
Yeah, I think when we look at the
Can't
NVIDIA...
take lunch away from you, so.
That's true. NVIDIA implied move 12 points on $185 stock price. That's pretty high. And then when you look at the end of the year, December 19th monthly, 22 points. You go to January, 28 points. So plenty of implied volatility in the near-term cycles. I was looking at some trade ideas this morning.
You have something on already, no?
No.
No? Oh, you don't?
No. I had something on, and then I closed it, and then I said I was going to wait for earnings. I had this 195 calendar spread.
Yeah.
But I think that's probably where I'm going to end up, is going in with another calendar spread. I like the idea of doing your strategy, where you buy the 9-day, sell the 2-day. You could buy the 30-day, sell the 2-day. It's just a little more expensive, but there's still plenty of premium here. Like just going straight back to the 195, you could pay $7.20 for the 30-day 195 call, sell the 2-day call for almost $3, stay under that $500 mark. If you get a rally to the upside, it's going to be a nice trade. Same with the 9-day, though. If you wanted to get super small, that same setup, buying the 195 in the 9-day, selling the 195 in the 2-day, paying $1 for that one. So reducing basis aggressively, and all you need to happen really is have your long option in the 9-day cycle be worth more than $1 of extrinsic value. And there's a lot of ways for that to happen. If we pull up the analysis mode here, even if we fast forward to tomorrow and crush some vol here, you can see we're going to have plenty of range for potential profit here. This is reflective of tomorrow's date, and then I just crushed implied volatility a little bit on each side. But yeah, just depends how much you want to risk, how much risk you want to take. But if you're trying to stay super small, I like the 9-day, 2-day calendar spread, or even a diagonal spread. But yeah, I think that's where I'll probably land, around the 195, 200, and then just figure it out where we're at the end of the day.
Yeah, I jumped in it early, which is unusual, but I just, last week during the down move, I did it. I put on a calendar then and a diagonal. Actually, I got the 200 calendar, but I'm using D's for my longs, and I'm long the 190 call and D's as well, and I'm short 2 of the 200 strikes. So 1 for a calendar and 1 for the diagonal. That's the play.
In the weekly?
Yeah, that's where my short is. The for the NOV, the regular NOV, short the 200 strike, which are $1.56 bid at the moment.
I like it.
57, 56, 57, 67. Yeah, that's right. I got you. You laughed.
But yeah, I mean, playing for an upside move, and this is really like inside up too. If we go to the expected move, you'll land right between these strikes. It'll be a nice trade. So yeah, I think I don't think I'm going to play it to the downside at all. I think if there is an upside move, I don't think it's going to be a blowout upside move.
No.
I would be shocked if that happened.
Yeah.
But we've seen crazier things. We saw when the market was down like 80, 90 points, Amazon had a blowout move to the upside. So
true. It's
certainly possible. But there's definite fear in this market as we continue to sell off from highs. But enough of that. Tasty FX.
Fear.
What do we got here? Fear.
Not good for QQQs. Pretty good for USD, at least today. Dollar up. Oh, yeah. Oh, because that's the one you sold from you bought from the range highs.
Yeah.
On a potential breakout.
Yeah.
Almost back to break even.
Tell me about this Euro Japanese yen. Holy cow.
Yep, we're going to be talking about the yen today.
Has jumped.
That one is one of many places to look today. If you're looking at your TastyFX watch list, you'll see a ton of movers on the daily net change above 0.5%, which, looking at leveraged markets like these, are of note, even though it's not as big of a swing as you'll see in single name equities. But yeah, we're looking at the Japanese yen taking off above 156. I've got some slides on that in a second. And at the bottom of your popular USD, we're looking at New Zealand dollar, US dollar down a full % on the day. Similar price action in Australian dollar, US dollar. So that tells me that it is somewhat risk sentiment related, but exacerbated in that New Zealand dollar, that Kiwi USD pair, on the heels of some soft New Zealand data coming out last night around 7 p.m. Central. Really hasn't been able to recover since then as we continue to roll into this U.S. session and now eyeing down that 56-cent level, which we bounced off of before, but not a lot of historic room to the downside looking at Mikey's chart here year to date. So this starts to get really interesting, if you're looking just at price levels alone. It's definitely a key psychological level, but then if you're someone that likes to look at trends, I mean, this is a pretty stable channel downwards, just continuing to march lower, lower lows, lower highs. So not sure structurally what the long-term play is here, but if you're looking for, those one-day standard deviation typical moves, this is definitely an outlier that you could play as a momentum signal or, take the other side of it, looking for just some short-term reversion. That's what I'm looking at today. We had some pound data or some UK data overnight that was a little less interesting in terms of market movement, but that's why you're seeing a stronger move to the downside in that pound dollar and a smaller move to the upside when you're looking at those yen crosses compared to the euro, which are historically very correlated.
Love to see it.
So we'll see. I mean, if a lot of this, if this is risk sentiment, like you said, all of that equity news, we have FOMC minutes coming out in 2 hours. That's pretty outdated, but outdated might be what we're relying on now with not a lot of news and data that's U.S. macro specific. Tomorrow, we're getting the non-farm payroll report from September. October, who knows if they'll make that up or it'll make it out at all. But we're not getting an unemployment rate tomorrow, just the NFP number itself.
Oh, really?
I believe so. Last I heard, it'll just be the jobs added or subtracted. And so that comes out at a random time. That's definitely a volatility event for U.S. dollar. We'll see how. It'll be interesting to see how much weight the market gives it, even though it is more backdated than the usual release schedule. So that's what we're looking at today. This dollar strength could reverse on some fear lifting following earnings or minutes or what have you, but we could be in a categorically different place on Thursday afternoon after this slate of events, which is nice to see. We've seen FX volatility come in over this shutdown as less event risk taking shape, but we still have, you've got the CME FedWatch tool up on one of your screens, Mikey. We're still eyeing down 50-50 cut, no cut for December. What is it now?
51% no cut.
Apologies. But but that is the first time that it's flipped.
There you go.
Over 50% in favor of no cut. This priced in all the way at 90% at a month, 2 months ago.
Yeah.
So a stark reversal, and it's interesting to note we've seen clusters of course, that's U.S. or that's market participants pricing in this cut or no cut in real time, but using the futures there, the rate futures. How that trickles into spot FX, you see it kind of in different waves of magnitude. We saw a cluster once it got up to even 1/3 probability. We saw some stronger dollar moves, and then when you get from we got from 30% to 40% and back down, we didn't really see a substantial move, but now that we're at 50-50 compiled with this fear sentiment, it's really starting to pick up in the dollar's favor. But that being said, if you are betting on no cut, now there are plenty of places to do it outright with those event contracts, but can also play U.S. dollar against the other currency of your choosing. So a lot to look for.
For sure. Yeah, I like the New Zealand dollar. I kind of like getting long here. We had the washout and then the big rally here, but this has kind of been the line in the sand where we're at right now if you look further back.
Yeah, I mean, and if that's your stance, you can set this up with a pretty asymmetric risk-reward profile. Know when you're wrong. If nobody cares about this 56-cent level, we trade right through it, then that could be I'm out, I don't want to touch it anymore. This could fall to who knows what. Whereas if you're trying to fill the gap, you have, 200 points of upside, if not more, looking back month, 2 months.
Beautiful. You got some slides for us?
I do, yes. I have a couple slides to get through. Key storyline of the week, looking at, is the Japanese yen at risk of intervention, or as I like to call it, yen-tervention?
Yen-tervention.
I have a story about the Japanese yen.
Awesome.
When you're done, I got a fun story.
Fantastic. Well, jumping right in, why are we asking this question? Because the yen is falling through all of its critical support levels that we've been monitoring from not only a price action perspective, but what BOJ officials have actually been saying. And we can validate this widespread yen weakness by looking not only at the dollar yen, but looking at the euro yen and pound yen. Dollar yen, I think most interesting to me right now, because we tried this 155 level in the spot market over the past week. Didn't close above it until this week, and now an absolute ripper today, from 155 half all the way to 156 half, a full 100 pips today, and still going perhaps. and that validated in the euro yen market, trading at its all-time highs above 180. Pound yen gives a little more historic, support levels, or we've seen this price action before, similar to this dollar, where we're approaching its 2024 highs around 205. So, not only are we at very interesting price levels, but the momentum, looking at this graph, stuttering around 155 and now trading very much through them. Let's go over to the next slide and why intervention is on the docket, because the Bank of Japan is in a pretty tough spot now. They have been for a while. They they hiked rates in 2024 for the first time in a very long time and appear to be on a somewhat steady path to do so continually, even though if the increments were very small, now at 0.5%. But they're looking at March data for the next possible hike. You also had the BOJ governor come out and speak about this hike for now close to a year, as we saw similarly in the U.S. when rate cuts were talked about for a lot longer than they actually started coming out. And then the new administration, a lot of political pressures to keep these lower, a new stimulus package proposed that hasn't been good for Japanese bonds or the Japanese yen, which is never a good combination when you have yields rise, which in theory should bolster the currency, but that contributing to yen weakness as well is typically a red flag. And we have all of these officials across whatever departments they have, finance, Bank of Japan, growth, all saying that they are very closely monitoring market movements. Didn't call out in the most recent discussion, call out currency movements specifically, but weeks ago, we did have officials saying that they were looking at that 155 level for dollar yen. Let's go over to the next slide. And what we're looking at when we talk about what an intervention trigger is, and this intervention would be the Bank of Japan, Japan's government stepping in themselves to try and regulate this free-flowing currency exchange rate. So they've done it before. They've done it ad hoc, and so there's historic precedent for them doing so, stepping in and trying to take this weakening yen and bolster it a little bit directly, which is a pretty steep measure that they don't want to have to do. But when do they want to do it? It matters more, the speed of getting there, which is why I called out the momentum earlier, that now that we're through that 155 level, if we're looking at today alone, that's a huge move. 2 more days of this, and not only are we at way more interesting price levels, but the veracity of those moves, I think, matters more to those officials. Volatility as well. As I've said, we've been in kind of a muted FX volatility environment. That's starting to pick up across the board here, and yen not excluded from that. So that's another box to tick. And then looking at what the actual price levels could be, they said 155 was interesting, haven't acted so far, and so we're looking at 160, which we were at in the U.S. dollar Japanese yen market before, and some intervention at those levels. And then what I brought up at the beginning with just confirming that it is a yen-specific problem, not just U.S. keeping their rates higher, bolstering U.S. dollar outperformance, but looking at those yen crosses, which right now do validate that the yen is struggling. So what does that mean for the dollar yen? Looking at the last slide, now we're in a bit of a new range, which is really interesting. We're now through that 155 little stutter, looking at the 2025 highs at 158.8. But we're still, it would, if you're looking at how we came down from that 158 in January, we did spend a little bit of time in this 157 to 155, 154 range. So categorically, we're in a new range here. How wide that range is, time will tell. But that is the price level that we're looking at. If you are bullish dollar yen, that 158 is super interesting. But that 154, if this, like other asset classes, have been, 1 day elastic moves to one side and a snapback, we've seen that time and time again in U.S. equities, that could very much be the story here. And you're looking back at that 154 range. Regardless, this is a long-term bullish trend for the U.S. dollar against the Japanese yen so far. We'll see just how far it's tested before, if there is a potential intervention, then we could expect to see a very stark move to the downside that would, kind of take any sort of technical analysis or fundamental analysis out of the short-term picture, right? Because we do have such a large player that would be stepping in here to try and move these markets in the other direction. So just something to be aware of if you are trading this pair, but a lot of interesting narratives if you do want to get involved.
Yeah, the yen in and itself has been getting absolutely smacked for sure. And you're seeing it in these other currencies, the USD JPY, the pound JPY. I mean, they are making some serious highs here.
And I mean, yeah, just thinking that we're only 200 pips away from unch on the year for the US dollar in this pair really shows that if you're looking at that DXY index or any sort of dollar basket, this is really what's carrying it, because the euro, the pound are still at, 8-9% gains against the dollar on the year. So this one, the only one close to getting back to par for, however arbitrary 2025 is, it's still an interesting point here in mid-November.
Yeah, if we look at a continuous yen chart here, we are almost at the lows of last year, or 2024, but
if we can flip to the platform.
But yeah, we've seen it as high as in 2012. It reached its peak and then dropped from there. But I'm going to Japan next week.
Oh man!
And I looked at
bingo.
I was trying to return or change the card on file for my hotel reservation, and in the process of doing that, I realized that 5 months ago when I booked this trip, it was like $1,900 when I booked it. Now with inventory lower, which you would think would increase the price per night of the hotel, I literally canceled the reservation and rebooked it for $1,400.
That's
so
pretty
I saved
good.
$500, and in my mind, it must be because of the conversion rate and how weak this has been over the last couple of months. But
definitely,
it's a fun little story.
That's pretty cool. That shows you, folks, how currencies can work for you on trips.
I mean, if this is where you're comfortable, you could even lock in that exchange rate right now with however much you expect to spend in. Now it's $500 more, isn't it?
Yeah.
And now that went to omakase.
I would be lying if I didn't say I checked it again today.
Yeah, of course.
Funny.
More savings. But yeah.
We can get long some yen here in case things change while you're over there.
Should.
What cities are you going to?
What's that?
What cities are you going to?
I am going to Tokyo and Kyoto.
Heard of both of those? Yeah, silly old me. I went in 2019.
Silly.
Man.
At the highs.
Now it's 30% off.
Have you seen his desk? He has like all these different currencies. I mean,
they're all fake.
Yeah, our office printer is really good.
Lester, how can I make these colors?
I know.
Yeah.
We overrode
More
all the
believable.
settings that doesn't let you print notes.
Yeah.
No, it's a pretty, the positive spin on my desk. I have probably 13 bills from various countries across the world, and the positive spin on it is, it's just engagement. It's fun to look at. You could say that it's a little bit of a pyramid scheme, because I only put about 5 of those on my desk, and then people just see them and go, "Oh, I have this one. You want it?" What am I going to say? No.
Give them to you. It's nice.
Now you have $1,000 sitting on your desk.
Exactly.
Yeah.
Now I'm coming to Japan.
Do you have any information on old pennies or like nickels?
No, I'm not.
I have a
not
collection
tapped in.
of like old pennies,
Well,
I might be sitting on like 100 grand.
I'll take them. Is that what you're saying?
We'll stack them up.
Yeah, I mean, you give it 5 years, we'll see what the circulation in the penny market is.
Probably zero.
Dead.
Probably zero. I mean, yeah, aren't they minting the last ones now? Pennies,
Yeah,
I think,
they're dead.
right? I mean, I've been throwing pennies away for years, honestly. I'm dead serious. I was like,
Well, I mean, the new pennies,
throw away.
But I've got ones that are like
copper,
not copper,
no,
non-copper pennies.
Is copper?
They used to make them with I forget what it is, but
I thought copper was the more valuable. Now it's like half zinc.
yeah. But there's ones that look like they're nickel, but they're not. I'll have to dig more. See, this is what I'm talking about.
Yeah, no, you're sitting on a
Copper
gold
zinc
mine.
is, copper zinc is bronze, right? Always mess that up.
Well, thank you for your analysis.
Oh, thank you guys.
Appreciate it.
Most fun part of the day.
I know there's some pizza out there waiting for you. Getting nice and chilly. Nice cold slices for you. But yeah, Japanese yen making big moves. I did get filled on the New Zealand dollar position. So I bought 5 micro lots of that, basically flat as of right now. But I'm going to close this euro franc up $26. It's a pretty big move for a 5 micro lot position.
Yeah.
And that will make me short the euro pound. So let's just get rid of that with one click.
One click close.
And we'll see if the rest of these can figure it out. But
your streak continues.
Yeah. Long the dollar franc, long the Aussie dollar, so short the dollar there, short the dollar with the New Zealand, so synthetically long the Aussie and New Zealand dollar, and then short the euro pound.
I'm short the dollar in this portfolio in every way. Long the pound dollar. I am short the dollar yen. I am short the dollar CAD. And, well, then there's just the euro yen, which is neither, and I'm short that. That's actually been the biggest loser. So I decided to sell another micro lot today.
All right, layer in.
But yes, we'll see what happens with NVIDIA too. We can field some chats from the YouTube chat, see if you got any trade ideas. But yes, thank you, Glenn.
Thank you, guys.
Enjoy your pizza.
Thank you. Happy
We'll
NVIDIA
see
Day.
you- Oh, yes. Likewise. We'll see you next week.
See you guys.
Later. E-minis, flat on the day. Only up 4. NASDAQ up 19, 20. Lunch by lunch. The Dow and the Russell flat as well, but they're on the red side of being flat. And Bitcoin continuing its slide down to 89.5 in the futures market. IBIT trying to give up all my gains from the this year-long strangle, which is now a 65 strike straddle with the stock at 50. But because of the premium collected, it's still up $1,500 on the year. So it's been a great trade, all things considered.
Mm-hmm.
But do you have anything that you've got your eye on in terms of new positions outside of NVIDIA?
Gosh, what did I do today? I mean, I did close the lows. So the lows worked out. The lows diagonal spread. That was the long the 230 in Jan and short the 240 in Dees. We put that on ahead of HD earnings, and we were able to keep it into Lowe's earnings. Luckily, it didn't do what HD did on earnings, and it actually bounced. So that worked out well. Closed that for a small 25% gain. I feel like in the last couple of days, if you got a gain, you got to take them quickly. I don't know how fast you're going to get 50% gains because just the way this market has been. Target, same deal, had a diagonal in there, closed that out for a small loss, $80 loss. That one didn't really move much. I don't anticipate it moving much more. I'm glad I did, actually. It was only down $1 when I closed it, so I'm glad I did. I don't even know what they said, but I'd imagine it wasn't that great. Things just don't. I don't know, man. You know what? Gus tweeted something out yesterday, maybe, or the day before about he said, I could see Target not being around in 10 years. It's not like they do anything better than anybody else. He's got a point.
Would be wild.
Sears, like he said, Sears eventually went away, right?
Yeah.
Who knows?
True.
I don't know.
JCPenney,
right? Outside of that, I got not much going on, and on purpose, honestly. I just feel like right now, I don't know. Outside of a few things, right now is just one of those times where it's just better to watch a little bit, because again, you could see the market is wavering right here, and it's just waiting on the news. So
yeah,
I don't really want to trip myself up on anything. What I got is what I got right now, and a lot of them are like different diagonals or The shortfall stuff I've kind of pushed out to Jan at this point. URA is one that I still have. I'm kind of short deep in the money stuff. Things like that. I've just kind of pushed further out, and we'll see what happens.
Yeah. SMR is a position I want to manage right now. So I sold the 40 strike put for $500. Now the stock's at 20.
Yeah.
After 2 weeks of just absolute selling here. So my basis is at 35 with that $500 credit against the 40 strike put. So what I can do with 100 shares now is I can throw on a 30-35 call ratio spread. So since my basis is at 35, I can go below my basis, buy the 30 strike call, sell 2 of the 35s, and that will ultimately put me in a position to have $500 of profit if we get back up to 35, because I'm basically doubling my delta between 30 and 35. I could also do that for the 25-30 strike. So if I did the 25-30 strike, that would basically set me up for break even, because from 25 to 30, if SMR goes back to 30, I would have a $500 loss on the shares because my short call would be at 30, my base is at 35, but I would make $500 from 25 to 30 in that call ratio spread. So you can kind of do anything in between that, but I think right now that's what I'm leaning towards for January. I also looked at doing something like selling a put at 20 and then buying a call at 23 for a scratch. This would ultimately put me into another 100 shares at 20, but it would bring my basis down to 30 on 200 shares, which then gives me more ability to do that ratio spread or sell a call at 30, sell 2 calls at 30. But I don't think I necessarily want to take on another 100 shares of risk here. So I'm leaning towards going with the upside trade. So again, going with a 25-30 call ratio against 100 shares with the basis at 35. This gives me the ability to break even on this trade.
Like it.
Or if I want to make some money on it, I can go to the 30-35. But again, I could also go like kind of in between here and do something like the 27-32 for a scratch, make a couple $100. But there's certainly much more liquidity in these round numbers. You can see it here with open interest. So I think I'm going to go with this, the 30-35. 60 days out, this thing could rip higher on some good news. So I want to give myself the ability to make some money on this trade versus just scratch it. So I'm going to route this, see if I get a credit here. 30-35 call ratio against my shares. And as long as I collect a small credit, it doesn't hurt me at all. So yeah, let's leave it at 15 cents, see if we get filled. But yeah. Basically selling 2 calls against the 1 long at 30, giving myself another 100 delta between 30-35, make $500 if we get back to 35.
Beautiful.
And then NVIDIA, I'm going to go through the YouTube chat, see if I can find some NVIDIA trades here.
Oh, here we go. Here comes the nervousness. Market's heading lower.
Ooh, ticking red. Ooh.
You could feel
what a day. What a crazy
nervous
day
out there. It's nervous out there.
Let's see. NVIDIA. At what width does an iron condor become a synthetic strangle and we forego collecting a credit of 1/3 the width? So it's not about the width, it's about the value difference between the options. So just looking at NVIDIA here, if we go to the expected move strikes, if you sell the 160-205 and then you create a 5-point wide wing here at 155 and 210, this is a 1/3 the width classic iron condor where you're paying a lot to define the risk against your shorts. However, if you did something significantly wider, you might have to go to like the 160, 130, and then the 205, 235. Now you have a 30-point wide iron condor that you're collecting almost $6 for, But this is like a synthetic strangle because if you look at the raw value of these options for the shorts, both over $300, and then you're defining your risk for 70 cents on both sides, basically 60 cents on the downside. So this is more like a synthetic strangle, where the other setup is an iron condor because you're paying a lot relative to what you're collecting. So it depends on the stock price. It depends on the width of the spread. It depends on implied volatility. If NVIDIA's implied volatility was much lower, I would be able to do this sort of setup that's with a much more narrow spread. So it depends on a number of things, but I would just focus on how much you're collecting in the short relative to what you're paying in the long. Oh, the old pennies are made of steel. So there you go. 1943 pennies of steel. I have a couple of those. Are they worth anything? I don't know.
I don't know. Last I checked, still wouldn't worth a whole lot.
What about a condor on NVIDIA? So short put to finance a call spread. Let's check it out. 160, 150. So I would go to like because you're gonna have to have a wider put spread here. I might go to like December, do it 10 points wide, and then go inside the expected move here and do this for like a credit. So something like this where you've got a 10-point wide short put spread to finance a 3-point wide call spread. Like something like this makes sense. I think what you could also do is you could go a little longer term. So go to January for the short put spread. Do something like this, a little bit more aggressive. The 170, 160 for 1/3 the width. And then you can go to the 2-day or even like the 9-day and do something like this where you've got the short put spread 10 points wide financing a 10-point wide call spread, and you're still picking up a credit. So this is a much higher max profit. You get filled on this. This intrinsic value will fill up much more quickly and get you closer to $1,000 to the upside because you only have 2 days to expiration. So I kind of like this a little bit more. And if NVIDIA drops like a rock, you've got 60 days for it to reverse.
Actually, it's a good trade that you brought up. Besides NVIDIA, obviously we've done these in SPX recently too, right? And Annie Goodman, I don't know if you remember her, the sweet lady who gave us the brownies in Denver and Colorado when we went to the show. Hi, by the way, Annie. She sent me an email and she asked a good question about that. Whether it's this or whether it's SPX, when we do these type of trades, I don't know about you, but most of the time when I do them in SPX, I mean, I probably could and should manage better, but most of the time when I'm putting on things in SPX, for the most part, I'm kind of putting them on not really worrying about expiration, even if it's loss. That's just me. But do you pay attention, like as far as like, do you potentially use like bracket orders or anything like that to protect yourself from any possible moves if you're not away, or, you know, I was just curious. I don't personally. I was just wondering if you did.
Not for defined risk.
Yeah.
Today's a perfect example. If you had an iron condor on SPX for today, this morning it was completely in the money, 50 points in the money, and now it's a full winner or close to it. So defined risk trades, I definitely don't, because the more you lose on a defined risk trade, the less you can lose going forward, and you can make it all back on a big reversal. So I don't like using bracket orders or like stop losses for defined risk trades that are already defined.
Same.
Especially if you have a lot of time left. Like in this trade that I've got here, if NVIDIA opens, flat to down, I'll have a loss on this 160, 170 put spread. This 190, 200 will go to zero. But I wouldn't adjust this. I wouldn't close this for a loss. Like having this in January and having a bullish stance on NVIDIA anyways. So I kind of like this setup. The old condor. NVIDIA getting back down to 170 would be an interesting move, kind of like in between this range where it's been trading earlier this year.
It's not out of the question.
Yeah. And the nice thing is, like, so this is 5 points out of the money. The expected move is 12 points. So even if we get an inside move to like 190 or 191, this will still be a nice winning trade. That short call would go to zero or close to it. I kind of like this. Let's see if I can get filled here.
Then do it.
35 cents. I'll let it simmer. Let it cook. But yeah, let's see if we got any other NVIDIA trades here. NVIDIA earnings won't matter, good or bad. Market wants a big pullback before a Santa rally.
Does it really?
Possible. Bears are winning. Go Bears.
Go Bears.
Love the Bears. Win every game on a field goal. Hate that. Not good for stress. I would sell puts, ratio spreads on NVIDIA. That way, if it blasts off, you collect premium, and if you dump, you're protected.
Teach his own.
Yeah, longer-term contracts are actually not bad for earnings since IV Crush will affect contracts out to 45 days at least. Yeah, you can do whatever you want, and really, if you're directional, like if you're selling a put in NVIDIA, even if you sold a put for January of next year, like if you sold, this is an extreme example, but if you sold the 170 for $2,500, because that's where you want your basis to be below 150, and you have a long-term scope, like whatever it is. If NVIDIA rallies 20 points after the close, this put's going to lose a ton of value, like regardless of time, because you're making money on delta. So don't mind longer-term stuff. It's just a much slower-moving trade. But yeah, to your point, going to the 50-day cycle, like if you're selling a put here, like these puts can lose a ton of value if you get the direction right, and you're going to get a vol crush after the market opens tomorrow, anyways.
If I were to do a ratio spread in NVIDIA, I would probably, my short put would probably be like around the 165 or 160. That's kind of the lows that we saw. God, when was that? Was that in September? Yeah, September. That's what I would do if I was doing it. I'm in the diagonals though.
Yeah, you can do a, what am I doing here? 175, 160 put ratio for a small credit. If you're bearish, but you want to be able to take the shares at a lower basis, this is kind of the setup I'd look for, just giving up all the credit and making this as wide as possible.
Yep.
If you're slightly bullish, I think you do a mixture. I think you would do something like this, like a 175, 165, collect $3. Now you have a lot more profit potential to the upside. You're still reducing basis to the downside a little bit. Anything in between, like a 5-point wide. 5-point wide here with 60 days to go, you're going to have a harder time getting a lot of value out of that put spread. But you're picking up $600 in credit. I might just sell the put at 170 instead. Pick up a little more premium to the upside. But yeah, 10 points wide, 15 points wide for a credit, I think is totally in play here, depending on where you're looking. We all know NVIDIA is the battleship of the S&P, but still crazy to think that today's implied move. Oh, I was just sold on NVIDIA. There you go. The Condor. Today's implied move is larger than the market cap of all but 20 S&P 500 companies. Yeah.
$13.
Big concentration risk. But this is, I mean, we've set ourselves up for this with the concentration in the Qs. And yeah, NVIDIA is just an absolute behemoth.
Well, it's pretty low here. Have you done anything in here? I haven't done anything.
In where?
Oil.
I have
Back down to the 59 level.
Yeah, where did we get in last time in the micro?
58 and change, I think.
Yeah.
So, I don't know. I haven't done anything. Just curious.
Yeah, I mean, it's definitely an interesting move. I think I'll probably wait until tomorrow, see if we get see what happens with the market, and if this really falls down to like 57, 56, then I'll bite. NVIDIA 200 call for this week.
I'm short.
Long or short?
Well, I'm short it because I got again. I'm long stuff against it in December. I'm long the DEES 200 call, and I'm long the DEES 190 call, and so as a result, I'm short 2 of the this week 200 calls.
Yeah, I'm short the 200 call with this package as well. The 190-200 call vertical spread financed by the short put spread. I think if you're buying this call, I would not buy this call, simply because we're short. But no. A 2-day, like you're basically
pretty far out of the money.
Yeah, when you buy a 2-day far out of the money option, like you need NVIDIA to absolutely rip to the upside. If NVIDIA goes to 190, you're not making any money on this 200 call. And that's still a directional move in your favor, but it's not big enough.
No.
So if you're willing to risk $150 if you're buying this 200 call, I would just go to December and buy like the 220 out here. Like at least with a 30-day cycle, if you get an NVIDIA rally from 195 or 185 to 195, you'll make money on this call because there's enough time, and this will have a much lower implied volatility contraction against you.
Yep.
You can see here the 2-day has 120% IV. That's going to get killed tomorrow. December, 58% will probably drop to 50 or maybe sub 50. We'll see. But you have a much lower implied volatility contraction against you if you go to December and just buy the 220 versus the 200 for the 2-day. And it's really like the same price for 20 points higher. And you have a lot more possibility to make money on this trade. And if you don't, you've got 30 days for it to reverse, where the 2-day just goes to zero instantly. Lots of AI deals being done.
Are you in the room where it's happening?
Well, we could look at the prediction markets.
Yeah.
We were talking about yesterday.
I was actually looking at them earlier. I was going to say, I didn't want to disrupt, but I saw this one thing go up on Twitter, and it's true. It's like the main thing on the page on Kalshi. Average sales price of the Pop Mart Labubu, the Monsters Big Into Energy series. I don't even know what the hell I'm saying right now. I'm like, what? I mean, I know I know what Labubus are, but I don't even know what these specific ones are. The Monsters Big Into Energy series? Huh. 6 blind box on StockX. Apparently, these are on StockX. What's the average sales price for the month of November right now? 133. Wow. How about it?
Don't sleep on Oklo. Yeah, I think you could definitely see if NVIDIA has a big move, you could see a big move in a number of products just in sympathy.
Oh my God, it'll be crazy. I mean, the same thing we just looked at earlier, the SMR, the NEEs, all those energy names, the other stuff that obviously AMD and probably even Palantir, and I mean it'll be a global movement if this thing really takes off.
It's going to be a butterfly effect.
Yeah.
And yeah, it's pretty crazy to think how much volume we're going to see in NVIDIA, how much volume we've already seen in NVIDIA. 109 million shares traded today. That is twice the amount of SPY, more than twice Qs.
That's one thing. There's definitely been volume the last couple of days for sure. I mean, even SPOOs right now, 1.23 million contracts. There's definitely been volume, even though things have been fairly quiet.
Indeed. I'm playing for a non-move in NVIDIA myself.
Okay.
Yeah, I mean that's totally in play too. I think especially with the weakness in the market, I think it just makes it harder for NVIDIA to have an absolute nuclear rocket of a move to the upside. But tell us what you've got, and we'll take a look. But yeah, I would probably go to December. Same story. Like I would rather not go to the 2-day just in case there's a blowout move to the upside or downside. If you go to December, you still get a decent vol crush, and you can have a nice wide range for this to pass through eventually. Like the 155, 160 for $160. I like this as like a cookie cutter setup. If you wanted to go closer, play for an inside move, I think that's fine too. Oracle Iron Condor, 210, 220, 290, 300, holding a $250 loss. Not sure if I should close the call spread or roll it down or roll the whole thing out.
Oh boy, 101 IVR in this thing.
Yeah. So I assume you're in December. 220, 210. So you're right at the put spread. I think if your goal is to roll this out, I would roll it out sooner than later. You are now out of the money, so you can roll this out for a small credit if you go from like December to January. As for the call spread, the 290, 300. Yeah, I mean, you could roll it. If you want to stay in December, you could roll it down, but you're not picking up that much premium. Just like if you look at the 68-cent value here, and then if you roll this down to the 270, 280, you're picking up 50 cents, but you're moving your risk down 20 points. It's really not a good risk reward move. You are reducing risk, but you're moving this closer. You're extending your implied duration in the trade, et cetera, et cetera. So I kind of like the idea of just holding it or rolling the put spread. If you want to move it out, you could go from December, buy that back, roll it out to January, pick up a small credit. It says a 0 bit. It's going to fly around here because this bid-ask spread's so wide. But I would route this for like a 20-cent credit, 30-cent credit, and then work it down. You should be able to get filled for a small credit. And then that frees up the risk to the upside. Or you can redeploy the same iron condor for $1, the 29300, but up to you.
Dealer's choice.
Was looking at a 185 calendar, actually, 2-day and December for the neutral move in NVIDIA.
185 calendar.
So the 2-day December. Yeah, I mean, it's certainly possible.
I really feel like it's going to be neutral, yeah.
Yeah, the neutral, this is certainly a neutral trade. I think you just have to be very cognizant of the implied volatility crush. So let's just go to the 21st. Let's just assume we get all this premium on the 21st. And then we're going to have to crush the implied volatility here. Let's bring this down to 50%. Let's crush it at 8%. We'll bring it down to 50%. Let's look at the theoretical P&L here. And yeah, so this is evaluating at Friday's expiration, assuming you get all this premium, and then crushing implied volatility in December. Here's your range of outcomes, down to 175, up to 200, kind of your break-even points. Max profit based on this, $200 if you were to close it on Friday. And then if you get a bigger vol crush in December, this is where it can be a little problematic. If you get a crush down to 45%, 13% crush in December, now you've got a much more narrow range of profitability, and your max profit's $120 here. So it's all going to depend on how much premium is left in the December cycle, but I don't mind it as a smaller, cheaper way to play earnings. NVIDIA December Strangle, 16 Delta, last one here. NVIDIA December Strangle, 16 Delta.
16 Delta. I mean, I know it's going to run you at least $3,800. That I do know because I was looking earlier.
Yeah, so a 160, 215 are the round number strikes near the 16 Delta. Picking up $500. Buying power is $3,600. These ones are tough for me just because of how much this is expected to move, and then how much this could really move too. If there's a huge upset, like it could send the whole market tumbling. So I like to stay defined risk for earnings, but if you're comfortable with this risk and you intend to manipulate this to the upside or downside, roll it out in time, if you're wrong, I think it's definitely a decent starting point from an implied volatility standpoint at the very least.
Yeah, and you're risking almost 8 to make 1, so just keep that in mind too.
Yeah.
It's a lot.
And the risk is just buying power. It could be more.
Yeah.
But yeah, that is it for us. So I was filled on that NVIDIA Condor. So I sold the 160, 170 put spread in January, and I bought the 190, 200 call spread in the 2-day. So the put spread in January, a little bit meatier premium, and this 190, 200, if we get a rally, will fill up in intrinsic value very quickly with only 1 day to go to expiration tomorrow. And I collected 35 cents for the whole thing. So if everything expires worthless, still a profitable endeavor, but looking for a rally here above 190. But yeah, thanks for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal is at Jamal Chandler. Stay tuned the rest of the day. We got plenty of macro events potentially moving the markets. We got NVIDIA after the close. We got a handful of other earnings, but yeah, NVIDIA is a huge one. It's going to create a ripple effect for a lot of other products as well. So make sure your risk is where you want it to be. Make some adjustments if you need to or feel like you want to. But yeah, it's going to be wild after the close today. So stay tuned, and we'll see you same time, same place from the CBOE floor tomorrow.
Yep.
11 a.m. Central. We'll see you then. Peace.
Howdy, everybody. What's going on? And welcome back to another wonderful episode of Risk and Reward. I have an opener question for you all today, as I usually do. Does anybody play any instruments? If so, follow-up question, is reading musical charts the same thing as reading trading charts? You tell me in chat. I'm here joined today, as always, by my wonderful co-host, Errol. Errol, how are you feeling? What's happening?
I'm feeling great. I used to play the saxophone growing up. So in 6th grade, I chose the alto. Shout out to Kenny G. He was the OG soprano saxophone. It looks like the clarinet, but a way upgraded looking clarinet, which was the soprano saxophone. But I played the alto. I don't know how much of those skills translated into trading, but there's got to be some type of connection somewhere. But I'm doing great, brother.
I'm sure that there is. I'm sure that our chat will pull out some wondrous connection between those two things. I do not play any instruments myself. My parents did a good job of getting me exposure to music when I was young and like seeing if that was something that I wanted to pursue.
Okay.
And I did not. It never really struck me. I love music now. I think it's really impressive when people can play an instrument, but it just, when I was a kid, wasn't interested.
I feel you. It looks like Beth was a trumpet player. I remember during that age too, like they had tryouts for jazz band. I remember I got into jazz band a little bit. I felt cool. I just wanted to be Kenny G. That
you guys
guy.
have a band versus orchestra sort of dynamic going on, or was it just like one?
It was completely separate.
Like it was separate.
Orchestra and band was completely separate.
Yeah, my school it was one unit. Like at my high school.
So those performances must have went crazy though. A lot of collaboration.
Well, there was some people who were in marching band who were not in orchestra.
Yes.
But then like anytime there was like a large performance or whatever, like in the theater, they would say band and orchestra together. It was like one cohesive thing, and their class was together at the same time.
Yeah.
But not everybody that was in the orchestra marched, I suppose.
No, I love it. I do remember having my computer down in college and people thinking I was a producer making beats or something like that. So that's the only connection I've heard of or saw with the music.
There you go.
At least.
Guitar, can't read music anymore. I just listen and replicate or jam. Oh, you can like just sound replicate? That's pretty impressive.
I don't know if I can read music or the notes anymore either off a sheet of paper, to
I
be
did
honest.
choir. I'll float that. I did choir. I was not, I must admit, I was not super into it.
But you understood notes.
Yeah,
and fluctuating notes and all that.
I was able to read sheet music at that time. Yeah.
That's fire.
Yeah.
That's fire.
We had to, we did all kinds of performances. It was kind of a fun class. Really.
Yeah.
I only took it as a requirement, but I play drums as Big Deal Donuts.
Drums is fire.
I can play the drums.
Yeah.
It just will not sound very good.
Right.
I take it Big Deal means something else. Anyone wrestle? I wrestle with my sexuality.
Big Deal or Gumpy might be coming in with those comments that throw you off. Like,
all right, jumping over, we have a quick little segment today on reactive trading. This is really going to be more of just a Gus venting session because it's just the stuff I see on social media, like as of late, and just all the time. This has been a problem for years now. It just makes me so mad. So we're gonna talk about it a little bit today and how to avoid being a reactive trader. Although I'm sure that most of our Tasty audience knows most of what I'm going to talk about already. I got some funny examples in here. It's worth sticking around for, maybe some good reminders. So yeah, we can jump straight in here. I have called this the reactive trading epidemic because that is what I believe it is. It is something that is growing in prominence every single day, for which we have no cure at this time. Social media is causing retail traders to trade reactively, and often they get burned. So first, let's establish what I mean by proactive versus reactive traders. Put some characteristics of both here that I think well encompass what I'm talking about. So obviously, everybody knows proactivity essentially means being prepared, doing things in advance, while reactivity means reacting to whatever's happening right in front of you and trying to make the best possible move. Proactive traders, which is what obviously all of us are they're placing trades ahead of potential catalysts. They have an exit plan when they enter a trade. They're not soliciting advice on social media, at least not often. And they know that if the media is talking about it, it's already too late. Lastly, they slowly make profits and grow their portfolio. Nobody's expecting to get rich overnight if you're a proactive trader. Reactive trader is essentially the opposite on every front. Waiting until catalysts happen and stuff's already moving to jump in. No exit plan, just trading on vibes. Frequently soliciting advice on social media. Jumping into stuff after it becomes trendy, after the media begins talking about it. And I do include social media in the media, just blanket statement for the rest of this. I mean both. And they take a lot of all or nothing trades that will blow their portfolio or worse, or their house if they do not work out, whether that's blowing their house through taking a second mortgage to get money to do something stupid or by getting margin called. And I don't think some people realize the severity of margin calls as it pertains to naked options, particularly if you are selling naked options. Things can get dicey on you really quick if you are heavy and wrong
100%
in that regard. So you got any comments? Anything I missed? Is there any proactive trader traits?
I feel like you've hit pretty much every nail on the head. I mean, to the point that you made, it's quite literally opposite, the exact opposite of each other. And I think being a little bit more proactive allows you to be It allows you to not react.
Yes.
Right?
Yes.
I mean,
and this is a good lesson for broader life as well. You should be proactive and not reactive as much as is possible in broader life. Obviously, in life, sometimes things happen, and being able to react and make the best decisions under pressure is an important skill.
Right.
But in trading, especially, you really shouldn't have to be reactive too often.
Yeah. I mean, when you're, I know when I'm reactive in trading, it's typically when I'm unprepared or something catches me off guard. And that's typically when trading is a little bit more tough. It's when you aren't, very proactive about what you're doing.
I don't know that I have ever in my life had a reactive entry. I have had lots of reactive exits because, due to the nature of the market, sometimes a new catalyst emerges that you simply weren't prepared for or could never have calculated. Sometimes a CEO gets shot, whatever it may be. Sometimes, we put giant tariffs on people, and we have the little, April sell-off that we had into the recovery. And there are times when you are forced to be reactionary, but you should not be ever doing reactive entries.
100%.
Is sort of my thesis here.
No, I like this. I like how it's set up. I think this describes two traders very, very well, especially the traits.
Yes. Here is a good example of a reactive trader. I went to Wall Street Bets to find an example of a reactive trader. This was the very, very first post that I laid eyes on, was this guy who bought 10,000 shares of Beyond Meat this morning at $7.50. This, I think, peaked at $7.71 and is now down to sub $5, maybe sub $4 by this point. It has cratered today. The momentum has run out. And that's a large part of this thesis as well, is that people on social media, particularly on Wall Street Bets or similar, dare I say, degenerate communities, have this belief that they have the power, and they've proven that to an extent they do. We proved it with GME and AMC in 2020, and there's been numerous instances since then where retail traders have proved that they have the power if they band together to get at short squeezes and make things move.
Yeah.
But what they do not understand is the limits of that power. There is only so much retail money. The banks and institutions will win every single time. You've seen margin call, and only so much can happen. And so when you leg into Beyond Meat at $7.50 after you've pushed it from 50 cents to that point already, and only then do you decide to get, what's that, $75,000 long.
Right.
That's a problem.
Right.
And the momentum runs out, and this person, if they're still holding this position, which if I know Wall Street Bets, they are saying hodl in Wall Street Bets right now, they're down 50% on that 75.
Well, I just think, like, what is the entry trigger in the world of Wall Street Bets? It's like the entry trigger, the entry signal is the fact that this has already caught a lot of attention, or else they probably wouldn't be buying whatever it is they're buying, or they wouldn't be using that much capital to buy, X amount of shares at $7.50 if they were first. I don't think they'd be comfortable doing it if they were first. So it's an interesting mentality. It's a very herd mentality in that Wall Street Bets kind of community, but I feel like it's like a self-fulfilling prophecy. It's like that herd mentality is like what you need for that niche of the market, but it always ends the same, right?
Absolutely, yes, but it always has to end, and at the end of the day, things wind up trading back at their fundamentals. Wandera chiming in chat here with a very important disclosure that I should have mentioned already. Yes, a lot of what you see on Wall Street Bets and on social media at large, and this extends beyond finance, is fake, is fabricated for engagement. People...
That's true. Even the red trades.
Yeah.
People will probably make up the most craziest stories with like details you wouldn't think are made up, but with details just to make it a little bit more believable.
Oh yeah, and I myself have been using Inspect Element to create funny screenshots on the internet since I was like 9. It is not a hard skill. Anybody can do it. This could very easily be this guy bought one single share and did an Inspect Element and threw 4 more zeros on there. Let's be clear about that. But behind all of this, there is some truth. It is too prominent. There are too many people. I mean, and this is not just not at all just an issue that is localized to Wall Street Bets. This is a broader issue in the financial space right now. On Twitter, on Instagram, you name your community, there are people with this mentality, and this is how they view the markets.
Yeah, and I mean, I feel like the volume tells the true story, right?
Yes.
It's like if we look at the options chain, there is so many out-of-the-money calls that are going to expire worthless. Right before we got the crack on Beyond Meat, a lot of people were thinking this could be something that catches a lot of momentum, and I think people really put their money where their mouth is, because you can see there's going to be a lot of out-of-the-money calls on Beyond Meat that could expire worthless by the end of the week. So we'll see.
Absolutely. So that leads us to the problem. I see this problem as being two-sided. One side is social media glorifies and amplifies horrible trading strategies in risk management because they work for an incredibly small 0.001 subset of people who are in these things early enough. Number two is that social media is the primary news source for many people. And now, I'm not condemning that at all. Social media is probably my primary news source as well, but you have to, especially on social media, use an abundance of caution with the sources of your information and their sources of their information, because misinformation on social media is at an all-time high, and I think that we are going to continue heading towards the moon in terms of social media misinformation, especially in the age of AI.
We're just getting started, am I right?
Yes.
Yeah.
So to that first point, when people see someone YOLO $10,000 in naked calls into some meme stock and turn it into 300 grand, they also think that they can do that. And to the second point, when people see, and this is the critical one that I'm really referencing more so here, when people see a stock trading on social media, they believe it is a good time to buy. That's critical. Is that, and I see this every morning. I go on Google Trends to figure out, what's kind of jumping, what's the discourse, and the trending stocks, the trending tickers that are being searched are always things that have already moved. Yeah. I've never ever seen a ticker trending on there and gone in and it hasn't moved yet and it's being talked about for some other reason. It's always because things are running. And now a large part of that is people searching to see why it's moving in the first place. They don't want to trade. They just want to know what the heck's going on. But I am compelled to believe from evidence on social media that there is also a large subset of people who are looking up these tickers to figure out what's going on and then buy in after they are already trending and have already moved up orders of magnitude higher than where they began. So I think those are the two kind of sides of this issue here.
100%. And I mean, I feel like it's another good point. Like, right, works 0.003% of people, better odds than the lottery. New motto, YOLO for life. You agree with that? Mm-hmm. Nico's putting in the 2 cents.
I suppose. I mean, my number was arbitrary. That's not empirical. Probably is slightly better odds than the lottery. And yes, big deal to your point. This is why I like being a contrarian, a group of people, or anything a group of people like. I usually don't. I have a great point to that end here in a moment. But yes, you are. That's absolutely correct.
And to the point of the lottery again, that's something I actually always thought was like, why wouldn't somebody just like? I would rather blindly buy some calls than buy lottery tickets. I feel like the odds are more in your favor buying certain calls. Well, even if you do it with your eyes closed.
The odds of not losing your money are definitely way more in your favor, even if you just close your eyes and buy some naked calls. But the odds of making $1 billion are much more in your favor with the lottery ticket, I would say, assuming that you put the same price into both positions.
Right. $500, you buying as many lottery tickets as you can, or would you use that 500 in some random calls with your eyes closed? Let's call it that. Which one would you lean towards?
Oh, well, I would. That's an interesting question, actually. You could do the math and figure out the EV on that. But yeah, I mean, I would choose the calls.
Yeah.
But if the stipulation was I have to either hold the calls until I am $1 billion green, or I can buy the lottery ticket and make $1 billion that way, then that's different.
I think the $1 billion benchmark is what makes it a little bit more unrealistic.
Sure. Yes. But yeah, but that's the trade-off. Yeah. I have a separate account for YOLO meme stocks. You know what? That's effective. I like that. That helps you manage your risk, allows you to have a little bit of fun. I think, a fun account, there's nothing wrong with that at all. But a lot of these people, it's their entire main portfolio.
What is the word? Compartmentalize your psychology per account, depending on what you got. I like that. I like it.
Well, yeah, and I mean, I do that too. Just to the other side, I have a safe long-term account where I'm comfortable with things on.
I hope we all.
So it's there's a spectrum. But if
you're right, the psychology is completely different.
It is.
No doubt.
So the solution, I have put 5 points here. I know this is a wordy slide, my dearest apologies, but I've put 5 points here that I think are the solution to this. So they are: trade ahead of potential catalysts, have an exit plan in place at entry, do not take advice from social media, plan to make slow and steady gains, and if the media is talking about it, it's already too late. That's basically the 5 points to avoid it being a reactionary trader. So I have some sub points there, but I've pretty much said it all already. You just you got to be careful. I would like to draw attention to this point specifically. Remember that all of Jordan Belfort's victims wanted to get rich quick. When you watch, if you are somebody who is constantly blowing up portfolios over and over trying to get rich quick, and you have seen Wolf of Wall Street, you are the victim in that movie. You are not Jordan Belfort, as many of them think that they are.
100%. And I think we've understood in the market.
And again, I want to emphasize, I'm not talking about having a little fun. I'm not talking about tossing 3% of your portfolio into some naked calls and something that's trendy and having a little bit of fun.
Full porting. Full porting is like, should be in the dictionary.
I'm talking about the YOLOers, the full porters, and the people who are jumping into stocks that have moved from 50 cents to $7.50 at $7.50.
Like, you guys don't even know what Generation X is up to. We're talking about full port Fridays. Like, so it is kind of funny that lingo catches on.
Yes. So how can you monetize this information? That's obviously the most important part. You can make money on these people every single day. there is a new company that is mooning on social media hype. I know it. I see it with my own 2 eyes. Go on Google Trends in the morning, click business and finance, last 24 hours, and the top 3 trending tickers right there are going to be on the moon right now. You have to be very careful to make sure that that is not a substantiated move. Often it is. Ford Motor was trending yesterday. That's a very substantiated move. But when it's companies that nobody has heard of, particularly pennies that have rocketed to like over $10, those are kind of the spots that you're looking for. Wait for confirmation that the top has been reached, and then get short. Selling call side premium, even better. There's going to be a ton of it in the situations that we're talking about. And yeah, some of the best trades I've ever made in my life came from this strategy. Yeah. I shorted GME in 2020 for an 8x. I shorted Plug Power this year. That had 2 short opportunities, actually, but I took the latter of them from like 480 down to like 220. And I'm short RGTI right now and cruising to max profit. It would take a like 20% move back to the upside to bust me on that pause, and it expires on Friday.
To the points that you're making about a lot of those names, not like Plug. I guess they could Plug. That's literally what was going through my head. But happy to be the counterparty to the fools at Wall Street Bets, and that's such a good point because I think about all of this degeneracy that does go on in certain areas in the market, but it is providing an opportunity for somebody, and somebody is taking advantage of it. So,
absolutely. And what the Wall Street Bets people really don't want to hear is that that's the institutions. All you're doing is creating more short opportunities.
But you know what's hilarious, right? I even think at the institutional level, I think retail grabbing a little bit more of a foothold in the overall market and industry is hilarious to me, and I love it because I think the industry wants to act like retail is nobody as much as they want. But they're paying more attention to social media. They're building algorithms to scrape what the consensus is off of Wall Street Bets and other social media forums. And I think Melvin Capital was just such an example to the industry and the suits that it's something you have to take into consideration because that 2%, 3%, 4% when you're dealing with that kind of capital, if it catches you off guard, it catches you off guard. So I think we made enough of a dent to where they have to acknowledge. They're probably still taking advantage off of all those moves for sure. But the fact that they're acknowledging retail, I think is really interesting.
Yes, absolutely. 100%. So yeah, that's the conclusion here. Don't be reactionary, guys.
Don't be reactionary, guys. Get a crystal ball.
Wall Street Bets is pretty clear they're gambling. They call it a casino. Yes, absolutely. Absolutely. But there is, and I've met people like this in real life before, many of them. Some of my friends are like this, where it's not that they are in Wall Street Bets. It's that Wall Street Bets stuff gets screenshotted and recycled into other social media platforms and then is just presented as, oh, look at this guy who put $10,000 into XYZ and made $300K. Oh my gosh. And that comes without everything that you know you're getting into when you get into Wall Street Bets specifically. And like I said, this is not a problem that is native to Wall Street Bets specifically in any sense of the word. It is very broad, sweeping across more social media platforms than just Reddit and across way more subreddits than Wall Street Bets within that space.
Yeah, 100%. I know eMedia had said trading could also be classified as gambling too. I will say, I mean, if into technical terms, I think we could classify so many things under the guise of gambling, which I'm not going to act dense. I'm not going to act like there's not a little bit more traits that could align with that industry within the stock market. But I will say, what is the definition of gambling? It's taking a risk with an uncertain outcome, if I'm not mistaken.
I think that we're actually taking this the wrong way. I think that gambling and trading are both subsections of speculation. I think that speculation predictions is the broader term here, and that trickles down into traditional casino gambling, into sports betting, even into trading, where it is just speculation in a prediction market. And I mean, especially like, I mean, you could break down most casino games into an options context, like a game of blackjack. Very, very loose numbers here. You are a game of blackjack. Every single hand of blackjack, you are taking a trade that has a 48% probability of profit, and you will, or no, other way, has a 50% probability of profit, and you will win it 48% of the time. Right. And if you backtested that, you would find that it's a losing strategy, and that's why the casinos offer blackjack. Right. But you could take the terms from one thing and put it into any other thing. It's just, I mean, if we obviously you have a way better chance of getting an options trade right, where you can actually make a read and have a thesis than a blackjack hand, which is totally random cards.
100%. I mean, even in the sense of, to the point here, right, driving is a gamble, right? I mean, there is a percentage that we could find. We could quantify the probability that you get to work alive. Like, we could quantify that. Or even, let's say we have 10 colleges. We fill out an application for all 10. We pay for the application for all 10. We're paying for that application because we're assuming we're going to get a return on investment. Sure. And also, you're willing to accept that I only need one of these. and that's going to pay for the next 9 that I'm not going to go to. You see what I'm saying? So I think, in a sense that gambling, I mean, that's always an interesting conversation, dealing with uncertainty, making decisions in the face of uncertainty or in the face of an uncertain outcome. But I don't think we really look at it in a sense of in those ways.
Yeah, well, yeah, and it's just I think that when people say gambling, you think inherent randomness. Like there is, like when you go to a casino, there is an inherent randomness to everything. And while that's true in trading, it's a much more controllable, much more predictable type of randomness.
Depending on how you, depending on how you approach the market.
Depending on,
right?
of course, depending on your strategies and how you choose to go about it. But it's far from completely random. In fact, you can form good theses and be profitable. Save for counting cards, you're never going to be a profitable blackjack player. The math isn't there. If you play enough hands, you will wind up down. But with trading, you can take a trade that has a 40% probability of profit, but feel and have conviction that the percent chance is actually higher than that, and that's why you're going to take it in the first place.
100%.
They felt like a gamble with the Trump news coming out midday. Isn't roulette the best game to play at a casino? Single zero roulette, betting red or black is incredibly low house edge. Yes, that's correct. But your single zero European roulette's really hard to find. Speculative trading has existed forever. Before Reddit, we had email lists, and before that were faxes. Sure, of course. And yes, and I don't think that this is going to go anywhere. I just think that it has become a lot more pronounced in the age of social media. And there are lots of new people, young people entering the market that choose to look at it this way. And I think that Gen Z, and this is empirically backed, is just an inherently more speculative generation.
Oh, 100%.
That wants to do riskier
100%.
things that have higher upside.
100%. And I also think that, I do think Gen Z's, I think they see what's out there a little bit more. I think that has a lot to do with it. I think the spread of information. Again, like my mom and I always have the conversation, she wishes she would have known about certain opportunities at our age that she didn't have at their age. And it's just a lack of education, a lack of knowledge. And depending on what our generation does with it, I don't know, like in terms of us being knowledgeable on things, but I think it exposes us to a lot of what's out there. Like, I don't think there would be as many young people in the market right now if it wasn't because of social media. I don't think there would be as many people sports betting right now if it wasn't because of social media.
I am in the market because of social media. Right. I discovered stock trading through social media, through Discord is how I first stumbled across, I shouldn't say stock trading, I knew stock trading was a thing, but I discovered options trading through Discord. I happened to stumble across a Discord community in 2020 that taught me what options were, and that was like my first thing, and they actually put me on tastylive in the very beginning. They were like, this is a great educational resource. You should be using this for everything. And that was like how I got my start. But I also am exposed to it in the guise of social media. It's just that there's the disconnect that I seem to have with everybody else in our generation, and this extends to anything that's speculative or a prediction market, is that our generation really wants the incredibly high returns. They want the low post up and the incredibly high returns. Something that frustrates me endlessly is the way that our generation sports bets, and they just love their parlays. Everybody just wants the thing where you put in $5 and if 10 people catch a touchdown, I'll make $100,000. And it frustrates the heck out of me because sports betting should be about taking good straight bets that have 1, 2, 3% EV every time and making money in the long term in aggregate. And that is actually an effective strategy. People are professionals at it. Nobody is a professional parlayer. It does not exist.
So
it is not a thing.
What I recognize as more of an issue too along those lines is not really that younger people want high risk, or I'm sorry, probably take on higher risk, higher reward. I don't think that's the issue. I think it's wanting that and then not recognizing the type of hard work and work ethic that comes along with wanting something that offers a ton of reward while still taking on risk at the same time. And I think that's, the Wall Street Bets is a perfect example of wanting it just to happen.
Yes.
Right, without any type of difficult mental thinking of how this can be done, the logistics behind, like none of that, just like buy, sell, hopefully this blows up. Hodl.
Well, yeah, and people are skipping the middle step too. Like for me, there was never any point in my trading journey where I was like, I hope I can find that one trade. Like for me, when I first started trading, I was like, I think it would be really sick if I could do this so well that I can just work for myself and I can sit at home in my comfy pants and trade. Like that was the end goal. I was like, I would love if I could do this full time. And there was never any part of me that was like, oh, I gotta just make the one trade and then I can retire. Like the viewpoint the entire time was, this is something I want to do profitably for a long time and retire at a relatively normal retirement age on this. And so many people just don't think like that. People are thinking, I want to retire tomorrow.
And the thing is, I think it's just I think it is just ignorance, not even in a bad way, but it is just a lack of education. Because I remember my girlfriend's friend one time had made a comment about how she's in the market now and she's trading, she's doing this or that, and she had made the commentary talking about how like, oh, I just need one trade, like I just need one good one, and one good one is all it takes. And I never understood that mindset, but I think it is just a lack of knowledge, a lack of education, and a lack of a sound approach on how the market actually operates for individuals to come in thinking you just need one trade and one trade changes everything. I never understood that or where that's coming from.
Yeah, no, I agree. I agree. People want to be they have their life changed tomorrow, and there are very few people who can pull that off, and such has been true throughout all of history. Get rich quick schemes. There's a reason they're called schemes, is what I'm saying. There's a reason that term exists, is because they typically are schemes that are designed to make the originator of the scheme get rich quick.
Yeah. With that being said, we can dive into the trading view for a little bit. Let's see what the market's been up to. Took a few trades today. Today we took 8 trades, okay? Out of the 8 trades, 2 are green, 6 are red. We got a 25% win rate on the day. We were able to walk away with a profit. So let's break some of those down, because it was a difficult day to trade. It was a little bit more directional, a little bit more volatile, but we picked our spots. I think we could have done a little bit better at picking certain spots, and I think we could have mitigated risk in a couple areas on the chart a little bit better that we'll get into here in a moment. But the first trade this morning, right out of the gate, we got that extreme sell-off. Didn't even wait for us. I mean, the first minute of the day on that candle, we dumped right to the downside. Down here, I was looking to get long, right? We're trading towards the extreme of this level of value. I was looking to get long. I got stopped out initially on the first trade, which was about 5 points. I re-entered, was able to add to the position, scaled out on the first push after taking out these highs. And then once we got near the next level of value, I scaled out the last position, and then we were able to scoop up about 64 points. What was nice about this one was, we took a 5-point loss on the first trade, but that was with one contract. And the second trade that we caught, it was 64 points. Not only that, we were able to use 2 contracts rather than one. So that was a nice start to the morning, not catching the sell-off in the morning, but being able to catch that pop. And then right after that, we're trading at our level of value on the opposing end. I look to take a short. This little pop stops me out of the market, so we were down another 6 points. I then flipped long here. I was like, you know what, let me flip long here, manage our risk. Decided to get out of that trade, kind of break even, -1 point. So this just helps us gauge how many points we're up on the day and like what opportunities we want to take, after the few trades that we've taken. So far, we're about 4 trades in, 3 losses, 1 win, but we're managing our risk best as possible. We sell off to the other end of value. At this point, it's like, is the market going to take out new lows? Is the market going to take out new lows? We use this level of value as a support briefly. We come back down. I look to take the long. I'm like, you know what? I'm extremely bearish right now. Like the narrative is like, I think we could probably head lower. I've been very bearish anyways, but I didn't want to impose my own bias, so I decided to take the long. I get stopped out immediately. That's another 5 points down the drain. But the one thing I want to point out that I think is really cool is, because these are the same levels we've been working off of last week, right? These are going to be the area of interest. Although I was wrong, it's like if we were looking at the same level and we had a different bias, I wanted to get long, somebody else wanted to get short, your short would have paid you. And I mean, the short would have paid you almost 100 points within literally 5 minutes. But I got stopped out immediately, but whoever was on the opposite end of the trade literally caught a 100-point move. So that's kind of how the cookie crumbles sometimes. But that was another -5 points. I wanted a dip buy. This was a terrible dip buy, I will admit, and it was early, and I'll explain why it was early. This dip buy was more of a guess. We're going from value to value here now, so let's break down this logic just a little bit more. Let's zoom out. This over here is when the market is within balance, right? When the market is within balance, we can expect mean reversion strategies until proven otherwise. And I happened to take the long where it proved us otherwise, and then that's when it broke down on me. So that's the whole reason why I was looking for longs here and looking for shorts here, right? The longs played out really well. I got stopped out of the shorts early, but the shorts still would have paid. It always comes down to execution and where you're putting that stop loss and kind of how you're managing it.
When the market moves, traders need to move faster. tastytrade Active Trader tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
When the market moves, traders need to move faster. tastytrade Active Trader tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on tastytrade. Genius loves company.
That's real life. Yeah, we just living it up, yo, that's real life. We just living it up, yo, that's real life.
But they kinda like it when I'm feeling myself. Just to look at me, I don't gotta level up. But they kinda like it when I'm feeling myself. I'm feeling myself. I'm feeling myself. I'm feeling myself. Just to look at me, I don't gotta level up. But they kinda like it when I'm feeling myself. I'm feeling myself. I'm feeling myself. But they kinda like it when I'm feeling myself. Just to look at me, I don't gotta level up. But they kinda like it when I'm feeling myself. I'm feeling myself. But they kinda
We're back. Still Wednesday, still November 19th, and for a few more weeks, it's still 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak, stepping in for Thomas Westwater today. Ilya, it's probably going to be the most exciting 12, we'll call it 18 hours that we have here ahead of us, maybe until December 10th.
This is getting spicy out here. The market is very clearly on pins and needles, and it's very interesting to watch.
Interesting to watch. You know, it was interesting to watch silver up 3% this morning when I was finishing giving Luke his morning bottle. It's not so interesting to see it after it gets slammed by nearly $2 from the highs over the course of 30 minutes. That wasn't so interesting.
Not the best. So I was looking at gold, and it looked like it was going to break down. So I flipped, thank God, by the way, for 1 ounce gold futures. What a beautiful instrument. Anyway, as I was looking at this overnight, because I have my exposure now not through GLD, but through the 1 ounce futures, and so I can actually manage after hours, which is very helpful. I got out of the position thinking, oh man, this thing is flipping short. And then when it went the other way, reversed the position, took a little loss, but was able to push my duration out and was feeling pretty happy being long going into this morning, going, well, I was nimble, I took a little loss, I bought some duration for it, but goody, this thing is up. Maybe not.
Well, it's one of those days. Today was Vixpiration this morning. So if you saw the stock market jumping up right after the open and then immediately come back in about an hour or so later, don't be shocked. That's what typically kind of get those zany moves on Vixpiration days. But it's a market that's nervous for other reasons. We have NVIDIA this afternoon. Ilya, I know that Nick and I are going to be on last call today. We're going to do that warm handoff, you, me, and Dylan, and then the NVIDIA earnings themselves out at 4:20 Eastern, 3:20 Central Time. So we'll be able to carry that live. And then tomorrow morning, 8:30 a.m. Eastern, we're going to have non-farm payrolls, which brings us to perhaps the catalyst of the day so far, which is to say that, as we said on an episode last week, no data, no cut, we're reminded of that today when we get this move in the SR3 Z5 contract, the December Fed Funds Futures contract, the 3-month SOFR, here on the screen. It dunks because the BLS decides to release their new updated schedule. And along those lines, they told us that we're not going to be getting the October jobs report. Now, there's a caveat to that because, of course, we can't get the full jobs report because they didn't conduct the household employment survey. And without conducting the household employment survey, you can't get the unemployment rate. That's not unknown. What's the frustrating part is the note that they attach to it, which if you were to scroll down and read between the lines, we're not going to be getting this until December 16th. So we're not going to see the little bit of November jobs data that they have until December 16th, which means exactly what? Why do we care about that? Why is the market giving us this reduction in Fed cut odds? Because it means tomorrow is the last jobs report that we have for the rest of this year prior to the December Fed meeting. So we have tomorrow's jobs report. We have the CPI data on December 10th, the morning of the Fed meeting, and then that's it. That's what the Fed has to make these decisions about whether or not they should cut rates. At their low today, Ilya, the market bottoms out with an implied probability of just under 40% of a 25 basis point cut. Bitcoin gets slammed, Ethereum gets slammed. You see that it spills over into stocks, maybe even the precious metal space. But no data, no cut. We're reminded of that reality here on this Wednesday.
And we haven't even seen the FOMC minutes yet, which will no doubt point in a similar direction. We'll see if the markets, by the time that this comes out, find any kind of relief that it's not worse than it is.
When do the FOMC minutes come out?
They come out in about 24 minutes here.
That is the beautiful change about the new Futures Power Hour schedule, Ilya. On Wednesdays, we get the FOMC stuff now.
Yes.
We get the meetings at 2.
We're going to talk about it live here.
Yeah,
I mean,
we'll be here
obviously, I will drone about it on Macro Money for 30 minutes with anywhere between 10 to 22 charts. Those have been kind of the bounds for how many needless deep dives we do on Macro Money, but we must have data, and bit data we have, but we're going to be able to read the market reaction here in real time. And then we'll see where the dust settles. But as I was writing about this for tastylive.com yesterday, our news and insights section, and talking about what this minutes release might do, I was quoting Powell from that press conference where he said, look, we don't know what data we will have in December. What do you do if you're driving in the fog? You slow down. And that really tells you where their head is at. Now, they did forecast 3 cuts in the September SEP. It was by the narrowest margin that they did because, of course, one, Stephen Mirren, decided to put his dot on the collective forecast way out of step with everybody else. Not surprising. And so that pulled the average and narrowly stuck a 3rd cut into the forecast. Ostensibly, the Fed is going to try to make the case that that forecast doesn't hold when they update the SEP in December, because that's the other thing. They're going to have to give us a 3-month forecast, at least, until the next time they update it in March, without the benefit of any data. So are they going to change anything? Well, if they don't deliver 3 cuts, if December is off the table, they're going to have to perhaps push 1 more cut into next year. So we'll see how all of this goes. But if the Fed is not seeing obvious signs that it needs to act from the economy and the markets themselves, and it isn't. I mean, yes, we've had a sell-off in risk assets, but credit spreads are not seizing up. VIX is not doing anything crazy. Neither is the MOVE index. Bonds are not doing anything insane. So they're not getting a signal that things are unraveling in real time. If that's not the signal that they're getting and there is no data, what are these minutes going to say? There isn't much for them to say.
There's not much for them to say, and we've heard from a number of FOMC voters this week. When we saw this information come out, I tweeted it out. I'm not buying the sentiment that a Fed rate cut in December is not happening, simply because there's no data. The data that we do have may not be official government data, but the private sector data that we have has not been good by any stretch of the imagination.
I mean, it depends. The ISM numbers have been okay. The S&P Global PMI numbers have been okay. They're actually going to get updated on Friday for the latest edition. So that might be a more market-moving thing than even it has been in the past.
It's possible. I'm not convinced that the Fed is going to take a look at what they have on hand and say we need to wait another month. I don't know materially if there's a difference between them cutting rates in December and January, if it means that they get a little bit more data. But there's always that the worst place for the market to be, is not just uncertainty. It's when they feel that the Fed is late. I'm reminded of what happened last summer when we had the July jobs report come out on that Friday. And the data showed us that the rolling 6-month average of the unemployment rate had moved above the 3-month average of the unemployment rate had moved above its 6-month low, triggering the SOM rule.
The summer growth scare, yes.
The summer growth scare. And the Fed chose not to cut in July. And then we get this bad data and the market goes, oh gosh, the Fed's late. And of course, the data isn't great the next few weeks. And so ultimately, with inflation coming in, the Fed says, we've seen enough. We can cut by 50 basis points to get the cycle started. If only as kind of like a mea culpa, we should have done 25 in July.
Yes.
That feels like we're in a similar setup again for December this year, where the market may reflexively throw up because it doesn't get its cut. We get the data. Oh gosh, the Fed should have cut. The market dunks out a little bit. We get a little bit more that moves sideways. Okay, the Fed's seen enough. Yes, they're going to give us not just 25, they could give us 50. Hold on a second, everyone. We're going to get 50. Maybe there's not a problem anymore.
Well, and this was sort of the interesting thing, right? Because when the Fed finally did that 50 in September last year, and then they basically all but pre-announced 50 more at the 2 meetings that followed, the markets actually read that as too dovish and said, whoa, this is no good. What are you doing? and that was actually a bottom in the dollar, for example. It was a top in the bond market, and yields actually went up after that. Now, stocks were on their relentless grind, so they didn't take too terrible of a hit. They mostly continued to head higher, but not really in response to this. They were heading higher since early August, and really continued a sort of unrelenting rise all the way into the top in December. But they already basically stopped rising by mid-December, and then wouldn't do anything again of substance until the second half of February, when the tariffs spooked everybody, and we had those 2 months of a down move. So it's interesting how this might pan out if the Fed is late. There's certainly voices out there, Chris Waller, of course, Stephen Mirren, who want more aggressive cuts. In the case of Stephen Mirren, it's an interesting situation where he really is trying to maintain some semblance of economic coherence, but is having a hard time because he has to say that the economy is both good and needs aggressive easing. And it's a magical sort of sleight of hand that he's attempting, but it just sounds ridiculous.
A good economy could use easing. A good economy doesn't need aggressive easing. Right, and that's the difference.
Well, and apparently Stephen Mirren has never met a rate cut he doesn't like.
Well, neither have I, but that's a different story, I suppose. Ilya, it's a weird day for risk. Bitcoin, Ethereum, perhaps the indications that the pain wasn't over. We did have a nice bounce yesterday, but we're now at new weekly, monthly lows here. So the risk continues to come in. And when does it come in? Just like everything else.
Keep backing it up.
Well, it's everything else.
I'm still short. Keep backing it up.
we get our pullback shortly after 10:30 a.m. Eastern. Then it ultimately coincides with the BLS announcing that they are not going to be releasing much more significant economic data in the run up to the December Fed meeting here. So you get your VIX pop in stocks. We get our drop thereafter. We're back to 66.52. So S&P, NASDAQ, both still above water today, up by just under 0.2%. The volatility sticking around, I suppose, is the noteworthy consideration here as we kick off our equities review and start considering what may happen with the NVIDIA earnings report later today. Ilya, it's still at 23.64 on the VIX. I don't think I showed this yesterday, but I did share it in one of our research chats. So let me just pull up this image here. Is it going to open up on the screen? No, but it's going to open up here. This is from Schroders. Where do markets go depending upon the current VIX level? When you are trapped in a zone, the current level of the VIX is 23.73. Through February 22, when you're at a 23.73 VIX, you are in the portion of the curve where historically the next 12 months returns for the S&P 500 have been the worst. This is the toughest spot. This is a really tough spot with VIX here right now. It's a really, really, really tough spot with the VIX here at 23.75. So going into NVIDIA today, right, the market's bouncing a little bit. Semiconductors are up. Have we seen enough to say that it's over and it's time to go full board by the dip, Mr. Spivak?
Oh, absolutely not. Of course not. We have major event risk by way of this NVIDIA earnings report. And what have we learned? The Magnificent Six that aren't named NVIDIA have already reported. What have we learned? We learned that the top was October the 29th, the last time the Fed announced policy. Between then and now, we have had all of those Mag 6 names report. Of them, Meta was the disappointment. Everybody else did fine. What do we see in these indexes? Do they care? No. And so, really, this comes down to whether the markets even wish to dignify this news, unless it is so explosive that it really changes the paradigm. Because at this point, the overwhelming majority of the S&P 500 and the NASDAQ constituents have reported in the 90%. We have 27% year-on-year earnings growth for tech. We have 13% earnings growth year-on-year for the S&P 500 as a whole. The broadest possible kind of measure. Earnings are doing great. Again, Meta notwithstanding. But earnings are doing great. And what is this market doing through this earnings cycle? It's falling. And it's falling because it doesn't care about these things. So will they care about NVIDIA? Well, maybe if NVIDIA either comes up a disappointment, which seems unlikely, or the numbers are so stellar, so magical, the unicorns are stampeding to such an extent that the market is forced to rethink its entire posture. Now, is that possible? Of course it's possible, but is it likely? No. So when you look at this, then you go, okay, the normal surprise for NVIDIA, going back to the beginning of last year, when we switched from double-digit surprise quarters to single-digit surprise quarters, that was the first quarter of 2024 where we made that switch. The average has been anywhere between 4% and 10%. So let's give it the benefit of the doubt. 10%. Against an expectation of $1.25 EPS, that's $1.38. If NVIDIA does not beat by at least that much, if it's not at least $1.38, consider that a disappointment relative to the recent cadence. Now, what if they deliver inside that range? The past few weeks have told us the markets are not impressed.
The markets may not be impressed. You know, one thing that's funny is that if we think about a trailing 12-month PE, the month that's about to be knocked off is an 81-cent month or 81-cent quarter. And that could be replaced by something that's $1.26. I have here on the TradingView consensus estimate. Mm-hmm. So it's another one of these situations where the PE ratio for NVIDIA is going to go down after today's earnings report, unless they miss very badly. So if you like it at the current valuations, you might like it tomorrow a little bit more if price stays the same. That's not a compelling investing or trading thesis.
No.
For what we do around here, Ilya. So not going to call that actionable, but the move in SMH here today, you know, we did try to get back above that trend line from April, from the lows that we had at the start of September earlier in today's session. The expiration does those kind of funny things where it gives you that false hope. And then we ultimately fail there. It sets up a nice little paradigm where if you're bearish right now, you're going to know if you're wrong tomorrow. If we're looking at a close back above the 1 month moving average in semis, which is north of 346 and 3/4 right now, you also find yourself then back in the uptrend from the April and September lows. And this then looks like a bit of a false breakdown, a hold of your 50-day. What's a 5 to 10% correction between friends and something like semis? No problems. Nothing that some good NVIDIA earnings couldn't solve. But otherwise, the table is set and looks kind of crummy right now. Even with this little bounce today ahead of the earnings, that's a pretty big fade. And you're not seeing much of a, well, you're not even getting the benefit of the Russell catching some of the, you know, sell-off from tech. It's just not it's not great, Bob.
It's not great. It's not great.
42.4 IVR. Is there a level that you have in mind? Like if we wash out to the August 1st lows, we've wiped out 3.5 months of gains at that point in time. Where do you think is a fair value then?
So if I look at NASDAQ here, kind of the line in the sand is about where we are now. Let's call it 24,300, something like this, with maybe about $100 on either side, maybe something up to 24,400 and change down to 24,200 and change, something like this. That's kind of the line in the sand that I'm looking at. That's the place to test. If you break through these levels, The next place you're going is probably the 2,300 mark, and that's a really big area. All the way down maybe to the 2,200 mark. That would be the top from July of last year. So in there somewhere is a major inflection. And if you can hold it there, well, then maybe all you've had is a little bit of a correction. And maybe it's time for a paradigm reset. So April then to October is a paradigm, and whatever comes next is the next leg of the up move, maybe. But I would argue that if you break 23 in a conclusive way, you're in some bad sort of reconfiguration. You might even end up heading back into the 18,000, 17,000 area around April's lows, because the level of selling might start to take on momentum of its own. This is the most hated rally for at least that I can remember until maybe the first half of 2008.
Is that from
where everybody was
personal
deeply
standpoint?
Where everybody was deeply upset with the I was not short then at all. I wasn't expecting a collapse. I just thought if there would be a collapse, the dollar would go up. And that was my out of consensus view at the time. Boy, did it ever, eventually. That was still my best trading year ever, 08. But that was like a 300% year. But the essence here might well be that if there's any kind of significant selling, if selling shows any kind of reasonable momentum, all these people that have been sitting here frustrated, going, this thing should have cracked by now, and have been basically trapped long because they have to be, they're going to pull up anchor. And that thing can overshoot by a mile.
Well, I mean, you could see the anchor pulling up in the crypto space. Ethereum is down another 7.7% today. That feels like that's been pretty common in recent weeks, at least since the start of October.
Yeah.
Crypto itself has seen about $1 trillion of market cap disappear, 500 billion of which comes from Bitcoin itself. So the appetite just, not there. There's a guy who I follow on Twitter. I actually can't even think of it goes by Zypho something. But he pointed out this morning when the stock market was at the high, he goes, until Bitcoin and Ethereum start bottoming, I wouldn't take this stock rally too seriously on expiration day. And so we find ourselves having eliminated most of the gains since then. So I thought that was an astute,
It's probably a sound assessment of risk sentiment. Incidentally, as we're talking here and we're 5 minutes away from the FOMC minutes, I've reloaded back on the long side of the dollar. The idea that the euro or the pound were going to mount any kind of a reasonable advance, that seems to have evaporated here. So earlier this morning, I've reloaded. So I am now fully in the risk-off camp, including the dollar long side of that exposure.
That's basically what I did this morning. I was up 643, market was open, I was wired, done with the baby bottle, time to buy some dollars.
Yeah, time to buy some dollars. That's right. I mean, I'm happy I bought some against the Aussie earlier in the week, because the pain of flipping over the euro and the pound was not so great. And of course, I've stayed short yen this entire run and didn't take that off because it didn't crack.
Yes. Well, we got to talk about the yen in a bit and start thinking about intervention trades, given some of the commentary that we've seen there. Ahead of these FOMC minutes, we are seeing that bonds are still up slightly. Notes and bonds are again off the highs, very much like yesterday.
Yeah.
We see here 112, 27.5 ticks for notes with a 24 IVR. Bond ZB, they're up at 116 and 29 ticks, 15.7 IVR. The high was 117 and 2 ticks today. So this two things here, right? From my view, holding above 116 means it's good to stay long. In notes, holding above 112 means it's good to stay long. the decline in the cut odds is not necessarily hurting the bond market anymore, though. Even though we see cut odds fall to their cycle lows,
Yes.
the bond market is telling you that it's not saying it's for good reasons, right?
Right.
You're not seeing growth in inflation expectations reinflated at the long end of the curve, leading to lower prices. What you're seeing is the market saying, yeah, those cuts may be going away, but you know what? Just because they're not cutting doesn't mean that the knock-on effects, the reasons why they would cut, aren't persisting.
That's
so
right.
I would look to the bond market today rather than the
I'm long.
contract.
I'm long.
Take this.
I'm long and looking for this range bottom to hold again. As we've talked about on last call last week, I was coming up on Friday. I was coming up with expiration, so I reloaded and I put more duration into my call verticals at the long end of the curve. I'm with you. I think the bond market is exhibiting extreme resilience here in the face of evaporating rate cut odds. And whenever the market price action disconnects in this obvious a way from what should be happening, from what's going on quite literally in other markets, it's not anybody's opinion. Fed funds have moved. Liquidity is behind that move. And the bond market doesn't care. That's telling. That's very telling.
I'm with you because I'm speaking my book, leaning long deltas
Yes.
in both notes and bonds right now.
Yes.
Even today, you think about this being maybe SR3Z5 isn't the way to play it. Maybe it's through Kalshi. Kalshi is currently pricing in only a 34% chance of a cut. I think that's a misread.
It's funny. I was having this conversation with my wife yesterday, and I was saying, look at the market is at 50-50. It's confused. It's not even sure that there's not going to be a cut. It doesn't know what's going to happen. And she goes, what's Kalshi saying? And we looked it up, and it was almost identical to Fed funds. 50-50 as of last night.
It's dunking down here today. There's a spread trade in there, Ilya. You could buy Kalshi, you could short SR3Z5. You could catch
Something
the
in there.
difference. There's a little bit of arbitrage if you're willing to be that kind of person, which I'm not because we don't have Kalshi here on the platform, and this is a future show.
Right.
My point, though, broadly, the long
is Kalshi itself even a publicly traded instrument? It's not,
CFTC,
right?
CFTC, some of them are CFTC cleared. Some of the contracts.
The contracts, not the company.
No. Monthly chart, 20 years. We're kind of just creeping out of that trend line from the COVID highs, from the high that we had back in April around the tariff spike. Leaning long deltas here still seems to make some sense in my view. I do want to leave up the 5-minute chart here, though, Ilya, because it is 2 p.m. Eastern, which not only means we're halfway through Futures Power Hour, we will be getting the FOMC meeting minutes here at the top of the hour. And John Williams, the New York Fed president, he's going to be speaking. He's a voting member. He's going to be speaking here at the top of the hour. So it's likely that I would think that we have some sort of influence. Ilya, aside from what's going on in the bond market, obviously we have to talk a little bit about what's happening in the currency space later on and what's happening with Japanese yields and them not supporting the yen right now. Have you noticed the dollar strength today is really without the accompanying boost in treasury yields? I can't help but notice that we're not looking at 02, 2YY. We're not really seeing, let me pull back to a daily. Are we here? No, that's not what we want to do. We want to go to this. We're not seeing U.S. yields shoot higher right now, even though the dollar's starting to gain steam. We're seeing stocks struggle. We're seeing Bitcoin struggle. What does this tell you about the state of risk appetite in the market right now? That what should theoretically be good for the yen, good for the other currencies, is actually proving to be harmful.
It tells us, and I think it's told us this really since mid-September, that the dollar is not a creature of rates, and that in this environment, that we are all the way on the other side of the dollar smile. And if ever, by the way, there were a reason to look at these markets and say a top is approaching, the dollar has been saying it, and it's been saying it since September the 17th. Now, what do we know about the September the 17th? That's the beginning of the rate cut cycle. That's when the Fed finally begins to move. Now, amazingly, the dollar hadn't bottomed at a lower level than that low since July. It set a low in July and hadn't lost ground through those lows still since. It came to retest them in September. That September, when the Fed started to cut, was the bottom. And that told you the dollar is no longer going to be held back by these things. They're priced in. There's nothing else there. And so the dollar has become a creature of risk sentiment. And so now, as stocks feel the pain, the dollar is back on the upside. I don't think rate cut odds rising would necessarily hurt it any more that rate cuts evaporating have really been a big factor. I think the larger issue is that people are starting to favor cash because they're exiting risk exposure.
Exiting risk exposure ahead of NVIDIA earnings, ahead of non-farm payrolls tomorrow. It's a lot of fun to see that happening in the market. We go over to bonds and notes after these FOMC minutes here. And while we have a doji forming in notes, some of the takeaways here, having just scanned through it, the committee emphasizing that policy is not on a preset path. Future moves will depend.
Here we go.
Future moves will depend on incoming data, of which there is none.
Several said December cut could well be appropriate, but many, quote unquote, said a December rate cut is likely not appropriate.
Yeah, likely not appropriate because they see a moderate pace of economic activity. They see, I mean, even with the labor market here, okay, the job market's cooled gradually. Job gains have decelerated. Unemployment's ticking up, but it remains low. And while there are increased downside risk to employment, the turnover is weak, labor supply is constrained, productivity gains are influencing demand for labor. Productivity gains basically just being AI. It's giving them some comfort on inflation pressures, but it's not enough. It's not like unlimited room for them to say, you know what, we don't need to worry about inflation. We can cut. This doesn't really give you anything to suggest that the Fed is in a hurry. It seems like a game of chess though, right? It's almost like they're complaining, hey, you know, Trump, you want your cuts, you got to give us the data. If you're not going to give us the data, we can't do this like trust us kind of vibe monetary policy. We need something substantive to show the market. So tomorrow, if it's a bad report, everyone's going to color in between the lines and say October was worse.
Yeah.
And at that point, do we really think the Fed's going to wait for December 16th when all of a sudden, what if the November figures they have, right?
Yeah.
It's just October, November gets released at the same time. And both of those are bad reports as well. Then the market's going to get punched in the face. So the Fed it's not really about doing that. I don't think we have much more to discuss here with the FOMC minutes for now. You and I actually need to sit through them and read through them while we're not on camera.
Yeah, we're getting a little bit of a dollar pop here as a result. So that's something. We're getting a little bit of a nudge lower in Bitcoin, a nudge lower in gold, a nudge lower in the S&P 500. So it's a little bit heavier after these minutes, but it's not, let's say, terribly so. In fact, the S&P is already kind of attempting to anchor here. So is gold. So maybe not the worst. Probably the dollar is the biggest winner so far, just in these first 6 minutes.
Well, you have gold here today coming in off the board over the course of the session. It was climbing steadily overnight. Nice little solid uptrend from Asia Open yesterday until just about an hour after the U.S. cash equity open today. And then it decided to take a bath from 41.30 down to, well, about 40.55.
With risk, by the way. That was the turning point in both stocks and Bitcoin from the overnight consolidation, too.
So you see it in Bitcoin, you're seeing it in stocks. We're not going to get
simultaneously same turning point at exactly 1500 GMT.
No data, no cut. Market's not exactly a fan of that. So we do get a recovery 40.85. This was a better looking chart this morning. It's still a decent looking bounce here right now, although that upper wick isn't exactly the most comforting development.
It is not. It is not.
There's a few
for those of us that are long here. We are not pleased with the wick.
No, but you know what? Yesterday we got this nice little morning star candlestick cluster at a place where the market should find support. Today we're off the lows, and now in this 4-hour candle, we're still pulling back up and rallying. You could see it with silver here. Silver's had a much more interesting day because it was up over 3% at one point. But here you see that turn again, right? Long lower wick as we're continuing to build off of this area where resistance was found throughout late October. I have no regrets being long the metals here, particularly because we continue to show, directional improvement, Ilya, right now. And there is a slight uptick in volatility in silver compared to where we were yesterday morning, reinforcing the view that this is a market that's in an uptrend. But these things are proving very, very, very slippery intraday again. And it's a market today, as expressed, got very spooked quickly when everything else was coming back in. I think that goes to your credit that you don't really view gold and silver as safe havens or alternatives for dollar debasement at present time. They're behaving like risk assets. They're kind of trading like stocks right now.
Yeah. I mean, I think we've entered an interesting world, and you and I have talked about it for a few years, this idea that post-COVID, what COVID did was accelerate this massive regime change in markets, that it would have happened slower, that it maybe began as early as 2017. But COVID really put it on steroids. And it was this idea that inflation had finally reached as low as it was going to reach, and that it was starting to build the pressure for a longer-term inflationary cycle, because, of course, post the 2016 election, we started to put deglobalization in overdrive as the Trump administration came in to channel those concerns. And at the same time, we started to see baby boomers really retiring in droves, a process that COVID really accelerated. And that has started the process of turning over the labor market to a more scarce state. And that, of course, is inflationary as well. So we started to see this sort of transformation that started to build a world in which there would not be one risk narrative, risk on, risk off. There might be several. There might be this speculative narrative and that speculative narrative. The way the world, incidentally, used to work until maybe about the early aughts, and especially, of course, during the 06 to 08, 09 crisis, where really correlations locked at one, and there was a group of assets that went this direction, and there was a group of assets that went that direction, and that was it. And we lived in that world for years, decades. Well, not decades, but at least like a decade and a half, let's say. And as we really got to the unraveling of global economic norms, as we went to deglobalization, as we went into a more inflationary environment, we've emerged with a gold that isn't maybe the classic foil that it's been over the past decade and a half. And that gold is now its own speculative story. But when you go to these kind of market-wide risk-off settings, speculative stories wane. The difference here is that they don't seem necessarily to be related speculative stories. They seem to be separate ones. I would argue we're probably going to get more of this in the future, where maybe we have 4 or 5 different speculative narratives going on at the same time that aren't necessarily correlated to each other.
Lots of different narratives. There's a narrative about Russia, Ukraine that we're going to talk about in the energy portion next because of a rumor that's been going around today, leading to oil getting smacked around, down by almost 2.5%. Ilya, the price action is not great, but we're holding above the levels. In terms of the trades that are on, I'm still leaning long for a move up into the highs that we saw from mid-October in gold. Likewise for silver.
I'm sitting for now, yes.
Yeah, staying long. What are we doing here? Silver is still 50, 50 and a half, 55, 55 and a half.
Yeah.
On the call spreads, 34 DTE and 69 DTE. So there's really much ado about nothing. I'll say, though, if we see NVIDIA crack today and the markets start to go down, NVIDIA has such an outsized impact on the market. I saw a note earlier, 717 different ETFs hold NVIDIA. 717 different ETFs hold NVIDIA. That represents more than 3.5 billion shares in aggregate. Just as a point of reference here, for anyone trading these things, I don't know if you are, I'm not trading any of these right now. But if you are in the Granite Shares 2X Long NVIDIA Daily ETF, NVDL, the ProShares Ultra Semiconductors ETF, USD, the Global X Pure Cap MSCI Information Technology ETF, GXPT, the ESG Advanced MSCI USA ETF, USXF, the VanEck Fabless Semiconductor ETF, SMHX, or Strive US Semiconductor ETF, SHOC. Each of those ETFs have more than a 20% allocation to NVIDIA.
Mm-hmm.
So if you think that the benefits of diversification will save you on a day like today, just be mindful of what you're trading and how liquid it is. I can't say that I think the shares ESG Advanced MSCI US ETF, USXF is the kind of thing where if you were holding that kind of stock, you're looking at a ton of volume that's easy to get in or out. You could even see here on the platform, it's just something hard to borrow. And bring up NVIDIA again, because NVIDIA kind of has been everything here in this market. It's been everything for everyone.
Yes.
And if you get a great NVIDIA response today, you could make the case that people dump gold and silver because they got to buy more stocks. You could make the case that this means that the AI revolution is going to keep plowing forward and they're going to throw even more money at it. And, what does that mean for, generally speaking? Okay, more unemployment, well, lower rates. So you're going to want to hold the metals. Either way, though, the metals today are going to be in the blender. I don't think you can ignore their high volatility readings. We should have some fun this afternoon. What won't be impacted by NVIDIA, if I were to make a bet, it would be what's going on in the energy market here, because natural gas doesn't care about anyone or anything. It's really a heartless beast. And crude oil seems to be more interested in what may be potentially occurring in Eastern Europe, where earlier today we get rumors that Putin may be willing to work towards a peace deal with Ukraine and negotiators could be dispatched again soon. That is a story that we've heard a lot in recent weeks and months. Trump, of course, met with Putin in Alaska. Nothing came of that. Trump has said that he's willing to go further to help Ukraine and Europe arm itself against Russia. So whether or not this has any teeth is one thing. The other side of it, though, Ilya, there's still the march towards war in Venezuela that's going on, which is why today provided the opportunity. They picked up some out of the money calls. They're pretty cheap. They cost nothing. This is actually not showing you a market right now, but my max loss on a position is $20. I'm willing to risk $20 to play something to get a 63, 64 call spread in my pocket for 2 days expiry. And I'm going to do it again next week for the November 28th expiration. If we're going to send our largest carrier strike group off the coast of Venezuela, it would behoove one to have some geopolitical risk protection in our pocket, even if this is all just posturing. It doesn't seem like it. So something that's in the neighborhood of like a 19-to-1 risk to reward, even for next Friday, along the 63, 64, I'm happy to risk $50 in case there is an expansion of oil vol or temporary shift to the upside.
Yeah. Yeah. I mean, this is one of the many flashpoints opening up here. There's another one in Africa where you have the possibility that there is some sort of a supply disruption situation that's occurring. And we'll see. But so far, the market has been relatively resilient to supply disruption types of things until it strikes some sort of Middle East sort of immediate kind of a place. So something like an Israel-Iran conflagration directly, something like this. So will it pop if there's a war with Venezuela? I mean, lots of Venezuelan crude is already off the market. So is this going to make or break anything? Unclear. I'm still a little bit short.
I don't think it will.
I don't love this idea.
If Israel
that I'm
Iran
short,
got us
but-
$7 or $8, and the Strait of Hormuz is the reason why it gave us that pop, right? No one cared. No one was saying, "Oh, oil prices are going to go up because we're going to lose Iranian supply."
Right.
It was, "Oh, we're going to lose the choke point for 20 million barrels per day globally."
Yes. Maybe
Venezuela, 1 million barrels per day. How much of that is exported? How much does the West consume? So my idea here would be like, if you get the U.S. bombs Caracas, right, or what have you, you probably see $2 or $3.
Be
The
clear,
upside-
everyone. We're not cheering for the U.S. to bomb Caracas.
No, of course not. But if this were to occur and these were the headlines, I would think you'd probably get $1 or $2, maybe $3 to the upside.
Yeah, maybe.
And you'd see a slight volatility expansion. How long it stick around is a different story. I think it would set up a great opportunity to then do a short iron condor trade. Hopefully it's one of these military events where like we bomb stuff, but like no one's killed, no one's hurt. But the reality is that if, people should look it up right now. You can go online. I didn't have the ability to put it up today. Maybe we do it tomorrow. Although I have a feeling we're going to be talking NFP review tomorrow. But people should look up U.S. military assets Caribbean Sea right now, just to see what we have there. And this has worked for us before with trying to scope out what would happen with.
And I believe the USS Gerald Ford is there, and that's the largest one that we've got.
If there's smoke, there's fire, maybe. Natural gas of 3.74%, excuse me, and it's bouncing again. That's a big, healthy bounce off the 1 month moving average. And it's a former swing level that we have from early October. That's a nice looking rally. It's a 67.3 IVR. It's completely uncorrelated to everything that we see going on in the world of the Fed. This trade is still working for me today, Ilya. It's a 64% probability of profit, 37 DTE. Looking for the market to neither break the yearly high nor the yearly low over the next 16 days. I'm okay with taking that risk right now, particularly because as a building block in our trading portfolio, it helps reduce our beta weighted deltas. And that's not a bad thing if you're going into the teeth of event risk like a non-farm payrolls or an NVIDIA earnings report. So these are the uncorrelated things with the rest of the market. I'm content with what I got going here. Are you trading natural gas right now?
No. And
the water's warm. Come on in.
And I frequently don't. In fact, I don't even remember the last time I had anything on, largely because the sizing is not friendly for my approach. It isn't because I don't have an opinion or couldn't develop one, or just looking at the price action here or haven't seen setups sometimes. But I look at it more so as an indicator because these NG contracts, they're huge. And if you really wanted to, I suppose you could go to the ETF space and look at UNG, but
you go to MNG. There's no options, but
there's no options. There's no options. It's why I've really liked to discover that we have 1 ounce gold futures that you can basically operate in as a currency, as an M6 or an ME or a M6E kind of contract, M6A kind of contract. That's been very convenient because otherwise, for my approach, where I take small bets into a move that seems to be gathering, and oftentimes they're wrong in the beginning, and oftentimes the first few are wrong, and then there's a big one that works. That being that nimble isn't easy when you look at something like an MNG or an NG full size. So you could maybe look at the ETF, but it's not very liquid. It's not something I usually do. I'd rather look at oil as my energy vehicle because MCL contracts are easy to move around in.
Ilya, we wind up the session as we get ready to hop off here, and then I'll be back in about an hour's time with Nick to do last call. We'll lead into overtime, you, me, and Dylan, and we'll cover those NVIDIA earnings.
That's right.
We take a look at our US dollar on a day today where those Fed cut odds are in. The dollar is popping here. What a save. Stick save and a beauty, Ilya, where we bounce from our 1 month moving average right at that 1 month 50-day envelope again.
Oh, I'm happy I flipped this exposure over this morning.
It's really across the board here. So I would point out as we go into Zoop, let's go here. First off, the Aussie, which I think you were leaning short again, is the loss leader.
Since the beginning of the week.
Alongside the Japanese yen, that dirty currency, which is great for us.
Been short that one for a long time.
Right. This was a trade that we put on immediately at the start of last week, Ilya. No, not last week. Overtime when I was with you, that first Thursday I was back, I guess Thursday, November 6th, just because the 64-65 put spread was fairly cheap with the IVRs in the 10s. The position's really working well today, in part because of how quickly we're moving through yearly lows right now in the futures market. The futures market is not what concerns me because we're starting to get a little bit atmospheric here. And what I mean by that is dollar yen spot rates have quickly charged up to a place where the market felt a little nosebleedy at the start of the year, consistent with more intervention talk, which is a game that we have played before on the show. You successfully, me not so much. But if we start
I started in July. I started uploading yen longs in the mid 146 area on dollar yen. In 6J terms, that's let's see here. What would that be in 6J? In 6J terms, that would be, let's see. We would be looking at something like a short around 0.007.
Mm. Well, it's been a nice run.
Yeah, 0.069, something like that.
What's fascinating here is the new Japanese prime minister, who is very fresh on the job here, is out recommending more spending. Sanae Takaichi,
Takaichi Sanae.
Takaichi, okay. Saying that we got to spend more money. Japanese yields are at multi-year highs, if not the highest levels ever, and the currency is not benefiting. There are whiffs of fiscal concern in the air.
She's an Abe protege. She's a big believer in the three arrows, although she has another arrow on top, if I remember, another arrow or two. But
if we already got a time here, so just real quick, if you're seeing that Japanese yields are getting unglued, a lot of the world is built on the fact that Japanese yields are supposed to stay low, and you can
that's right.
You can borrow in yen and then invest elsewhere. So I wouldn't discount the fact that we talk about a liquidity reach right now, Ilya. How many people were borrowing in Japanese yen to buy cryptocurrency on a day like today? It kind of, you know, remember the Japanese yen carry trade crash from last summer?
Mm-hmm.
That's
just
let's not. This may be a movie
and that was the BOJ again tinkering with the bond market's architecture.
Yes, it was. So the dollar is up. It's up everywhere. The yen is really taking it on the chin. The yen's weakness may be connected to lots of other things in this market. But you know what? We got to talk about non-farm payrolls tomorrow because we're finally getting a jobs report where we're expected to see only 50,000 jobs added in September. Market seems to think that's going to be the under. Either way, though, we'll be back in a little bit, an hour from now, for last call, myself and Nick, and then we have overtime, myself, Dylan, and Ilya to talk through those NVIDIA earnings, 4:20 Eastern, 3:20 Central. So be sure to grab a quick cup of coffee, grab a sandwich, whatever you got to do between now and then. Take a brief break. More Tasty Labs coming up next.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week. With the Forex platform,
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the Wednesday edition of the show. Welcome to the pre-recorded edition of the show. This is not live. I think maybe the magenta shirt on back-to-back days was a giveaway that this is not live, but I'm still here with you all because I know, guys, I know that you are tuning in today for one thing and one thing only. You want to make some money. How are you going to do that? You're going to do that with NVIDIA earnings. Even more specifically, how are you going to do that? You're going to do that by doing the opposite of what I'm going to do. So even though I can't be there with you live today, I am off on a secret mission. I'm not going to let you guys down. I got a little something for you, but we have to do a little educational content first. So hang with me for the next 4 to 5 to 24 minutes, and I will get you guys all set and squared away on some NVIDIA earnings. But before that, let's talk about choosing an earnings strategy. So this is going to be very much a broad overview. This is going to be very brass tacks, like you're just getting started. Maybe you're a new trader. You're trying to kind of find your way around, these earnings trades that you see us all do here on the network pretty much every single day. Obviously, it's going to be a lot heavier during earnings seasons, but most of the time there's something happening one way or another. So what I want to do here today, let's talk about how do you choose an appropriate earning strategy for whatever stock you might be looking at. So let's do that for the next couple of minutes, and then we'll send you guys on your way. So why trade earnings to begin with? So earnings announcements they're a favorite amongst all of us here on the network. And the reason why is because they essentially give us 3 different tradable things. So number one, you have quarterly occurrences, right? Every quarter, like clockwork, stocks are going to be reporting earnings, right? These guys are going to be coming out usually January, April, July, and October. Those are going to be your heavy months because they kind of follow, the calendar year in that way, where most stocks are going to be reporting in about a 2 to 3 week window, usually end of January into early February, end of April into early May, end of July into early August, and then the end of October into early November. It's going to be kind of the heavy earnings window. And so it's really nice to have these things on the calendar every quarter because they certainly give us plenty of opportunities to stay engaged with the market and trade some of our favorite stocks or what have you. Number 2, they're binary events. They're binary events in nature. Just by their very structure, they are going to be very binary in nature. Because there's going to be a significant chunk of new information coming out about a given stock in a very short window of time, this is always setting the stage for a potentially explosive move one way or another. And so binary events on the calendar, earnings calls, FOMC, jobs numbers, whatever the case may be, these are some of the more common examples of binary events, and earnings definitely belong in that category. And so because of that, it certainly gives us an opportunity to trade that event, whether we want to be on one side of the market, whether we want to play it just totally neutral. We'll talk about all that here in just a couple of minutes. But then number 3, which is very much a piggyback off of the binary events, these are also high volatility events. Right? As traders are getting ready for the earnings to be released, whether it be Home Depot, whether it be Target, whether it be NVIDIA, right? Everybody's waiting to see what's going to happen with the stock. Like, which direction is the stock going to move? What are the numbers going to look like? The revenues, the earnings, all the other stuff in between, the guidance. Like, is there anything new happening that they're going to tell us about? All of these things kind of come out into the market at one moment in time. And so leading up to that moment, there's usually, almost reliably so, a bid in volatility as you get closer and closer to that earnings release. And so what that means is this is naturally going to be a high volatility opportunity for us, and we are high volatility traders. Like, we like selling premium in high volatility stocks. We like selling premium in high volatility environments. And so you can already see that there's a number of things, or at least a couple of things, that are working in our favor, and they kind of work to our advantage. But it's been said before, for every gimme, there's a gotcha. Okay, I got high volatility. That's certainly a gimme. Where's the gotcha? Well, the gotcha is right there in that green box. You have to be very, very aware that you understand that you are potentially walking into the lion's den. Like, you have to understand that this thing could really cut you if you're on the wrong side of the market and it gets away from you. Like, if you're playing it to the upside and it crashes, that's not going to be great. If you're playing it to the downside and it rips higher, that's not going to be great. So you have to understand the nature of the beast that you are engaging with. So I just want to be, very clear about what earnings are. They are certainly binary in nature. They're high volatility events, and you just have to be keenly aware of the potentially explosive nature of whatever moves might be coming next. Okay, but what strategies should you consider? Well, this is not intended to be an exhaustive list, but it's just a little something to get you started. Defined risk and undefined risk. So, should you consider defined risk or should you consider undefined risk? Well, when it comes to defined risk strategies, those would be like vertical spreads. Those would be like iron condors. Those would be like your time spreads, calendar spreads, diagonal spreads. Undefined risk strategies, short puts, short strangles, ratio spreads. Again, this is not an exhaustive list, but I would argue that these are going to be the 6 most popular strategies or strategy categories that you see us utilizing on the market or in the market on the network every single day. Okay, how do you decide what to choose? A couple of things. Number one, if you're just starting out, like if you are brand new to trading, welcome aboard. You have a very exciting / terrifying adventure that lies before you. I'm very excited for you. I would only do defined risk to begin with. You don't need to be a hero. It's not a competition. It's not a race. I would just get your feet wet, build up some experience, and then maybe sometime down the road you can consider some undefined risk strategies around earnings. But if you're just getting started, I would absolutely stick with defined risk strategies. Okay, but going one step further, if you want to take a directional shot in the stock, this would be like a short vertical spread. This would be like a long vertical spread, right? Short vertical spread is typically a higher probability play, still kind of a directional shot, but much higher probability than maybe like an at-the-money long vertical spread. That's going to be essentially a 50-50 shot. If you're going to take some type of directional stance in the stock, expect to move butterfly is obviously a strategy you guys see me use all the time. You might even see it here in a couple of seconds with NVIDIA, but you've got to stay tuned to find out if that is true. Here, this is where utilizing the front week, so whatever week you happen to be in for that earnings, it's definitely on the table. So if you're doing pretty much anything defined risk, but especially something directional, so again, short vertical spreads, long vertical spreads, even of course butterflies would fit into this category as well. Using the front week, so this would be an option expiration cycle that only has a couple of days left. That's definitely going to be something that you can certainly consider. But you don't have to do that. So keep in mind, you can also just use the earnings date as a bit of a catalyst into a normal cycle trade, into kind of this 45-day window where we would just do something normal. We would just do something kind of regular that's not even necessarily associated with a binary event like earnings. And so if you want to kind of slow everything down and have everything move a little bit more gradually and methodically, choosing that 45-day regular cycle is going to be the preferred option. So regardless of what type of strategy you choose, defined risk or undefined risk, you can kind of pick the front week or the regular cycle. Now, how do you decide? Well, there's a couple of things to consider. The main one is this: how fast do you want your results to actually materialize in the strategy? If you choose the front week, it's going to be very, very quick. As our guy Errol Coleman says, it's going to be instant pain or instant gain. And so if that's the type of game you want to play, again, with defined risk, so you know the worst case scenario, then go into the front week. Do something with only a couple of days to go. That's totally fine. If you get the move right, you're going to get paid really quickly. If you get the move wrong, it's going to be more painful. But if you stretch that out into a regular cycle, now all of a sudden, even if you get the move right, you're not going to make that much money. But if you get the move wrong, you're also not going to lose that much money. And so, of course, it kind of goes both ways, and it's gimmies and gotchas like it always is. But what about undefined risk strategies? So maybe you've been trading for a while, maybe you've built up some experience and you're ready to kind of dip your toe in the water with undefined risk strategies around earnings. So short puts, short strangles, racial spreads, jade lizards, right? Strategies like that. I would not do any of these strategies in the front week. I would only do these strategies in the 45-day cycle. And the reason why is actually quite simple. It's twofold. Number one, if you're selling premium, so short put, short strangle, racial spread, etc. If you're selling premium, you're not going to get paid that much in the front week relative to what you could collect if you went out to 45 days or 37 days or 51 days. That's just the simple nature of extrinsic value. You always get more extrinsic value the further out in time you go. Now, of course, that means you have to carry the risk for a longer, window of time as well. But it increases your break-even point. All the Greeks kind of slow down. There are a number of advantages that kind of come alongside that. And so when it comes to, undefined risk, you're collecting more. And so you don't necessarily have to worry about, having these super tight break-even points in the front week because you didn't collect very much. But then also number two, and I alluded to this just a second ago, when you choose the front week, instant pain, instant gain, you are actually engaging with the Greeks in your strategy. So delta, but specifically gamma, you are engaging with the Greeks at essentially their highest point over the course of the entire expiration cycle. And so if you do get the move wrong, it can be very, very painful very, very quickly. And remember, this is undefined risk. There is no safety net. There is no training wheels. You've got to be ready to go in terms of the management, the contingency plans, all of that stuff has to be ready to go. And so I would much prefer to see you do something in the longer dated cycle with the 45 days to go, because even if you get it wrong, it can still be painful, but man, it can be a whole lot more painful if you do it in the front week and you're just not being compensated for that, in my opinion. Okay, now, this is what you guys want. If you're watching this live tomorrow, then you're getting it. You're getting it exactly when you need it. If you're watching this after the fact, like on YouTube, then you missed your shot, man. You missed your opportunity to fade me and make some money. But next time, don't let it happen again. Here you go. When you think about NVIDIA, think about it as an idea. Think about it as a way of life, right? Think about it as a philosophy. I just don't know how you can possibly look at NVIDIA and be anything other than mega bullish. Do you really think that NVIDIA is going to let the market down? The market's been sliding for days. The market's at least 4% off of all-time highs right now. Like the fear index, it hasn't seen levels like this. It's been at least 2 weeks. Do you really think that NVIDIA is going to let the market down? There is no way. There is no way. I'm like 19% sure of it. There's no way. So we're going to play an expected move butterfly. Now, I am not doing the trade now. I'm going to do the trade tomorrow, which for you will be today. I'm recording this on Tuesday after the From Theory to Practice episode. But here are the details that will surround my trade. I want to wait and get the right strikes just before the close. So number one, I'm going to choose a 12.5 point wide butterfly. I was looking at it earlier, and that looks to be a pretty good butterfly width for what I'm trying to accomplish. I'm probably going to end up paying about $2.50 or maybe $3 for that. Number two, of course, I'm going to have my short strike be pinned right at the expected move to the upside. And so we're obviously going to be playing this thing up. We're going to be playing this thing higher. I will put my short strike or short strikes, because there'll be two of them, and I will pin the expected move to the upside. And then number three, I'm going to do this trade in the final hour of the trading day tomorrow. So you guys will see this on the follow page. And again, what should you do when you see this on the follow page? What should you do when you see this in the From Theory to Practice time slot? You should do the exact opposite. You should fade this trade if you're very serious about making money today. And so there you go. There's a little bit about choosing an earnings strategy, and we'll see you guys next time. Starbucks, Amazon, Apple, Netflix, Tesla, and Circle. 6 of the most popular stocks in the market today. 6 stocks that are probably in many of your portfolios right now. Some old and some new. But what if you had to find the best stock to trade to fit a $30,000 account today? How would you do that? Well, I'm Dr. Jim, and after having traded for nearly 20 years now and having been on the Tasty Network for the last 10, we've created a 5-step checklist that's going to help us walk through exactly how to find your next trade. As we work through each step on the checklist, we're going to use market metrics, strategic choices to help us narrow down the list. And one by one, we're going to eliminate a ticker from the list until we're left with one ticker, one strategy, and we execute the trade. So let's get started with step number 1, liquidity. So the first step in finding a new trade and a new trade's journey is without question liquidity. You need to make sure that you are trading a very, very liquid stock, because I can say from personal experience, there is nothing worse than getting exactly what you wanted. You get the move that you want, the perfect position is on, the strategy checks out, and then the next thing you know, you can't get out. You can't get out for a good price because you're trapped in a very, very low liquidity stock. You're stuck. So in this situation where the liquidity in the stock is really, really poor, you essentially have two choices. You either A, stay in the position a bit longer and wait for the price that you've been targeting all along, or B, you get out at a worse price essentially and take a fill on a price that isn't necessarily near the mid price or the mark price at that time. Neither one of these options is good for you. So to avoid essentially any and all problems associated with liquidity, you want to do two things, both of which are pretty simple. Number one, check the liquidity star ranking in the tastytrade platform. And then number two, cross-reference that with the bid-ask spread differential that's in the market at that time. Doing these two things will keep you on the right side of liquidity pretty much every single time. So let's dive in. All right, so we already have our list of 6 stocks, so we're going to work mostly from that list. But if you didn't have a list already, just go into tastytrade, click on the watch lists. You can use Tom's watch list, or you can use the Tasty default watch list as a great starting point. Okay, but with our stocks, I want to begin by checking the liquidity star ranking for each one. So here's Starbucks. Let's go over to the overview tab, and then you can see the liquidity star ranking, 4 stars. So Starbucks looks good. Here's Apple. We go to the overview again right here. You can see also 4 stars in the liquidity ranking. So Apple is good. Tesla, overview, liquidity ranking, also 4 stars. So Tesla is good. Netflix, overview, liquidity ranking, only 2 stars. Okay, so a big question mark by Netflix. Amazon, overview, liquidity ranking, 4 stars. So Amazon is good. And lastly, Circle, overview, liquidity, only 3 stars. So it appears it's going to be between Circle and Netflix for which one gets the chopping block. Now, again, to cross-reference the liquidity, now we're going to turn to the bid-ask spread differentials. So with Circle still loaded up, let's open up the October cycle with 44 days to go, because that's closest to that 45 marker where we like to enter our positions. And let's just simply look at the at-the-money strike. You've got Circle at 120. Let's look at the 120 strike. You can see that the bid-ask spread differentials are about 60 to 70 cents. I mean, they're moving around as the market moves, but about 60 to 70 cents on the put side and also on the call side. Now, generally speaking, for the most liquid names in the world, like SPY, like QQQ, you're going to see 1 penny wide markets. You're going to see 3 penny wide markets. You're going to see really, really tight bid-ask spread differentials. Now, with a lower liquidity name, we might be willing to accept slightly wider markets, but Circle at 60 to 65 cents for a $100 stock, I would much prefer to see that at maybe 10 cents or 15 cents. But let's now take a look at Netflix. If we look at Netflix with 44 days to go, same thing, right? But this is a $1,200 stock. So if I look at the bid-ask spread differential for the at-the-money strike, look at what we see. We see at the 12.15 strike, you can see that you're only about $1 wide on the put side. You're a lot wider on the call side, $2 wide. But you have to keep in mind, this is a $1,200 stock. So on a relative basis, I would argue that Circle is a lot less liquid than Netflix because the bid-ask spread differentials are going to scale with the stock price. So Circle is gone off the list. The liquidity is just not good enough. The next market metric that we want to turn to is volatility. At Tasty, we feel the most opportunity as an active trader is with a focus on volatility. It's not directional. It's not trying to get bullish for the next leg higher or get bearish for the next leg lower. It's actually trading volatility, and specifically elevated volatility, and trying to sell that volatility to take advantage of its natural tendency to contract over time. Now, we already have an entire crash course dedicated to volatility, so definitely check that out when you have a chance. But simply put, our foundation is short premium, so selling options. By selling options, we're able to essentially put probabilities in our favor, put the passage of time in our favor, and then also position ourselves to take advantage of any volatility contraction over time. So we really like the short side of the option contract when it comes to the strategic choices that we make. But we don't want to just sell volatility willy-nilly. We want to be strategic and we want to be patient. So that is why we prefer to sell volatility when it is indeed elevated. Volatility is a unique characteristic in that it has been shown to demonstrate a mean reverting property. This is something that can be shown both empirically and also mathematically. Now, of course, you never know exactly when volatility is going to contract. It's never going to be that easy. But by selling elevated volatility, we are stacking the probabilities in our favor to eventually ride the volatility contraction later on down the road. Okay, so let's take our 5 remaining stocks, take a look at volatility, and see if we can't narrow down the list even more. So to begin looking at volatility, it's always kind of best practice just to get a gauge of where is market-wide volatility. And the best ways to do that are to look at the VIX or the /VX futures. So if I scroll down here on the Tasty default watch list and it's in alphabetical order, you can see the VIX right now is at almost 17. That's right around the historical average, maybe slightly over a historical average of around 16. Similarly, volatility futures are right around 17 or just over 17. So this tells me that volatility is around historical average, maybe slightly elevated in an overall market sense. But really, I'm not interested in market-wide volatility. I want to get laser focused with individual stock volatility. So similar to what we did with liquidity, let's just go through our stocks one by one, starting with Netflix. And the metric I want to look at is the IV rank. An IV rank shows me where volatility ranks on a percentile basis relative to where it's been over the last 12 months. So obviously a 9.6, like what I see here in Netflix, is telling me that it is essentially on the lower end of the distribution of all volatilities for Netflix for the last 12 months. So Netflix, 9.6. Okay, Starbucks, 20.6. So much better candidate for selling volatility because remember, I want to sell elevated volatility. So Starbucks certainly looks better than Netflix. Apple, IV rank of 14. So also looking relatively okay, at least in relation to what we saw with Netflix. And then Tesla also at 9.6. So very similar to what we saw there with Netflix. And then lastly, Amazon, only 6.2. So of the 5 remaining stocks, Amazon clearly has the lowest IV rank. So it essentially presents us with the least amount of opportunity as premium sellers. So Amazon is gone. Our list is indeed narrowing, and the time has come to finally choose direction here in step number 3. Are we going to play the stock higher? Are we going to play the stock lower? I mean, in my estimation, this is the age-old question. This is what everybody wants to know. And in my humble professional opinion, nobody knows where any stock or any market is going next. The markets are far too random and unpredictable. And so when it comes to picking direction, that honestly takes a lot of pressure off. I mean, by all means, use the technicals, use the fundamentals, use volume profiles, use order flow. Hey, you could even use your portfolio metrics to guide you. Quick little shout out to another crash course that is already on the YouTube channel all about portfolio management. But perhaps an even simpler method, and one that we generally deploy here at Tasty, is to kind of adopt a short-term contrarian mindset. So when something is down, we like to buy it, and when something is up, we like to sell it. All right, so let's take a look at Starbucks, Apple, Netflix, and Tesla and see if anything jumps out at us. All right, so for the 4 remaining stocks, Apple, Netflix, Tesla, and Starbucks. Let's just bring up a daily chart, and we're not even going to measure any technical levels or moving averages or support resistance or any of that. I mean, you could do all that if you want to, but just very simply, I want to get a feel for, is something jumping off the page from a short-term contrarian standpoint? So Apple, to me, looks like a pretty obvious short. Now, I say obvious jokingly because nobody knows what's going to happen next, of course. The randomness and the unpredictability will indeed take over. But if I had to choose a direction in Apple, it would be bearish. Okay, now Starbucks, conversely, this is a different story. To me, this looks like a bullish opportunity. Not to mention today, Starbucks is even down a couple of dollars. So for Apple, I'd probably want to get bearish. For Starbucks, I'd probably want to get bullish. If we bring up Tesla, this one looks a lot less clear, right? From a short-term contrarian standpoint, I think you could make the case that you could go either way in Tesla, bullish or bearish. And then with Netflix, very similar story to what we just saw in Tesla. I think it's hard to make a case either way. You could probably make a case for being bullish here. You could make a case for being bearish here from a contrarian standpoint. So it seems like Tesla or Netflix is probably on the chopping block. So how are we going to determine which one of these we should get rid of? Well, now this is where we can go back to some of the previous steps on this checklist to see if there was a clear winner or loser with liquidity or with volatility. Now, interestingly, remember with Netflix, the IV rank was 9.6. With Tesla, the IV rank was 9.6. I mean, that's quite serendipitous. It is literally a tie. But what about liquidity? This is where it's going to tell a very different story, right? Tesla, remember, we go to the overview tab, liquidity, 4 stars. Very, very liquid. Netflix, if I click on Netflix, liquidity, not so liquid. So only 2 stars on the liquidity meter. So Netflix is gone and Tesla remains. Okay, so direction is always tricky, but for now, Netflix is gone. Let's put that guy on the shelf. That leaves us with Starbucks, Apple, and Tesla. And it is now time here in step number 4 to decide, are we going to do undefined risk or are we going to do defined risk? And the answer here is simple. Defined risk. If you're just starting out, every single one of your trades should be defined risk, 100%. Now, is undefined risk more effective than defined risk? Yes. Is undefined risk going to essentially give you more opportunities than defined risk? Yes, but you're just starting out. We are just getting going. You have to build up your experience and your exposure to the market before you ever consider an undefined risk strategy. Remember, this isn't a race. This isn't a competition. There is plenty of time to grow into the riskier strategies that may be more effective sometime down the road. For right now, let's get laser focused on defined risk only. All right, so Apple, Tesla, and Starbucks, that's what's left. So which direction are we going to play? Well, as you can see, it largely depends on which stock we're going to choose. So let's proceed with the checklist and we'll circle back to direction. And to really drive this point home that essentially this case could be made with any of the stocks that we have left, Tesla, Apple, Starbucks, it doesn't matter. Defined risk versus undefined risk. Let's compare and contrast like a short strangle versus an iron condor. Short strangle, undefined risk strategy, iron condor, defined risk strategy. So with Apple pulled up, let's sell a strangle together. So if I sell a 220 put and then I sell a 255 call, this is a classic short strangle. This is a great strategy, a very popular strategy. But when you click over to the curve view and you click on the analysis tab inside of the curve view, you get a nice visual representation of this strategy. And so it's essentially showing you that you have unlimited risk on both sides of the market. Just starting out, this is not something that we want to engage with. So back on the table view, let's buy some wings. Let's buy a 215 put and let's buy a 260 call. If you go back to the curve view, you can now see that your risk is indeed defined. Now, this is not the greatest trade because we're only collecting $1.20, but for illustrative purposes only, it does showcase the difference between defined risk and undefined risk. So with whatever stock we choose, we are definitely going to lean on defined risk because this is the best way to start as a new trader. Okay, but one of these stocks has to go. I mean, those are the rules. One step, one stock gets eliminated. Well, again, let's use the previous steps as a tiebreaker, right? Apple, IV rank 13.9. Starbucks, IV rank 20.8. But Tesla IV rank still only 9.6. So we are going to eliminate Tesla, and that leaves us with only 2 remaining stocks. All right, so we've made it to the final 2. Tesla is gone. Tesla is forgotten. It's all about Starbucks or Apple. And so now it's time to select a strategy, pick one of these stocks, and execute the trade. And if you are just starting out, like a pretty brand new trader, the one strategy that I would focus exclusively on in the beginning is a pretty clear choice: the vertical spread. And more specifically, since you want to sell volatility, the short vertical spread. Now, with short vertical spreads, you are going to be directional. If you want to be bullish, you would choose a short put spread. If you want to be bearish, you would choose a short call spread. And remember, with Starbucks, we were leaning to the bullish side. And with Apple, we were leaning to the bearish side. So the strategy that we select is going to kind of go hand in hand with the stock that we end up choosing as well. And so to help us do all that and essentially complete the checklist, we are going to lean on some of the Tasty methodology to choose our strategy, select our stock, and execute the trade. Okay, so we've got Starbucks and we've got Apple. If we're going to choose Starbucks, we're going to be bullish. If we're going to choose Apple, we're going to be bearish. So if we're going to choose Starbucks, we're going to choose a short put spread. If we're going to choose Apple, we're going to choose a short call spread. So one of the key rules with short vertical spreads inside of the Tasty methodology is we want to make sure that we're collecting enough premium on entry. So with a vertical spread, we want to make sure that we are collecting at least 1/3 the width of the strikes. By doing this, the risk-return relationship is a little bit more balanced in exchange for a high probability trade. So if I go into Apple, October with 44 days to go, and you've got the stock at 237, let's say I just sell a 240, 245 call spread. If I do that, you can see the probability of profit looks good. The credit collected looks really good. I'm collecting 227, so well over 1/3 the width of the strikes. So Apple looks like a pretty good candidate right here and right now. Okay, so let's do the same thing with Starbucks. Starbucks, 44 days to go, October cycle. Let's go just one strike out of the money. Let's sell an 85 put and buy an 80 put for the 85-80 short put spread. Look at the credit collected. It's only $1.33. So it is actually much less than 1/3 the width of the strikes, even with Starbucks having a higher implied volatility rank. So it appears that the winner is indeed Apple. So with Apple at 237, our short call spread is selling for about 230. Let's see if we can get filled. And there you go. We are now bearish on Apple with a short call spread, having worked through the 5-step checklist that we just worked through. And so I hope this helped, and we'll see you guys next time.
What's up, everybody? Welcome to the Life Cycle of a Trade, the series where we break down the thought process behind the trade entry, trade management, and the closing order. In this video, we are going to cover the crab trade. All right, so we're going to take a look at Apple here. Apple is trading at 202. The stock's up $2 and change today. The market is at nearly all-time highs, or almost back to all-time highs here at 61.59. Apple has not moved in any way with the market as a whole. It is still down significantly, 20, 30, 40% from all-time highs here. So we're going to take a little bit of long delta here with the thesis that if this market continues higher, it's going to have to get some help from Apple. So that's my play here. We're going to look at a crab trade. So it's a calendarized ratio spread, and it's a trade that is sort of like a diagonal spread, is sort of like a calendar spread. It's got a touch of butterfly in there. It's really a butterfly where we move the long option that's closest at the money to a further out expiration. It gives you a little bit of positive gamma. You've got the short volatility and theta decay coming from the near-term options. So it's an interesting risk profile that plays directionally to a point. You don't have a huge upside potential here, or you want to avoid the upside tail. Really, is what is happening here. And we can look at this on the analysis mode. So the way that I like to set these up is I like to go to somewhere around a 40-ish delta on the upside. I'm going to go to this 205 just because we're kind of limited in strikes here. I'm going to go to the 205 in August. In July, I typically like to go and sell like, $1 or $2 in extrinsic value, somewhere around the 20-ish delta. So I'm going to go to this 12.5 strike. So this puts us $7.50 wide. And then on the upside, you can make this as wide as you want. I'm going to do this with a little bit of extra risk on it and go to the 12.5 because I like to collect $1 when I'm selling premium. And so this spread that I'm selling, this call spread, the 212.5, 222.5, I'm selling it for $1. Plus I have another $1.30 in the call diagonal that's there that forms this trade. So when we look at this on the curve view, if we click over to Theo, because this has a little bit of a different duration baked into it, it's a calendarized position, we can actually analyze what this looks like through time. So we have this $7.50 wide call diagonal spread, and then we have this 10-point wide extra short call spread. As we go through time, and moving this evaluate date essentially moves the time forward, so we're going into the future here. You can see how this trade kind of morphs into a sort of butterfly type risk profile. And once you get to expiration, so you can see the July expiration is past now, we're on the 21st of July, you can see that we have this really nice profit potential if we get kind of an inside up move in the stock. It's one where if the stock were to explode, up 10, 15, 20%, we kind of miss out on value. It won't move this quickly. Assuming it doesn't move this quickly, we would miss out on some value, but it's really an upside play that's got a really high potential return on capital. You can see the buying power used here is only $775. You're buying this for $5 and change. So, the potential to make $200 or $300 is certainly in the realm of possibilities here. So we're going to do this. We're going to place a little upside play in Apple, see if we can get a little drift higher here if the market continues to grind to all-time highs. So we're going to try and put this in at 525. And there we go. We get filled. 525 on this upside crab trade in Apple. Apple has had a nice little rally. It's come off the highs here of 215 and change yesterday and is now trading at 209 and change here. We had this upside crab trade, which is a calendarized ratio / butterfly. We were long the 205 call, short 2 of the 212.5s, and long 1 of the 222.5s. So a 7.5 by 10 a 7.5 by 10 spread, a little bit of extra risk on the upside. This was the perfect move for us. This trade was, a $50-ish winner yesterday when we were with the stock kind of at 210, 212-ish. With this little bit of a drop today, it's come in nicely. You get a little bit of that decay from the short premium that we have in the near term. You can actually flip over to the change column. So you can see about $1 came out of these two short options. The long option lost about 18 cents. So net out of these two, out of this position, we made about $100 back today. Obviously, some of that you're going to lose on this long option here. So let's call it 50 or 60 cents more today than it was trading for yesterday on a down move, even though we have long delta on this trade. So when we put this trade on, and you could see my delta on the trade was just under 13 at the time of the transaction, the opening order. We can look at the underlying price. The stock was trading at 202. So it was a nice little rally. We've had about a 7-point rally given where the stock is currently. So we had a little bit of long delta. We did it in a very capital efficient way. This position, which you can close directly from the order chains here, it's now got about 4 short deltas, even though this is, I have an opposites order. So if we look at this from the if we look at this as an opening order, You can see I have a little bit of short delta just given that the stock is right at the money to my short strikes. The delta of these options are going to be near 50, 38 and change here. Either way, it's been a nice trade. It's done exactly what we needed it to do. It's 100 and some odd profit. Use about $900 in buying power, which we'll get out, which we'll get back once we close this trade. So it's a close here with 10 days to go until expiration on those short options. Just cookie cutter, broken wing butterfly / ratio crab trade here for the win. We'll take this one off and move on to the next trade. Try 370, see if we get filled. Or I'm sorry, 670. See if we get filled on this. Move this down a couple pennies here. All right, so we're out at 667. Nets us $142 profit on this upside crab trade. A nice little position. We got the move we needed. Vol kind of stayed where it was, and ultimately it was a good time decay trade as well as a directional trade. Very high return on capital of about 10-15%. So good one for the Johnny traders.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again.
Oh, good.
So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh, my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
I think I went down the typical path of investing in stocks, and I was really frustrated in the sense that it was a buy and hope type strategy. And so I was looking at, different ways to learn about options, and I saw Mike and his whiteboard, and it all made sense. There's another world out there with options. It gives flexibility. It's more capital efficient. And tastylive does it again. They teach it in a way that is fun. It's easy to understand, and you're learning from people that have done it for 40 years.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University, number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch tastytrade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Hello. Well, here's the day, NVIDIA day, at last, after all this waiting. NVIDIA is kind of a funny one because not only is it the biggest company on the planet, but they have a very off-season earnings cycle. They do their earnings weeks after everybody else has sort of packed up their tent and headed home. So, I mean, even if they were in the midst of a day where Apple and Amazon are reporting, they would still have a lot of attention on them. But as it is now, they are the only circus in town. So all eyes will be on NVIDIA. I looked, and typically they report anywhere from 5 to 20 minutes after the close. So there will be that, and of course the conference call, and then just the general sort of digestion of all that. And then tomorrow morning, I believe, the jobs report comes out, and I've lost track at this point. I think it's September's, and I think they've announced they're going to skip October's entirely, something like that. So the data desert is a bit of a mess right now. For myself, I'm not so crazy as to go completely aggressive before this giant event that's looming. I've dialed back my own participation level from like 220% to about half that right now. Still got a bunch of shorts, but for example, I went ahead and covered and took profits on AMD. Could be a terrible mistake if NVIDIA crumbles. I've covered and taken profits on FXI, China, things like that. I've trimmed here and there, just in case NVIDIA rips higher
and the bulls jump up and down and say, told you so, this is not over, that I don't get completely destroyed tomorrow. But of course, we live in a world of two-edged swords, and if NVIDIA enters a whole new chapter of this infant bear market, then shame on me, so we'll see. Better safe than sorry, right? I've got some charts ready for you, so let's just thumb through those, and as we await the big news, here's the spider, which is doing not too much of anything. The ES is up about 25 points now. The spider today has had a higher low and a higher high than yesterday. It's a green bar. We are up on the day, and there's certainly plenty of potential room for a relief rally should NVIDIA delight and amaze the onlookers. So, we're pretty battered down right now, and it's low enough that it's gotten some attention. And this could be similar to, we had this nice leg down and then a 2 or 3 day rally, and we've had another nice leg down. Could do the same thing. Maybe people will celebrate as we head toward Thanksgiving week with some buying. Who knows? As I said, I'm still positioned on the short side, but substantially less aggressively than 24 hours ago. The diamonds are up a tiny, tiny bit, very little activity. It's almost like a doji right there on the candlestick, just kind of hanging out very roughly what it was doing yesterday. The open, high, low close are almost all identical to yesterday, really, really Dullsville. The cubes are up a little, about 2/3%. The NQ itself is up 145 points or so, and it's very similar to the spider in as much as a higher low, a higher high, a positive day, and plenty of potential room to the upside. As much as I would say all the way up to this gap. Of course, that would be a devastating blow to the handful of bears left. But major resistance is a ways away because we've spent some weeks kind of working our way down to these levels. So it truly is all up to NVIDIA at this point. They've got to just thrill people with their results, and that would just breathe life back into the equity bull. As I made mention, I've gone ahead and taken profits on China, FXI. It's kind of range bound. I mean, if you look at what's happened even recently, we moved up and then down and then up and then down. You can see quite plainly, and let's just throw a rectangle down, that in recent weeks, it has been confined to a very clean zone, like so. I mean, almost to the penny. So I've gone ahead and wrapped up that position. And so at the moment, not that it matters too much, I've got 37 various and sundry shorts, some tiny, some medium sized, nothing really outsized. I don't have any big ETF positions at all. The ETFs remaining are IWM, the small caps, SMH, because I want to have some participation in this, and then GLD, gold. Just might be one or two others, but nothing too big. Speaking of gold, here is the front month. It is up about $15, about 1/3%. The rush higher ended around October 20. We backed way off. We started to resume that push, and that stumbled recently, and it's a bit of a quagmire right now. So I don't know how much NVIDIA's results will inform precious metals. I mean, very broadly speaking, if they're dynamite and everybody buys stocks, that tends to send assets in general higher. Just those good feelings tend to be uniform across different asset classes and vice versa. But it seems to have stalled out for the moment. Miners also have to kind of prove themselves. We've been range bound on this. This is GDX. On the support side, we've got this gap down here providing some short-term support. In terms of resistance, it really has to cut above that high from November 12 to add a new potential leg up to this rally. And that would be simultaneous. I mean, if it crossed above this, gold would likewise be rallying at the same time. So very much a wait and see attitude on this. Like I said, the unchecked fervor ended around mid-October, and since I'm just trying to figure out its next move. In sharp contrast to this, Bitcoin stinks. Bitcoin just continues to slump. It had a little bit of a reprieve yesterday. You know, it had dipped below 90,000 in the nighttime, and it started to shake that off. People figured that was over. That was a one-hit wonder. That reprieve was very short-lived, and we've got another big leg down, thousands of dollars more. So we've sunk from a peak of approaching $128,000, and now we're solidly into the 80,000s. I think over the course of time, Michael Saylor's strategy, the average cost for the many billions of dollars of Bitcoin they've acquired is something close to $76,000, something close to that. So the closer we get to this zone right here, the more they're going to be sweating it, because, obviously up here they had many billions of dollars of paper profit. It's approaching the point where might just head to zero and even negative, but that's still about $14,000 away. But it's been a really bad run for Bitcoin since peaking right here early in October. Naturally, with that going on, Strategy's reprieve yesterday was also short-lived. It had a big bump yesterday, like 8 or 9%. That is all gone. We're down double-digit percentage now, 11%. A new multi-something low. Let's see, when's the last time it was in this vicinity? About 13 months ago. So it's basically undone whatever progress it made over the course of the year. Of course, that's kind of understating it, because it was just these 2 months where things blasted higher, and it got up to the mid 500s. It's down about 2/3 since then. It's lost about 66% of its value in the past 13 months. And Circle Internet, a much younger company, Strategy's been around for decades. Circle only came public rather recently, this summer in June, and it's come full circle, as it were. We are pretty much at the opening price of its IPO day. So tremendous rally over a couple of weeks, and then over the course of many months, just control Zine that thing all the way down to, let's be exact about it. There's the lifetime low for Circle as a public company, and they're all about stablecoins. Stablecoins got a lot of press in recent months. Doesn't look stable to me. I mean, it looks like a disaster, but it's been touted by the Treasury Secretary, stablecoins as the way to address our $38 trillion debt. I don't understand that. And if Circle Internet is any proxy for stablecoins, maybe not. Just a few shorts here and there. AMD, as I said, I took profits on. It's probably a mistake. AMD really has no meaningful support till this gap way down here. So that could be a real error on my part, because I ain't never going to be able to short at prices like that again. But anyway, I'm out. Took profits. COP, ConocoPhillips, is down about 2.25%. KSS, a real favorite of mine. This has been slumping. This is like seven red bars in a row. I like that. That's good. We've been sinking on that one. I guess probably Target's results informed it. It hardly matters. It's really the chart that matters. There's some vestigial lines hanging out here. Let's just torch those. But we are sinking underneath the that long-term horizontal. Another energy one here, Occidental. I think I mentioned this one yesterday. This is also down almost the exact same amount percentage-wise, about 2.25%. Roblox, RBLX, also down about 3.75%. This is continuing to slide away, even with the Nasdaq up triple digits right now. I love this one, AJG, Arthur J. Gallagher. This is just a beauty of a pattern here. Let's put down a line on this one. Something like so. Let's see how that worked out. Let's tweak that a little bit, like so. So you can see here that there was a gap down, and we push, and sealed that sucker up nicely. I shorted this a couple of days ago, And that's looking really good because this is a fantastic head and shoulders top on this one. So you can see just a major reversal transpiring there after this relentless rise higher. It's finally topped out. Axon, mentioned this one just about every day. It's down again. Pretty steady performer here. As you can see, a little bit lower low, a little bit lower high, day after day after day. We've also got our good friend CoreWeave, which is stable right now. It's up, a few pennies, but I think the barrier to any real pushback is going to be this horizontal line, this resistance line. So it's calmed down after this big plunge, but I think sooner or later it will see the light and continue to slide because there's precious little holding it up from this big rally. Any others? Oh, well, mention this one just about every day. Hims and Hers, HIMS. This one is down almost 2%. And we've talked about the wonderful massive overhead supply on this one. And a couple more. This sounds boring, but I really like this. This is Pacific Gas and Electric, PCG. They're down about 2.5%. This stock has been crumbling for a while. This was a magnificent head and shoulders top back here, and it bottomed and has been recovering since then. But I think long term, the path is pretty clear. Today, it's taken a nice tumble. And just one last one from this variety pack, VeriSign. Down almost 1%, not very dramatic, not very exciting, but this is another just really beautiful classic top, straight out of Edwards and McGee, like so. Really like the look of that. So amongst these 37 shorts, they're not all clean patterns. There's some good reason or another why I'm short them, but a handful of them have just dynamite textbook quality setups for their tops, and this is one of them, as was HAG. But it is all up to our friend here, NVIDIA. This, unlike some of these other charts, is a very tough read. This anchor point here is on July of this year, July 31st, of just a simple straight line. And as you can see, we've just warbled above and below this for months on end. We are close to that line right now. There's no real pattern here. There's no real setup. There's just this magnetic cling to that price, and who knows? This could shock us all. This could, go down 12 cents tomorrow. It could be a complete nothing burger, with all this tension and angst surrounding it. So there's nothing really coiled about this in either direction. But as I said, I have no position or exposure in any way, shape, or form, except for a smallish position in SMH, and I still have my small position in Intel. But that's really it. As for SMH, it's a little cleaner, even though NVIDIA is its biggest component. My stop is this line right here, which was the high from a few days ago. SMH is up about 2.1% right now. And this will all drive the NQ one way or the other. The NQ's been in a steady slip for some weeks now, so it might be due for a bounce. But as I've said before, for my own trading, I take things one chart at a time, one stock at a time, one stop loss at a time, so that the whole composite just kind of takes care of itself. So anyway, good luck to us all, and we'll see how it goes. Should be an interesting evening, and I'll see you post NVIDIA and post jobs tomorrow. Bye-bye.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading. plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago, and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
Really
you,
do
Rob.
appreciate it.
So why are we all doing all the things that we do inside of the active trading space? Simple. To make money and generate returns. Well, inside of the Tasty universe, there are essentially 5 keys to making those returns. And in this crash course, we're going to break down all the details of each one of those keys. So I'll see you inside.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Ring the alarm, boys! Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Chris, my friend, we are back with 30 minutes to go until the potential end of the world, or the face ripper to the upside, or maybe just nothing and we go just chopping sideways. But the moment we've all been waiting for is finally upon us for the last call here. We've got E-mini S&P 500 futures. They've actually just rallied in the last probably 30 minutes or so from down 5 or 6 to up 30 now. It's been a pretty volatile realized volatility certainly coming into play today, with the E-minis getting up to as high as about 67.09, the high of the session here, about a 90 to 100 point intraday range. So certainly some volatility. You've got the NASDAQ up 180 right now. It's the strongest of the group, with some of the big movers being the chip names. NVIDIA up, 5 or 6 leading into the event here at 186 and change. You've got AVGO, another one of the chip names, kind of up there, up $14 and change. Google has been exceptionally strong, 295 here, rallied up to 300 and change here. It's been a nice day, nice little bounce for a lot of the mega caps, despite Meta's underperformance, Apple's underperformance. It's been really about kind of these big, and Microsoft as well, but some of the big name stocks really leading the charge here. Dow up 43. You've got the Russell up 5. Who cares about the Dow and the Russell when you have NVIDIA coming up here after the close? Oil futures down $1.41. We're at 59.26, so a little bit of a sell-off in oil, a little bit of a pop in volatility as well.
in oil itself. Volatility futures themselves, 21.25 here. We've got the VIX in the 23 handle, 23.34. I think that's the biggest key in for the overnight session and into tomorrow. I think this is going to be a vol crush event, but we'll see if that kind of plays out. Bonds down 5 ticks. Gold and silver both having some volatility as well today. Gold only up 11. It was up 50 or 60 at one point today. Silver up 48 cents. It got as high as 52, so about $1 higher from where it's trading now. And Bitcoin has been just absolutely smacked over the head here at 59 and change. What do you make of this market, Chris?
It's a market that's trading scared ahead of NVIDIA, right? You're seeing the reach for liquidity throughout the market, dollars up everywhere. Gold and silver tanked considerably earlier. Nick, I couldn't help but notice this morning when we got the news from the BLS that we would not get any more jobs data after tomorrow morning until after the December Fed meeting. Rate cut odds dropped. No data, no cuts is the mantra, apparently. Ooh. And everything takes a step back. Gold, silver, Bitcoin, NASDAQ, right? Getting a little bit of firmness here with NVIDIA poking up as we get ready for these earnings, which, quite frankly, let's ride. I'm far too personally exposed to the upswing in this AI cycle to be comfortable on a day like today, but that's the game, Nicholas. So that's the game we're playing here. How are you feeling about NVIDIA, though? You were talking about this being an inside up kind of day. You and I have mentioned this a few times this week. We went from first call, obviously, now through last call here on Wednesday. Taking a look at the options, $12.50 expected through the 2-day expiration. You still think that it's going to be an inside day vol crush, inside up kind of move?
I think it's inside up. I think it's going to lift the market a bit. I don't think it's going to be the kind of tail event that I think both sides of the aisle, for lack of better words, the bulls and the bears, are expecting it to be. I mean, that's kind of how markets go, at least in my experience. It's always like when everybody is expecting the huge big thing in either direction, it usually ends up being kind of a inside vol crush, non-event, at least in the short term. I think the big thing here is with vol where it is right now, at VIX futures at 2106, the VIX itself at 2023. I think if you get at least, even if it's a down move in NVIDIA, I think if it's at least kind of an inside move, or at least perceived and looked at as kind of a nothing event, the vol crush is going to be the factor that's going to determine the rest of the year. Like, I think this event is going to tell us, okay, you know, things got a little out of hand and we gotta pay for that. Or it's going to be like, oh, you know what, everything's fine and it is what it is, and maybe it's a little overvalued, but you know, we've gotten the boogeyman that we were looking for isn't there, and we can kind of proceed as normal. I think this is kind of the moment that we have here with the earnings that come up after the close today at 20 minutes after. So that'll be right in the middle of your session. I think probably the numbers come out earlier, but the call and whatnot is a little bit later in the session here.
Yeah, we have a 4:20 Eastern release and then 5 p.m. Eastern for Central earnings call itself. So there's, of course, that little gap when Jensen will be speaking. And
how do you feel? What are your thoughts? I want to know what you think.
I've said this before, and I know it's been chided in the chat because it's something that's worth giving me, you know, some agita about. But you look at the trailing 12-month earnings and the the last quarter that's being lobbed off today, you're looking at something like 81 cents. And today you're expected to see something coming closer to $1.30 for earnings. So if nothing changes tomorrow with price, NVIDIA's PE ratio will be coming down just by a function of the math. And so if you liked NVIDIA at its current valuation today, tomorrow you're probably going to think it's cheaper, which if we have the 50% margins and the revenue growth right year over year, then the revolution continues and we keep this party going until we get non-farm payrolls tomorrow, Nick. I mean, rare is the occasion that we have, you know, we don't have this ever occur. There's usually a day between NVIDIA earnings and something like a jobs report if they were to fall into the same month. Does that impact you and how you position and trade around this report, knowing that you might not be able to get out until there's like a second wave of event risk that's completely unrelated to this? Because like NVIDIA could do its thing and then tomorrow jobs numbers come out and like, who cares what NVIDIA said?
I guess we had FOMC minutes today, which, was another kind of event, to your point, a non-related event. So I don't know. I think there's just so much vol baked into this. There's been a nice move lower in a lot of the big name stocks. I know some people calling out Meta, and just to give Andrew his shout out, I will not be giving him a nothing burger. I've tried to avoid saying nothing burger. I think I've said it 2 or 3 times other than the other 2 that I just said. So he's probably getting drunk in the chat here with our little drinking game that we have around that. I think this is really the tech volatility that has been baked in. And I think if this is, if this isn't bad or lesser than what the numbers and expectations are, that the vol crush itself is going to lift all boats. Like, I think this is the thing that's going to kind of move markets forward here. Just having the event over with and done with and the numbers out, regardless of what the numbers are, I think that's the biggest piece here. And I think that's why volatility has remained so sticky.
Yeah, I mean, I think that's probably the problem for Bitcoin too. Zero Hedge earlier today shared a chart basically of NASDAQ vol versus Bitcoin inverted over the past few weeks. I guess I could recreate this. We'll recreate this. We can do this here real quick. We're just going to flash this up on the screen real quick. Yeah, rising VXN, which is the red line overlaid with the inverse Bitcoin on the right-hand side. Yeah, this volatility in the broader tech space is filtering through into a whole bunch of other things, including something like strategy, which I guess we still call it strategy these days. This has had a terrible day, down 10% right now. What's going on here? Is this something that people should be trading? I see a lot of talk about this on Reddit.
I don't really think this is the way to go about trading Bitcoin. I think with the move in Bitcoin itself using IBIT and the volatility there and the volatility in ETH too, which is, I think, about 100% or 100 IV rank here, or close to it at 83. It's coming a little bit. Those two, the liquidity and the volatility there, that's enough volatility for you to trade. Yeah, I don't think you need to go to MicroStrategy. And that, there is some beta still left in MicroStrategy, but I think a lot of the move and we've all seen the charts and the talk of the NAV versus what the premium is to the stock price. Right. I think that's coming out here and will continue to come out until it's basically, no leverage really to what the NAV is. I mean, I don't think that's a shock to see that finally come out. I mean, his whole ethos and game was basically trading that difference, right? You're selling stock that's trading at 1.5x whatever the holding is, or 2x the holding, and you're buying more of the holding. Like, once that goes to parity, you can't continue doing the stock shares to buy the asset at as much of a premium. You don't have that baked in premium. And so, I think this is it's taken a long time. And I think that was because of how much upside volatility there has been in Bitcoin, as well as just how much, activity there was in it over the last year, and how little access you had on the institutional level that you needed something like a MicroStrategy. But that stuff has I think that's had its day, is my long-winded answer.
Remember those news stories last December in the Wall Street Journal about people who were putting like their entire 401k into MicroStrategy? That was probably a sign of a top somewhere along the way. MicroStrategy on their website, strategy.com. Their 1-year return currently listed for MSTR is minus 57%, and the MNAV is 1.19. So you talk about that gap closing, not 1.5 anymore. down to 1.19. So it's a tough day for the crypto world here, Nick. Do you think there's anything going on with some of these names that people frequently trade? If it's a Riot, if it's a Coinbase, they're obviously down, not quite like MicroStrategy today, but they're still looking at 2-3% losses. Does Coinbase elicit anything from you with a mid-40s IVR?
I think coin is a little interesting here. I mean, I'm short put, so I'm in it already. I think that's probably a more interesting way than MicroStrategy. If you don't want to do like an IBIT itself, I think coin's interesting. I will say, because somebody in the chat is pointing it out, I'll give you a shout out, whoever was looking at these QQQ options, just to give everybody an idea of how much volatility. And I'm glad you put up VXN and you had that little chart. That was a good one. These 0-day calls in the Qs, we have 14 minutes left until the close. These 604 calls were just about $1 about 20 seconds ago. They've come in to be about 90 cents right now. But these calls, and even when you look at like the 606, which is 1% out of the money with 15 minutes to go, is trading at 50 cents. You got to keep in mind that this is pricing in some of the after hours risks that you have here. These options, a lot of people look at these 0-day options and think, oh, there's no way the NASDAQ rallies, 1% in the next, 10 minutes. These options can be exercised or assigned in the after hours session. And that's why they will continue to hold premium into the close today. So just be careful if you are buying or selling those options. These have risk past the next 13 minutes. They have risk all the way through the 30-minute session in the overnight out or in the after hours here. So just be careful with those. I see some people looking at those, and that's tells you a story of what the market is telling you is this can move the market a couple percent, no problem, is what those options are telling you.
Nick, we have just under 15 minutes left to go until the closing bell, and then we start to ramp up our coverage going into the NVIDIA earnings report. Before we get there, though, I think the production team had something they wanted to put on the screen here. Some exciting news. Yeah, because Tasty Trade's running. We're still calling it new. It's a promo. It's going on through November 30th. So if you're opening an account, use the promo code MONEYMATCH at tastytrade.com/moneymatch. You'll get 1% of your deposits matched up to $2,000 plus 30 days of commission-free trading. Again, that's tastytrade.com/moneymatch. Nick, I heard that we have an exciting marketing ploy coming up here that's holiday themed around the corner. We're going to have some fun stuff, or maybe we'll call it the 25 days of Christmas or something related, but folks will have to stay tuned. We'll get to that very shortly. Trust us, you'll be excited for it.
And if you missed Vecchio's amazing little short with his Christmas hat, it was that was a thing of beauty. It really was.
Oh yeah. Well, thankfully art is subjective.
Beauty is in the eye of the beholder. Chris.
Exactly.
And it was perfect to me.
Yeah. Well, it was an excuse. My wife's like, oh, you're really in the Christmas spirit early this year. Like you got your stocking up in the office, these like Santa, figurines ads. No, honey. This is just for something I'm doing for work, for the job.
Hey, listen, every single time we do those goofy videos, I always think to myself, I'm like, man, if 21-year-old fresh out of college Nick knew that he would be doing TikTok videos around, pop songs and pop singles of the day, I think he would be concerned.
He'd be saying, what the hell's TikTok? Hadn't even been invented yet.
That too.
What are you talking about, future Nick? Nick, I'm trying to think about what I want to do to manage positions going into the NVIDIA earnings. And I'm really, quite frankly, just content sitting with the exposure that I have here in the follow account. The thing that I did this morning prior to the day starting this is one of the benefits of having a new baby in the house. You can trade overnight. I got into some more US dollar long positions, and we're seeing the dollar have actually quite a strong day against something like the Japanese yen, which is now at a yearly low in the 6J futures contract. Even the euro here is spilling over. Does it concern you on a day like today where the dollar sitting up at session highs after you see stocks come back in, you see gold and silver give up all their gains? There's this talk that the Fed may not cut rates in December. does this, I was talking about this with Ilya earlier, doesn't it kind of feel like an environment not too dissimilar from where we were last summer when the Fed didn't cut rates in July, and then we got that bad jobs report, and then we had the whole yen carry trade unwind on August 5th, right? You know, the sequencing here, you get bad NVIDIA, you get disappointing non-farm payrolls. Does the Fed have enough? It doesn't do anything. They're late. Do you think maybe we're underpricing maybe a December panic, a December slip up here in broader markets?
No, I hear the jingle bells, Chris. Don't put that on me here. Yeah, I mean, I don't know. I tend to lean on the idea that we've taken some froth out. There has been a lot of, the market has moved 5 or 6%. No big deal. Pretty normal, quote unquote, correction. But you've had some things get absolutely murdered. And there's certainly some pain in the streets. You look at a Meta, you look at, Amazon reversed the entire move that it had on earnings, Oracle as well. Even NVIDIA down 10% from the highs. Like, these aren't small moves. And so I feel like you've gotten that. Like, I don't know how I can look at some of these stocks and be like, you know what, I'm going to play for 20% more than the 20% down move. Like, that's a hard trade for me. And so I'm trying to look at it from the perspective of, like, we've taken a little bit of the air out of the balloon, and that was enough to at least stabilize us here. I think that's what the markets are telling me. That's what I'm hearing.
Oracle is an interesting name because it's been getting a lot of attention for how its credit default swaps have been trading. That AI hyperscalers are seeing, traders, investors take out this insurance that maybe this AI bubble build out is not going to work out. Nick, CDS is a really, really thin market. As of the close yesterday, there were 148 trades placed in the entire Oracle CDS market for the entire month. So it's like kind of a tail wagging the dog situation when you see this out there. I don't know if you're reading into any of that news about credit markets, about these bond offerings from these AI hyperscalers, but that kind of seems like it's smoke without a necessary fire there. Like, it's becoming self-fulfilling because of this thin market that we look for in terms of insurance. I don't know. You don't seem to be worried, though. It's a 98 IVR, so we can't look away from it. That, I think, is the bigger picture.
Yeah, I mean, I think a lot of that is just the narrative right now is like scrambling for bubble narrative, for downside narrative, and that's the stuff that sells. Like, that's what it feels like here. And it's kind of an after the fact thing. Like, nobody was looking at Oracle CDS or bonds or any of that paper on Oracle when it was trading at 340. You're looking at it when it's down 50%. That's just like I agree with you. It's the tail wagging the dog, but it's all late. Like, it's all late looks. It's not, I don't buy it. I mean, I get it. I get the talk, and I understand what they're inferring here, but it's just not my. I don't think it's important at the moment.
So someone just sent me a tweet. Did you see that Meta's in a bear market now? It's down 23%. I saw this study from someone who I follow on Twitter called SuperTrade. Meta, after its daily RSI, technical indicator, falls deep into oversold territory when it's below 23, where it is right now. This has only happened twice before in history, Meta being this oversold on a relative basis, July 31st, 2012 and February 7th, 2022. A week later, Meta was lower by 4.5% and then 3.2% respectively. And a month later, in July 12, it produced a 12.02% loss. And then in February 22, a month later, it was down by 11.74%. So, I think it just goes to show, just because something is oversold does not mean that it is fairly valued yet. And if Meta, in its very limited sample size of 2 occurrences, if this little note here from SuperTrade is correct, then you're talking about probably not wanting to catch a falling knife just yet.
I mean, That sounds fine and dandy. I think I'm gonna just go on the other side of that and just sell some puts here. I think it's time. I think that 500 strike seems about right. I mean, come on, that's back to like the lows in April.
Nick, we got 5 minutes left. We have Ilya, perhaps Dylan, coming in here to talk about this as we get ready to transition into what's probably going to be nonstop NVIDIA coverage during overtime. Ilya, haven't seen you for an hour and a half. Has the market evolution since we got off of Futures Power Hour changed all that much?
No. We had an interesting little run around here with what we just saw on the FOMC minutes. Markets didn't like those FOMC minutes. That wasn't surprising. The FOMC minutes were going to probably say that the Fed is reluctant to cut in December, and that's sort of what they said. And the market sort of didn't like it and has now moved on, and we've sort of reset back to waiting for NVIDIA mode. We're essentially hovering at those levels where the market is kind of at a sort of inflection zone and waiting to see what this is going to be.
Dylan, joining the conversation here. How should we be thinking about NVIDIA? Nick is wildly bullish. He's selling puts. I'm girding my loins. Ilya is selling the loin girders. Where do you sit along that spectrum?
I got to get that tattoo.
I would gird one's loins. I believe having girded loins in a situation like this is highly advisable. I believe that the bar for performance for the ungirded loin is extremely high. And so I think that based on the response to Meta, based on the response to Microsoft, based on the sort of, I'll say, collective vulnerability of this entire market right now, if NVIDIA doesn't blow the barn doors off, it's not going to be well received. That's what I think. So I think that it really has to be way.
That's not supernova Dylan anymore. Oh my God!
Listen, things have gotten a little squirrely. We haven't talked in a few minutes, Nick. I've been thinking for days.
I know, but this is the time. This is your, this is when
you got it. This is when the preachers got to preach.
Yeah, you can't be buying at highs every time. This is the spot. You gotta the contrarian trade. The street's all scared.
Out there, pal.
No, all right, that's okay.
I'm not sure that they're scared enough, but I will say
story that's not AI right now. That's my concern. Like, give me one. That's not my friend.
There is one. There is one. The Economist had a cover this past week, and that cover was all about how the stock market decline can cause recession. That is not what I, as a bear, want to see on the front of the Economist. I would like a few more.
Too public.
Too public. Now, it is an article about how the signs are not there and everything is fine, and that eventually, in the great and dismal future, this may happen, and really focuses more on how a stock market decline can reverberate into the real economy. That's the main story. I don't like seeing them being this bearish on the cover of the magazine, because this is oftentimes a contrarian signal, and I would much rather they put all that kind of stuff in the back of the magazine and have it on the cover in a few weeks after I've had my fill of this down move.
Okay.
I don't like it.
Clarify. It's not clear to me where you are in this whole situation.
Where I am?
Yeah.
Leaning long S&P, short the Russell, basically long things that are conducive to more liquidity coming into the market. So, depending upon what switches slipped, will gold and silver do well on a day like today? I could convince myself, Dylan, that if NVIDIA blows things out and it's, pie in the sky, people say, why do I need these shiny rocks? I want to buy those other shiny rocks that go into those thinking rocks, that thinking sand that goes into computers. So they sell their gold and silver to buy more semiconductors. Could also see a world in which the market goes, oh, geez, AI revolution's going on. Everyone's going to be unemployed soon. The Fed's going to have to cut rates, buy more gold. But you know what? We're going to cover that in a little bit, Nick. Dylan, Ilya, and I are going to continue on because we have overtime coming up next. We have NVIDIA earnings coming out in 20 minutes time, 4:20 Eastern, 3:20 Central. So stick around. We're taking a quick break. We will be right back.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Hug your wife and kids. NVIDIA earnings are coming out soon. It's Wednesday, November 19th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco. Dylan Radigan in Milan for an abbreviated 30-minute episode of Overtime, or I suppose that's the new standard, so not so abbreviated. We're here to take you through the NVIDIA earnings, which come out at 4:20 Eastern, 3:20 Central Time. Before we get there, of course, though, we have to talk about the wild day that it was in these markets. Yeah. Lots of jittery hands on all, accounts, all products, all facets of this market. Stocks enjoying their Vixpiration bounce this morning before the wind is knocked out of the market. No data coming out for the Fed to work with. After tomorrow's jobs report, the September figures due out at 8:30 Eastern, 7:30 Central Time, we will be flying blind until December 16th, when we will get the consolidated October and November figures, or at least the figures available for October. But guess what? The Fed meeting is December 10th. So the Fed won't know what's most recent. The market took that as a sign today that it needed to dump those December cut odds a little bit lower, which it indeed did. It was bad news for stocks, bad news for the metals. It was particularly brutal news for the cryptocurrencies, with Bitcoin futures dropping below 89,000, Ethereum shedding near 6% despite a late day rally. Of course, none of that really matters here because it's all downstream from what is arguably the most important earnings event release of the year. Dylan, how much of this market is hanging on NVIDIA right now? And that belies the fact that we counted earlier today, 717 different ETFs have NVIDIA in them. So a large swath of people are going to be impacted by what occurs in the next 16 minutes.
I think that I think the fact that I perceive it to be extremely consequential, not for itself, but I still think NVIDIA is one of, if maybe either the most or one of the most credible bellwethers for the entire AI supernova piece of the market. And because I believe that the AI supernova piece of the market is the core pillar of the entire market's relative performance, it probably means it doesn't mean as much as we think it does. In other words, the fact that I like what Ilya was saying when we were in the commercial break, which is the fact that it's perceived to be so important may actually diminish its importance. Obviously, it'll be important to whatever happens to NVIDIA's stock price. I think the real question is, does NVIDIA miss or beat, like a meaningful deviation from expectations either way, how influential would that be on the balance of the overall financial markets? I personally, I think it couldn't. I think it's extremely important, but that may well mean that the irony is that it will be less important than I might think it should or could be.
Yeah. I mean,
I think the question is sort of what's the second order effect of this report? I mean, the first order effect I think is pretty easy to assess. It's going to be relevant, meaningful, substantially relevant. But the question is does a big NVIDIA beat justify more non-thoughtless AI supernova biome, regardless of the Fed, regardless of anything?
Right. And I think what we've learned since October the 29th, when the Fed punctured everybody's priced for perfection, rosy lens on stuff, because everything else went the market's way but the Fed. But then the Fed came out and said that December cut, you've got a 95% likelihood. That's a no. And so since then, we've had the Mag 6 report. Market has not liked it. And really only Meta missed. And that was a local Meta thing. Meta went down hard, obviously. But all of the other ones did reasonably well. Microsoft got sold for no apparent reason whatsoever as far as the earnings were concerned. The earnings were solid. So there's at least now a few weeks of evidence that tells us that the market is so priced for perfection on these things that there's not much that these things are going to do to get the market back into a better state unless they really just smash expectations. And for NVIDIA, the single-digit quarterly beat normal has been somewhere in a range of 4 to 10% since the beginning of last year. So let's say this thing beats by 10%. So it's not $1.25 EPS, as Chris, you and I were saying earlier today. It's $1.38 generously. If it's anything less than $1.38, which would be a 10% beat, does anyone even care? Is it even a sentiment fillip then? Not so sure that it is.
How NVIDIA has performed following its prior earnings releases. Week change, last report, a week out, you got an 8% drop. The May earnings, it was higher by 3.3% a week following the earnings. Prior to that, February 2025, 12.7% lower. November 24, 5.95% lower. August 24, 19.9% lower. 4 of the past 5 releases have not given the market sustainable moves to the upside immediately in its wake. And those feel like those were much more conducive environments for stocks. Maybe not February, but certainly May and August, the markets were near highs. November last year, the market was near highs. Is that really the thing that we should be concerned about? Like if you have an opportunity you're in here long, you're long NASDAQ futures, this market rips, you get a rally, Dylan, knowing that history recently has not produced sustainable winners, and we have non-farm payrolls tomorrow, what's the harm in not playing hero ball here and just taking a smaller win than maybe people would be comfortable with?
No, I mean, I think that's almost what you're describing is kind of the prevailing conventional point of view. And I think just because that's so broadly, I think what you just described is the consensus.
It's the public.
And so I totally agree with you. I mean, I've been here for a week on this, but it's also because I feel like we've become quite public in this point of view, which then makes me wonder. I mean, and the other thing that I think is a factor is I think that the strength of the AI supernova performance is more important now than it was 3 months ago because some of the other supports are less reliable, most notably the Fed sort of activity. But also, I do think that there's an increased perception that you have these giant AI companies that are just trading money with each other. that it's these 7 companies, $1 trillion for you, $1 trillion for you, and everybody's booking $1 trillion or 500 billion in revenue or fundraising or whatever the metric is, but it's ultimately just trading money between these 7 companies, excuse me, that people are a little bit more, that the gap between value in terms of applied value and infrastructure value and sort of speculation about the value of the install, because we're like in this sort of installation phase of AI as a permanent part of human life forever now. And the value of that installation is obviously very much reflected in NVIDIA, not uniquely, but it's a core, it's a foundational piece of it. And there's a lot of money riding on how quickly this happens. No one's debating that this is going to happen, or it is happening. It has happened effectively, but it's just with this sort of efficiency of it and the breadth of its implementation and adoption is still a subject of debate in terms of timing. And so as the longer this goes on and the less additional support you're getting from other quarters of the market, i.e. the Fed, the more relevant each incremental earnings report becomes. And I think that the reaction to Meta and Microsoft is also combined with the concern about the sort of intra-group trading of money has raised the stakes for analysis on every one of these earnings reports. And I think we'll continue that way until there's any other addition. If the tariffs go away and you get some more momentum, inflation goes down, whatever, the Fed, there's other things that can fuel this, but those things are not so present right now.
Earnings here due out in about we'll just call it 8 minutes time at this point. EPS estimated at $1.17, sales of $54.59 billion. The options market is basically implying a plus or minus 7% move. We want to just round up a little bit. That effectively puts us in a range where we're talking about 199 on the high end. We're talking about from current market price, right? 186. So $12.29 to the end of the week. So we're talking about, we'll call it, 199 and then down to 175. That's a pretty decent range to have played for a vol crush here. Nick's perspective is inside and up, Ilya.
Mm-hmm.
I see Polymarket telling us there's an 84% chance that NVIDIA beats quarterly earnings. Is that a function of tomorrow's news today, or? I mean, you obviously are a bear in this market right now.
Yeah.
Is there a number that pops out to you that concerns you?
I mean, they're going to beat. It's kind of
it's
a
$2.
Silly,
EPS is $2.
Yeah, it's kind of a silly thing. Like, they're going to beat. They're not. I'm amazed that there's a contract on this. Of course they're going to beat. That isn't the question. It sort of goes back to an old Tom Sosnoff chestnut that basically says, I could give you the news for tomorrow today and you still wouldn't know how to trade it, because it's not about what the news is. It's about what sentiment does with the news.
Like with Palo Alto, where their EPS just came in at 93 cents versus 89 cents expected. Revenues beat 2.474 versus 2.46. And the market is still trading lower here after hours.
Right.
About 3.5%.
Right. I mean, this really speaks volumes. I mean, you and I were talking earlier today. The rally in the US dollar began on September 17th in earnest, the day the Fed began cutting rates. In what economics textbook does it say? In what markets lore does it say that when you begin lowering interest rates, the currency strengthens rather than weakens? Obviously, this is a question of what was priced in, what was expected, and what ended up occurring. So when we see this dollar rally, what we see is not the dollar rallying in spite of rate cuts. It's a dollar rallying because there was nothing else in those rate cuts. They occurred exactly as expected. Speculation turned into reality. And not until October, by the way, did the Fed throw a monkey wrench in this. In September, it was all dovish. It was, we're going to do 3 cuts before we said. 2, it was all dovish. The dollar bottomed anyway. This is about speculative interest. And the bar on NVIDIA, in terms of its ability to influence speculative appetite back in a positive direction, seems to me to be very high. Now, the markets could reason, we talked about this in the green room before the show, that this is now a public view, that the bar is high, and that we've seen 6 companies out of the 7 that we care about report and not generate positive results. And then NVIDIA is going to come out here, be it right on the screws or even a little bit soft, and the market's going to go, good enough, and pull the rug on everyone. That's possible, of course. We have to be open-minded to that idea. But if we look at the price action up to this point, what it has told us is the market waits to get on the other side of event risk and then sells. In rallies, in bull markets, good news is embraced and bad news is shrugged off. In down markets, bad news is embraced.
Still have a few minutes before NVIDIA, before we get there, because I have a feeling it's going to consume us once we get to the other side of the earnings release. I do want to briefly we'll trip over to the world of geopolitics with you to pick your brain on the latest happenings across the pond. U.S. releases a report today, or at least there's a report that's released today out of the U.S. that the Trump administration is pressuring Ukraine to sacrifice some territory to Russia in exchange for security guarantees for both Ukraine and Europe, with guaranteed troop presence out there. Oil on the headline, when that comes out shortly after 6 a.m. Eastern, begins to take a little bit of a bath, down 2.23% as we wind down to the close. Is this, we haven't really had much geopolitical risk filtering into oil really at all, going back to June. Is this something that is a story that has more dominoes than we're paying attention to because of all the domestic kerfuffle?
The story would
going on with the
be
shutdown?
forfeiture of the eastern Ukraine in exchange for an end to the war and some version of an American security guarantee?
Correct.
Mm-hmm. And you're saying, is that reflecting in is that filtering into the financial discussion, or it should it should? Are we missing it, basically?
Are we missing it? Is this a big deal in Europe right now? Because it seems like this is something that you cared a lot more about 6 months ago, about the tiredness of European leaders with respect to the war effort. And now it feels like it's I don't want to say it's a non-issue. People are still dying, but it feels like it's a non-story for us outside of today.
Yeah, I mean, I think that that's the case. I think that it's not a topic. Which is not to say that it obviously would be a topic or will be a topic in the event there's actually a whole situation. They actually sign a deal and the killing stops and all the things. But I think people have lost patience or interest in discussions of what might happen.
Well, the essence of this entire conflict is the degree to which Russia is prepared to menace other objects in Europe, in particular within NATO. And I think the reality of this war, as it's worked out, is Russia did not get to sprint to Kiev and then retain a ton of military hardware and personnel with which to then, let's say, menace Estonia, Latvia, or Lithuania. And so in any case, any kind of next step here is years in the making. Because let's say you have this peace deal now, and it's this kind of split the baby peace deal that basically freezes this conflict until the demographics are such that Ukraine can take back their east, because you can rest assured they will not take this lying down. They might accept a peace now and hold a grudge until the end of time. Just take a look at Yugoslavia and its now constituent pieces and the beef that they had before there was a Yugoslavia, during,
we will
after.
Do that after NVIDIA earnings come out. Well, I don't know.
Should be right about now.
Yugoslavia after earnings come out. But yes, in a few seconds, NVIDIA earnings are coming out again. You're looking at an expected range between basically 199 and 175. As soon as I see the numbers, I will let you know.
Here we go.
We are trading a little bit up here as soon as the numbers are coming down the pipeline. 189.
We're popping higher. Maybe not.
Well, you know how
still
it is
a little, still a little squirrely here.
If you see the numbers, shout out the numbers because I am waiting.
Looking.
I love when the market says,
Yep, got the numbers right here.
EPS, I have $1.30 on the EPS.
$1.30.
And we beat on revenue.
Hairline beat. Revenue is a hairline beat. Expected was 55.1. We got 57.01 billion.
So
a 3% beat on both EPS and on revenue. Overall EPS up 60% year over year. Revenue up 62% year over year. EPS up 24% quarter on quarter. Revenue up 22% quarter on quarter.
So that's EPS of 130 versus the 117 earlier. Sales 57.01. That's beautiful. 193 here and saving the market. NASDAQ now up 1.16% on the other side of this. And you can see how it's really
just as we said in the green room, we're going to get something inside the 125 to 138 range, and the market's going to say screw it and rally.
Russell is
hilarious.
Not participating here, had a little bit of a pop, but your NASDAQ is back to 24,900, quickly getting back to the highs of the session. In terms of other assets, just taking a look here, gold, silver, getting a little bit of a bump here around the news, going over to the bond market after hours. Good earnings. Why hold fixed income when you could, get the convexity of stocks? So you get a little bit of a sell-off here in your bonds and in your notes, modestly 2 ticks. But the news, of course, is NVIDIA itself and the NASDAQ. NVIDIA earnings do come out 194 right now here as we get ready for Jensen Huang's press conference at 5 Eastern, 4 Central. If you missed Ilya's readout, it's an EPS of 130 versus an estimate of 117. Sales of 57.01 billion versus the estimate of 54.59 billion. So beat. Their adjusted gross margin, 73.6%. Dylan, you wish those Euphoria shoes had a 73.6% margin?
And that's a validation.
We're minting money,
there.
baby. My God.
Q4 revenue.
This is a validation of the investment and the perceived value of the install of AI, which again, I agree with that actually.
Q4 revenue.
I think this is sorry?
Q4 revenue. The estimated guidance was for 61.98 billion. NVIDIA's guiding 63.7 to 66.3. Can we get much higher? Appropriate question to ask after a 420 earnings release, Ilya.
Yes, what indeed.
What does this do for the short-term outlook for people who are feeling a little bit bearish on stocks? Has anything changed fundamentally from where we closed today? Do we still have
not even a little bit?
Technical,
not even a little bit. I mean, consider the government shutdown ending. Okay, we got a little bit of a pop. The Trump Xi thing. Okay, we got a little bit of a gap. This market has taken between 24 to 48 hours to dismiss good news. So is this even good news? I mean, it's basically right in line with expectations. So I wouldn't expect that this survives contact with the NFP report in the morning if that NFP report is soggy. If it's not soggy, then we'll see how the markets ultimately read it. Because if they read it as saying the Fed's not going to cut because it's not soggy, I'm not sure they like that either.
Well, we got to give a tip of the hat to Nick right now because he was calling for an inside up move, and we do have the insideness. We're certainly below 199, and we're certainly up because we were at 186 and change before the earnings release. So that seems to be right on the nose. Dylan, I mean, if I'm a shareholder of NVIDIA, it's like, hey, this company is now making like $200 billion a year in selling these chips, and they're making a 73% margin. Despite the fact that we have the tariffs and the trade wars and the restrictions. And to Jensen's credit, he has cozied up to Trump. Trump tweeted about him 3 separate times today. I guess the question is, if the market pulls back, how eager are you to buy the dip? Because I see zero problems here.
This is sort of best case scenario for the dip buyers, and sort of was the biggest concern. I think that it'll be interesting. I do wonder if you're setting up for your sort of, not to be a bummer, but to your classical K-shaped economy here, where you're just going to get such a consolidation, and but that it doesn't ultimately radiate out in the way that it would.
You could see that. You could see that in their earnings. Just looking through some of the different segments here, gaming, consumers, 4.3 billion versus 4.42 billion expected. So the hyperscalers, the data center revenue, right? That's crushing, 51.2 billion versus 49.34 estimated. But the consumer-facing segment is actually struggling a little bit more, and that's in line with what we've seen and heard from Home Depot. From we're going to get Walmart tomorrow, right? But we've heard that from Disney in recent sessions. The consumers are struggling. Help with mortgage, Google searches, highest level since 2008. Delinquencies on credit card debt, and like serious delinquent debt where it's been delinquent for, at least 90 days. That's at this highest level in several years. The K-shaped recovery, Dylan, jobless economy, it's going to be this weird thing, right? Can you imagine this past quarter, NVIDIA is making more money than ever, and the economy may have shed jobs, and this company's margins are running out?
That's exactly what's happening. I really think, this is a different conversation for a different environment, but I think that there is a social and political challenge that's brewing here that's going to come from the wealth that's accruing to the charts like this is coming in direct opposite. That's up because the number of available jobs is collapsing. This is the new entry-level marketing job. This is the new entry-level finance job. This is the new entry-level legal job. The reason these companies are so valuable is because the technology represents a alternative to tens of millions of entry-level and mid-level sort of jobs, from marketing to legal to finance. And I think that that's going to yield a very interesting and challenging political environment.
Well, and this, of course, is exactly the point, is at this point, we are not seeing jobs being lost for this reason. There was a great study in The Economist that basically says nobody is getting fired because they're being replaced by AI, but also nobody is getting hired on the expectation that AI will replace those people you would hire. And so nobody wants to go out there and actually expand the ranks. Nobody is actively shrinking the ranks on AI grounds as yet. But, and that's because all this stuff is still getting built. It's not deployed on that kind of a scale. There's not energy to power it on that kind of scale, et cetera, et cetera. But the expectation behind all of this, I would say, breathless kind of no holds barred rallying this year is that that's what's coming. And while we don't have it yet, how we get ready for that will be a huge sentiment question. And if we've overbuilt because the politicians are going to come out and say, no, you can't replace all these jobs. No, this isn't politically tenable. Yes, we are going to have guardrails on how this gets deployed because next year is the midterms and 2 years after that is a presidential election and everybody's going to have to tell the people something.
Right.
You're going to have a lot of disappointed folks that over-extrapolated this, ultimately.
Well, we're going to extrapolate it all the way to UBI, right, Dylan? The AI revolution.
I think that's the terminal event sooner than later. I think the sooner the better at this point, because I think you're really setting up a weird situation for society that's going to require an unconventional solution, as I've said in the past.
They're going to put AI in trucks, and trucking is the #1 source of jobs for Americans with only high school diplomas. I don't want to live in interesting times, guys, but we're out of time here on Overtime. So we'll be back tomorrow, same time, same place. Good luck if you're trading NVIDIA. Remember, tomorrow morning, 8:30 a.m. Eastern, 7:30 Central Time, non-farm payrolls. 50K is the expectation. Will we beat it? For Ilya Spivak and Dylan Radigan, I've been Chris Vecchio, taking a brief break here on Tasty Live, after which you'll find more Ilya because he's back with Macro Money. See you there.
See you there, everybody.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
What or who can save this market now? That's the question that we're asking ourselves today on Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. We had the first batch of major event risk here for the week. Earnings from NVIDIA are with us, as well as minutes from October's FOMC meeting. And we have something to chew on, finally. The reaction in the markets is an interesting one. So what we're going to do here is break down what's occurred, take a look at what's coming up next, and see if we can make the case here that perhaps this relentless selling that we've seen across the markets this week, and really starting almost 4 weeks ago on October the 29th, whether that's something that's finally starting to run its course or if there is more ahead. So here's a look at the way that the markets performed today. We can see a tepid rise for stocks, S&P up 0.38%, NASDAQ up a little bit over 0.6%. A slight uptick in the yields. Seems to be less about this or that view on policy. In fact, yields have been a little bit disconnected, especially at the long end, from the very immediate policy questions. They seem to have benchmarked that earlier. And instead, a reflection of the risk-on mood. Very cautious risk-on mood, but a risk-on mood nevertheless. At least the aggression of the risk-off move earlier in the week and last sort of tail end of last week, at least, that has waned here somewhat. Gold idling with this kind of correction, a little bit higher, again, starting to add evidence into the pile that gold is no longer a foil for the dollar or a foil for yields, but is more like a speculative asset with its own speculative narrative, not necessarily the same speculative narrative as stocks. In fact, we might be used to a risk-on, risk-off narrative going back, really all the way back to the 2008 crisis, where assets go into either the risk off or the risk on bucket with nothing in between. But now we find that in sort of the post-COVID, increasingly deglobalizing world, there can be multiple speculative narratives that are not necessarily correlated at the same time. And gold seems to be one of those. So it's up here on what seems to be a sort of day for a breather on the risk sentiment front after aggressive selling. Dollar is up across the board here after those FOMC minutes. We'll talk about those in a moment. Euro is up 0.5%. Yen is up almost a full percentage point. That's after some very dovish comments from Takaichi Sanae, the new prime minister of Japan. And what we, of course, we're looking for there continues to be the sort of story du jour. When she went and got this job, we sort of highlighted that who she is a protege of former Japanese Prime Minister Abe and Shinzo Abe, and that in that she is quite dovish on monetary policy, very expansionary on fiscal policy, and what we end up with is this kind of rhetoric that has been weighing on the yen really since July. And not surprisingly, we continue to see as more of this kind of commentary comes out, we get still more of the same. The news today was that the new administration will deliver a huge spending package and that it's going to try to back those by low interest rates, which essentially means that we are probably looking at the BOJ, which is not strictly independent from the government when push comes to shove, that it's going to get restrained in whatever rate hike intentions it might still harbor. Bitcoin down 3.52%. The meltdown in crypto continues and continues to tell a story of eroding risk appetite, especially at the high beta, sort of further end of the risk spectrum. And that, of course, speaks to the larger story here. The idea that the markets are still deeply uncertain about what's going on, as reflected in Fed policy expectations. In fact, as we take stock of this kind of modest rebound in stocks today, consider how we're performing so far on the week. We're down almost 1.5% on both the S&P and NASDAQ week to date. So since the opening on Monday, rates are down because risk aversion, and so bonds are higher. Gold is down because, again, it is a speculative instrument now, apparently. The dollar is up across the board. Strong gains against both the euro and the yen. Bitcoin is off 5%. Consider that in the context of what we saw last week, which was a stall for stocks after aggressive selling. And for the dollar, which, again, was a little bit more digestive. For gold, that was a little bit more digestive. For Bitcoin, though, clearly speaking about intent. Bitcoin is, again, down 9.3%, down 5.7% the week before, and on pace to be down over 5% this week. So the unraveling in risk sentiment, at least as reflected in capital rushing for the exits in the far edges of risky asset universe, that is Bitcoin, that really speaks to where sentiment seems to be, and perhaps even more clearly where retail sentiment seems to be, because professional sentiment has been quite negative for a while. But retail sentiment has really helped to underpin markets and has been very rosy, and perhaps that's finally starting to show cracks. a big reason for the weakness that we saw earlier today before the markets kind of evened out going into the NVIDIA earnings, which we'll talk about momentarily, was this bit from the Bureau of Labor Statistics here. Almost said Bank of International Settlements. Not that. This is telling us that November's, or rather the November release of October's jobs report canceled. We are not going to get October's jobs data, and we are going to get November's job data after the Fed decides rates on December 10th. That's been pushed from December 5th to December 16th. In other words, the markets are not going to get the kind of clarity ahead of the Fed meeting. And of course, the Fed itself is not going to get the kind of clarity ahead of its meeting that it might need to raise rates or cut them or to do anything at all. And of course, the probability that they were going to raise was never really on the table. But when we look at Fed policy expectations going into today, they'd been hovering at 50-50 for December. And so really the market didn't know what the Fed was going to do. And that, of course, was the feeding of the uncertainty personified that the markets have been so concerned about. Now, we get this announcement today, and not surprisingly, the market's readout is, well, this is just more uncertainty for longer. The Fed really doesn't know what it's going to have to do, which probably means it's not going to do anything. We get a similar message from minutes from October's meeting. We can see here most officials see rate cuts over time as likely. In other words, the bias at the Fed still dovish overall. Several officials said a December cut could be appropriate. However, many others felt rates should remain unchanged for the rest of the year. In other words, many is greater than several. So the consensus on the board is probably now to hold rates steady, at least as far as the minutes were concerned in October. Now, we did this exercise as I was writing up the preview for these minutes, looking at what Powell said on that fateful day on October the 29th that seemed to summarize these views and whether things had changed. And very tellingly, what Powell said at that press conference where he scared everybody was, look, there were strongly differing views about what to do in December. September and October were risk management cuts, and that's not the case going forward. We don't know what data we're going to have in December, and of course now we see that it isn't much. If there is a significant change in the economy, we will pick that up, ostensibly, if the market starts to come undone, if the bond market starts to scream, if credit spreads start to widen out in an untoward way. Yeah, the Fed would know something is wrong, and then they would act. Have we seen that since this meeting on October the 29th? No, not really. Meanwhile, we have less data than even we thought could be the case, with the government shutdown ending and with the statisticians back to work. So what's the upshot? Well, to quote Powell directly, what do you do if you're driving in the fog? You slow down. And so that's essentially what we seem to be getting in these minutes. And on reflection, since this meeting occurred and up until now, has the validity of any of this changed? No. Doesn't look like it. Doesn't seem like anything has really moved. Most officials warned that additional rate cuts could risk embedding higher inflation. That tells you where their bias is. Several warned of a possible sharp, disorderly drop in stock prices if there's a sudden reassessment of AI-related expectations. Not surprisingly, we're starting to see a little bit of that, but that's not exactly a controversial opinion. We see also that against this backdrop, Fed staff have slightly upgraded their outlook for GDP through 2028, which again just diminishes expectations for rate cuts further. And so if we look at the probabilities now as they stand for December, we're at 34%, call it, for the probability of a cut, 66% for standstill. Now, we did get a little bit of a pop from NVIDIA here after the close, so that might give sentiment a little bit of a fillip when we come back and see the way that the cash equity open behaves itself once we get there tomorrow. That's after we get about a 3% beat on both EPS and revenue from NVIDIA for the third quarter. Now, this was inside their usual surprise range. The range was between 4 and 10%, going back to the first quarter of 2024. That's when NVIDIA kind of evolved from double-digit quarterly surprises to single-digit. And what we end up with here is within that range. So NVIDIA could have reported up to $1.38 a share for EPS, and that would be kind of within the realm of what has been normal. They reported $1.30 against expectations of $1.25. So we're looking at ostensibly a slightly better than expected result. That's given us a little bit of a lift for the shares here. We'll see if that does any more to buoy sentiment. Obviously, NVIDIA is a giant pocket of market cap, so we're getting a little bit of a lift for Bitcoin after hours here. We're getting a little bit of a lift for NASDAQ futures. The key question really will be whether this holds up beyond this initial reaction, because what we've seen, again, since October the 29th, is that the market has shrugged off good news. It usually takes between 24 to 48 hours to digest that good news, but after that, the good news fades. The reopening of the government after the shutdown last week, beautiful case in point. We get about 2 days worth of upside, then everything stops, and we end up ultimately with a goose egg of a week. So we get this lift to sentiment here, but it is unclear that it is going to persist unless we get some sort of a breakthrough for the Fed. In that sense, we are going to get a belated September U.S. jobs report coming out before the cash equity open tomorrow. The expectation is that we're going to see 50,000 jobs added in September with a jobless rate of 4.3%. How impactful this is on anybody's reckoning of what the U.S. economy is doing, including that of the Fed, is unclear because, of course, this is tremendously dated now. But in so much as the markets just want a common yardstick, it will still probably end up as a sentiment barometer of some sort. If we get a weak number, I think the expectation is going to be that October probably was weak also, even though we're not going to know anything about what's going on for the official figures as we saw for October until we end up in December the 16th, and then maybe as the November numbers come out, October will be backfilled. So we'll see. But this should be an interesting sort of a barometer. It probably falls too far in the rear view mirror to tell the Fed anything actionable. If it is very soft, the markets might reason that the Fed could extrapolate this to get themselves to cut in December, because, of course, the weakness of the labor market has been their main hobby horse here. But nevertheless, this is very old, and it is unclear that the markets are going to embrace some sort of clarity out of it. If ultimately we are now, as we see on the expectations front, about 33.66 in favor of a hold, and there's a soft NFP number, maybe we get back into the vicinity of 60-40 or 70-30 the other way. Maybe we get back to 50-50. If we get back to, let's say, 60-40, 70-30 the other way, does that change anything? Well, no, the markets were already there last week. They were already there going into this week. So it doesn't necessarily suggest that sentiment is going to get much of a lift. But it will be interesting to monitor, of course. Later in the week, on Friday, we're going to get a much timelier indicator of growth by way of the S&P Global PMI numbers. They're third party and not dependent on the U.S. government shutdown, so they should be much more telling for where the market might see the business cycle near term. Expectations are for a slight slowdown. We can see that on the composite PMI number there. Of course, as ever, these are centered around 50, where that's neutral. Above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. And what we find here is essentially for the U.S. composite number, a move from 54.6 to 53.8 would be growth, but at a slower rate. So we'll see how that goes. We have seen growth rebounding here after the tariff shock at the start of the year. Here's that tariff shock right here. Here's January. So we get a big sell-off or a big decline, rather, in these PMI numbers showing the level of concern with the tariffs since, tellingly, April. By the way, this looks very much like the stock market, especially the equal weighted versions of the S&P and the NASDAQ. Not quite the regular versions, because of course they're so skewed by the amount of market cap in the Magnificent Seven. But I digress. We're back to these heady levels for growth at the end of 2024, which were themselves multi-year highs. So it looks like things are generally okay, and it looks like these incoming numbers are going to be about where the markets have seen growth. But of course, from the Fed's perspective, this is not a recipe to rush into aggressive easing. For their part, the markets have mostly concluded that we're, as we just saw, unlikely to get something now in December. But for next year, we're looking at almost fully priced in expectations for 3 cuts. 72 basis points now on the table, which of course contrasts dramatically with the Fed's own forecast. We can see from 3.6 to 3.4 for next year, that's just 1 cut. So the question really here starts to be, well, the markets are already very, very dovish relative to expectations for next year. What could the Fed really do with stale September data to tell the markets, hey, we're coming your way, stop freaking out? Not very much. And so what we're setting up for in December is not only a cut that doesn't occur, though the markets want it, but maybe also a forecast, because we're going to get this summary of economic projections updated again in December, that doesn't line up with what the Fed is saying at a time when, again, they want more cuts. Strong PMI data wouldn't help this either. So if the problem for markets is that the Fed is not easing fast enough, none of what's directly in front of us seems to be helping or seems like it could be helpful. Indeed, if we take a look here at what's happened, it could not be clearer. Here is the last Fed rate cut. This is the October 29th move right here. Notice this is also where the stock market tops. That's the S&P 500 right here. And that's arguably because of what Powell says after this very move. We can see here since then expectations have been relatively steady, and that's even as the outlook for the rest of this year, that is December, has unwound because the market is really holding on to these cuts for next year. But if that's not going to hold up, if the Fed is not going to come fast enough the market's way, well, then this disappointment that we've seen is probably just warming up here and has more room to keep going. Meanwhile, for the dollar, one might say, well, the dollar should be declining. After all, we've started a rate cut cycle, but as you can see, the start of that rate cut cycle also marked the bottom in the dollar after it retested July's lows in mid-September, and that's because arguably this much has already been priced in. And what this dollar move is more risk aversion, and the dollar reclaiming its mantle as a haven asset after this relentless sell-off in the first half of the year, a record-setting one, as a matter of fact. And so what we end up with is a dollar that continues to march higher. Now, from a positioning perspective, I've updated some of my exposure here. I'm still a little bit long gold at these levels, basically right around here, looking for maybe a bounce if the market starts to extrapolate that it wants rate cuts further downwind. That would, of course, require for gold to transform itself back into a dollar and yields derived kind of a creature rather than a sentiment derived one. We'll see if that manages to happen, but so far I'm holding a little bit of a long exposure here. We'll see what happens. I'm back on the short side of most major currencies. I flirted a little bit with being long the euro and the pound. That did not work out, so I quickly pulled up anchor on those positions, and I have now flipped back short. Short the pound, short the euro, been short the Aussie since the beginning of this week again, and been short the yen since July. That's a position that continues to work. I never took it off as I was cleaning up my other dollar exposure last week and this week. So I'm still very much long the dollar, just much more one-sided once again in where I'm sitting. Still short risk. Bitcoin continues to sink, so I'm still holding on to these put verticals that I put on. They're one of the bedrocks of the portfolio now with how they've performed. Bitcoin down again today, so IBIT's off 3.74%, so I'm going to keep holding on to these. There's plenty of duration in them still. I put on a short on IWM this week, looking for the Russell to also come down. That's been the latest addition to my risk-off exposure here. Of course, still short the S&P through SPY and have been since that October 29th Fed meeting when Powell said the magic words. So that continues to work as a put vertical here. Still long the long end of the bonds. Seems like they're not really responding to Fed policy expectations as readily, and maybe that starts to speak to the prevalence of risk aversion as well as the idea that rates are going to be expected to come down later, if not sooner, and so the cuts will shift deeper along the curve, and that will keep bonds bid on the long end, even if the front end has to suffer a little bit. Still short crude oil. It's very slowly going nowhere, but the bias is still seemingly down, and the position is almost at break even. It's not really up all that much. And so I'm going to be continuing to look for what happens here. As you can see, we closed today just under 71, and the sort of most aggressive of sort of the earliest of these positions is based from 71 and 70. So this is not a trade that's making a ton of money. It's basically where it started. So we'll see how it goes, but so far crude oil still looks kind of soggy. Of the long-term exposure, a very, very long-term position with expiry at the end of next year for MSOS in the event that cannabis comes up in the midterms. And the long-term holding now, I've been sitting on it for months and months. EWZ, the Brazilian stock market, I have calls on that. That's been working for a few months now, and I've got expirations here at the end of the year and early into next. If it keeps working, I'll roll it. And that's what I've got on here, and that is Macro Money for today. As ever, we are here Monday through Thursday, right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm also writing for the News and Insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.